Welcome back. Let's quickly glance across Asia. And as you'd imagine, the color is fairly red across most Asian screens because of that weak handover from Wall Street. Some of the markets, Taiwan's down 1.3, Japan's down almost 1.8, it's almost 2%. And of course, Hong Kong, mainland China, all markets lower. Will we be the outliers? Well, that's not what the implied open is suggesting because we've had a good rally. Market came up to 26,000 just yesterday. So let's see, probably a cautious start. What about individual stocks? Let's straight away get to our team. And they're all standing by with a list of top stocks to watch. Guys, good morning. Vivek, you've had a very busy and buzzing evening tracking some potential block deals that may happen today.
Absolutely right. It's a lot of equity supply that we're expecting to see in the markets today. And yesterday, very close to market close, we had actually intimated our viewers about the fact that there could be a very large block deal that could happen in Emphasis. And along expected lines, last evening, this particular block was launched. We accessed the term sheet and along expected lines, Blackstone, that holds close to 40% stake in the company, will be exiting 9.5% stake via a block deal today. This particular trade will happen at a rate of 2,570 rupees a share, indicating a little over 4% discount to yesterday's close. The total size of the offer is in excess of 4,600 crore, and there's a 6-month lock-in on further sale of shares. Now, 3 other block deals that we will be tracking. Paytm, that is 197. The sellers here are Safe Mauritius, Safe Partners, as well as Elevation Capital. 2% of the total equity, size of the block close to 1,640 crore. Floor price is at a 4% discount to yesterday's close. Here, it's just a 2-month lockup. MQR Pharma, again, a block deal over here. Bain Capital will be exiting, at almost a 7% discount to yesterday's close. 2% of the total equity, close to 500 crore of equity is expected to change hands. Remember, they held close to 6.3% stake at the end of Q2. And the last block deal that we're anticipating today is Zinka Logistics or Blackbuck. Here, the promoter entities are exiting stake, almost a 2% discount. Total offer size up to 2% of total equity, and it's just a 240 crore worth of equity that has changed hands, and it's a 1-year lock-in that the promoters have for further sale of shares.
2% offer, 2% discount. Vivek, thanks very much for that. So blocks and more blocks, right? We're going to focus on autos for a bit as well. So Darshan is here with news flow. So morning.
Good morning, Prashant. So auto companies can be in focus again because now in the Gazette, the government has issued a notification. It has taken a steep hike that basically is for the vehicle certificate that for renewal, the fitness test basically it's being called. And fitness test is, what is fitness test? It basically tells you if a vehicle is safe and meets government emission norms to drive. Now, government had issued a draft on 27th of August. Now government has notified those rules and it has taken a steep hike. For heavy vehicles, the price goes up as much as rupees 25,000. And basically, it's aimed at discouraging people from using aging vehicles. So for motorcycle, if it is older than 10 years, but it's less than 15 years, charges would be just rupees 200. But if it is older than 20 years, charges will increase to rupees 2,000. For 3-wheelers, if it is older than 20 years, charges will increase to 7,000, and if it is older than 10 years, charges would be again 200. For LMV also, if it is older than 20 years, charges will increase to as high as 15,000, and if it is medium goods vehicles, charges would be 20,000, and if it is heavy goods vehicles and older than 20 years, charges would be as high as 25,000. So it can be taken positively for auto companies.
Okay, all right. Thanks a lot for that, sir. Well, going back to Vivek, he's here to tell us about JSW Infra. Vivek?
Well, that's right. It's a very interesting deal that JSW Infra subsidiary has inked. So the company subsidiary JSW Overseas has entered into a share subscription and purchase agreement. Now, this is with an Omani-based company. Now, this particular company is known as Minerals Development Oman, as well as South Minerals Port Company. So what is JSW's subsidiary going to do? They're going to subscribe to 51% of total equity of a port SVB that they will be forming. This port SVB will develop, own, maintain, as well as operate close to 27 million tons per annum of capacity. That is what they're anticipating from this particular port. The total capex is at close to 3,700 crore, close to $420 million. JSW Infra currently has close to 170 million tons per annum of capacity. This particular deal will take it close to 200 million tons per annum.
Okay, all right, Vivek, got it. We'll keep it on our radar. Let's go across to Upasna. She's also watching out for a bunch of names. Upasna, good morning. Tell us more.
Good morning, Surbi. First up, let me start with Bharti Airtel. The S&P credit rating has revised the credit rating of the company to BBB plus from BBB negative on the back of strong earnings momentum is what they've indicated. And overall, it maintains positive outlook for the company. Next up is PNB Housing Finance. India Rating has upgraded rating of companies, NCDs and bank loans to AA plus from AAA with a stable outlook. Next up is Sun Pharma. It has announced a second brand partnership with AstraZeneca to market and distribute the drug named sodium zirconium cyclosilicate in India, which is mainly used to treat hyperkalemia in adults, is what the company has said. And lastly, we are looking at DCX system as well on the back of order win. The company has received total orders worth 22.8 crores, out of which order worth 16.4 crore is for manufacture and supply of cable and wire harnesses. And also, company's wholly owned subsidiary, that is Renal Advanced Systems, has received orders worth nearly about 6 crores for manufacture and supply of printed circuit board assemblies. So all in all, we'll be keeping a track of all these stocks on our radar today.
Okay, all right. Got it, Upasana. Thank you very much for the details over there. Let's quickly recap our list of stocks to watch. The ones that have positive news flow are auto names. There's JSW Infra, Bharti Airtel, PNB Housing, Sun Pharma and DCX Systems. Stocks with negative news flow, largely on back of block trades, would be Memphis, Paytm, MQ Pharma and Blackbuck. Okay, quick break on that note. When we come back on the other side, we'll have the management of MGL to talk about this big CNG disruption that's gripped the city of Mumbai. There's pipeline damage. So when is the restoration going to happen? We'll discuss that and the business in just a bit. Welcome back. Okay, so like we've been telling you, the picture across Asia is, a little tentative. We've got markets slipping and sliding. Cuts are as much as 2% in Japan. Hong Kong is down about 1%, and all of this, blame it on the AI trade. NVIDIA's numbers, by the way, come out at the end of trade on Monday. So basically, we get our NVIDIA reaction on Thursday. Still a couple of days away, but the market's getting a little nervous and taking some money off the table. So that's the big global equity headline of the morning. The implied open is suggesting that we are not going to buck this trend, at least at the start. We'll probably start 60, 70 points lower. Now it's 73 points. And you also have to take it in context with the run-up that the Indian market has had from the lows of 25,300 thereabout, all the way rallying up to 26,000. So it's been a decent run-up, and today probably is going to be a cautious start. We'll discuss this with the technical experts, as well as whether this is a day where you buy the dip or you just stay away. We'll talk about that in a while. But for the time being, let's address something that is really impacting the city of Mumbai and commuters across the city, because gas supplies, critical CNG supplies to the city have been disrupted. And Mahanagar Gas is in focus because they are the major CNG supplier to the city. The pipeline from GAIL was damaged on Sunday morning, and there is restoration work underway, but supplies have not been restored just yet. So let's ask the man of the moment, Mr. Ashu Singhal, Managing Director of Mahanagar Gas. Mr. Singhal, thank you so much for joining in. This is a very important issue, not only from a shareholder perspective, but from a city perspective. Can you tell us what exactly led to this disruption? What is the extent of it? And most importantly, by when can you restore gas supplies?
There was some activity going on, and there's actually 3-4 feeder lines which connect MGL network across Mumbai and nearby region. So we have got around 7,500 kilometer network, and it gets feed from various GAIL pipelines. So one of the major feeder line which comes from Uran, and it comes from through RCF complex to our main feeder station at Wadala. So that got damaged on Sunday morning, and therefore our supply to that station was completely stopped. As a measure, we have to immediately start emergency response plan. And in that plan, we have asked our industrial customers to shut down and go to the alternate fuels. And similarly, we have given the first priority to domestic pipe natural gas, and that is remain unaffected all through on Sunday or even today or Monday, Tuesday also. Thereafter, we have got around 390 CNG stations in Mumbai and nearby areas, out of which 230 are operating and 160 have been shut down because of non-availability of gas. So some of the gas we have diverted from other CGS stations through the looping network and redundancy network. So we are trying to have minimum impact on CNG as well, but the priority customers, that is the PNG, is totally unaffected, and the commercial customers are totally unaffected.
Sir, appreciate all your efforts, but I can tell you it's not really minimal impact. It's a huge impact by people who are trying to commute across and get to work and otherwise. Basically, sir, by when do you expect 100% full restoration? Also, can you tell us how much do you sell daily? I mean, as a daily quantum of sale in the city of Mumbai, and how much remains disrupted as of now?
We sell around 4 million gas, 4 MMSCMD, million standard cubic meter per day, and around 2 MMSCMD comes from the Wadala station. So some of it we have diverted from other CGS stations. So around 40% volume loss has happened. And restoration, the pipeline has damaged piece has been isolated. It has been, nitrogen has been purged. Now the cutting is going on. So that spool piece will be removed and a new piece will be added. And after that, nitrogen purging, some radiography testing, etc., and technical things will be done. And it is expected by today noon or afternoon, supply will be starting as normalcy will be restored.
Okay, all right. How much of your total volumes come from the transport department, sir?
Around 7% goes to the transport department, and we have tried to maintain the supply to the transport department, means BEST, MSRTC depots, etc. What has got impacted is some of the CNG stations through daughter booster stations, which is in the main South Mumbai, West Mumbai, and Navi Mumbai and nearby areas. So we're trying to see that whatever best we can do to restore supplies at the normalcy.
Okay, we really hope that those efforts, come to fruition, and we're back to normalcy, hopefully by this afternoon. Just moving on, sir, what are your overall volume growth targets for the current year across different segments?
We expect that last year we grew by 12%. So this year we expect the volume growth to be around in near to double digit, 9 to 10%. And as you mentioned, year on year, we have grown by around 10% H1 versus H1. And in H2, we expect to continue with the same performance. So maybe around 10% growth will be there. Most of it is coming from industrial and commercial, which grew around 24% last year. And this year also it should be around 20% plus. The domestic PNG is around 7%, and the CNG segment is expected to be around 9% or so, 8 to 9%.
Mr. Shingle, hi. Just a quick question on financials. What's the margin guidance for FY26 and currently the breakup of gas sourced, considering APM gas allocations have been reduced?
The margins have come down in Q2, but overall H1 versus H1, again, it was 10 rupees EBITDA per SCM. And we expect margin guidance to be slightly lower than what we have told earlier. Maybe from 8.5 rupees to 9.5 rupees EBITDA per SCM is expected guidance for this year. We have done our portfolio rearrangement, and most of the gas which was come down from APM side, around 35% CNG is getting allocated from APM for CNG segment, and balance is being sourced from different places. And most of the APM which has come down has been renamed as new well gas. So 10% is the slope for APM and 12% is the slope for the new well gas. So we have done our portfolio management, and most of us of this gas we are taking from new well gas, HPHT, or some term contracts are being used to meet this demand.
All right, so since we have you with us, run us through, those capex plans that you've laid out for FY26, and how much do you plan to add in terms of capacity this year?
390 pumps are with MGL, and another 90 pumps are there, 95 pumps are there for Unison. So total 485 pumps are there. We are expecting that around 80 pumps will be added in this kitty. So now the Unison is merged back as an MGL entity. So there are no, earlier it was 100% wholly owned subsidiary. Now it is a single entity as MGL. So we expect around 80 stations to be added, and maybe around 1200 to 1300 crore as the capex layout for this financial year.
Okay, so Unison is done and it's all getting integrated with your business. Any more acquisitions on the cards?
We already have one geography in Karnataka, and balance is not, discussions are going on, but nothing to be declared to the market as of now.
Okay, we'll wait for more details. So thank you very much for joining in. Really appreciate you giving us the full extent of the issue in Mumbai. And good to know that hopefully by afternoon, most of the gas supplies will be restored. That's MGL for the time being. Let's move on to commodities beyond gas as well. Manisha is here with the latest roundup. Manisha, good morning. I hope you're not stuck somewhere, gasless.
Well, not really. Thank God for that. But, the crude oil prices, I'll start with that, and they have continued to see further decline. Well, we have seen prices decline by 2.5% on this week. The markets are looking at more production from OPEC and even non-OPEC that is set to continue to grow. Having said that, the reason that you're not seeing prices decline too much as well is because the U.S. sanctions on Russia majors like Rosneft and Lukoil come in effect on 21st of November. There are export disruptions from recent attacks in Sudan. There's possibility of a U.S. military action in Venezuela. Iran seizure of an oil tanker in Gulf waters last week. So there's plenty happening around when you look at geopolitics that could impact crude oil prices, and markets are keeping an eye on all of these developments. But the other sector really is metals. So whether it's precious metals or base metals, it has all gone down in some profit taking. One, you have the US dollar, which is strengthened. And second, the markets are looking at a weak and a bleak possibility of another rate cut for the month of December. So gold fell 1%. Silver is now trading below $50 an ounce. Zinc is trading at a 2-month low. There is profit taking there. Copper is at a 1-week low. Nickel at a 7-month low. So, well, yes, across commodities, there's some bit of a profit taking that has continued in Asia today.
All right. Thanks very much, Manisha, for that. So that's the commodities picture. Slight profit booking across the board. Parag Thakur is with us, Senior Fund Manager at Fort Capital. Parag, good morning. Great to have you with us here. Thanks for joining in. We'll talk about some of the news flow that we're waking up to this morning. But I wanted to start with asking you about Grow and whether you took a bite, post-listing. opened at 112 and 170 or so, 170, 180 yesterday. What do you make of it? And have you looked at the numbers?
So I think these are all, see, any businesses which become tech enabled has operating leverage, and of course the ROICs are also infinite in some cases. So these businesses get huge premiums, but I'm not happy paying such a high valuations to these businesses, because I have a firm belief that any business cannot sustain growth of more than 30-40% forever. And so you should not pay more than 50-60 times for any particular business, and such high market caps also. For example, is many companies in this business are trading at half of this market cap, and these are age-old companies which we know. So I would say that I would refrain from buying into this momentum, and for that matter, any other tech-enabled businesses.
But is the valuation really so? I mean, that's why I asked you. Have you looked at because I was looking at it, right? 18, and we'll put out that link as well with our research team. So some 1850 crores in profits in FY25, and they're saying they'll grow between 25 and 30%, right? So which is what you also said. So there's earnings visibility. I mean, based on if you just do an Excel projection, should be 3,500 crores of net profits in FY28. So it's about 30 times, right? I mean,
unfortunately, life does not work on Excel sheets.
No, I know that was coming, Parag, but I mean, you got a project, right? I mean, if you're looking at...
So basically, see, we are happy making money in our old regional banks kind of names, which have...
Yeah, no, that's fine. You can participate in what you like, but is valuation... I mean, I heard a lot of general commentary that it's 50 times, 60 times, 70 times. The numbers don't say sort of point to that. That's all I'm saying.
Yeah, that is true. That is true. No, but I'm saying market caps are also very high.
Yeah.
If you compare it with any other traditional broking firms and all, the market caps are also too high. So for this kind of things, so it is much better than the I would say loss-making companies which have come out with IPOs and which are also getting equal or more market caps. It is much better than that. That I should have agreed. But I would say that. We don't feel all this is very sustainable, and that is why we stay away from it. Might be we don't understand them too much. It is a question of circle of competence also. They might be doing well. They might be great businesses. They might keep doing well. But I would say that it is a question of circle of competence also.
One general comment across for all these new listings, right, is that the first 1 month is kind of sometimes a little artificial because there's not too much supply, right? That lock-in, etc. So it's not about growth. It's generally true across the board. So real price discovery, I guess, happens after. I mean, all these lock-ins end, Parag, right?
Yeah, correct. That is also true, and there is a lot of momentum right now. Markets are anything which is tech-enabled actually gets huge premium to the conventional businesses, which also might, by the way, uses technology. But these are purely set up after this technology revolution has come in. So these are getting huge premiums.
By the way, you'll have more to discuss and debate, Prashant, on Friday. Row reports numbers on Friday.
Oh, lovely.
It'll be one of the most eagerly awaited, events of the day. So that's your date to figure out if
but
that...
I think as Parag said, right, these are tech-enabled, right?
Yeah.
Business, it's an extreme... He used the word infinite ROC. I mean, because, you look at the unlisted Zerodha, right? And it's just the same team, the same number of people. You just have to invest in tech. I'm not saying it's a simple business, but the point is you don't have to put more money in to acquire customers. And it's network effect as well. So grow just... I mean, I think that who was pointing out that they've started a slew of businesses apart from broking.
Apart from broking, absolutely.
All that will...
Mutual fund sales, loan against shares, etc. And look, I mean, everybody can get technology, right? And a lot of the incumbents also, the larger, and they come from much larger financial conglomerates, right? It's easy to get technology, but surely something players like Grow and Zerodha have done right to become the largest brokers of the country.
I'll tell you, I was watching this...
Starting way late. I mean, they came in the 2000s, right? Not even later. Post 2010, and we have established.
So I'll give you a global example, something similar. Actually, even more startling. There's a company called Cursor, right? It's now hit $1 billion in annualized revenues. $1 billion. You know how old the company is? 3 years.
Wow.
They've raised money at $29 billion valuation. Guess how many salespeople they have? 3.
This is scary.
So, they were asked, how did you start, right? They said, we just opened a Stripe account. And that's it. I mean,
Power of technology and the power of disruption. It's real. It's very, very real. Okay, on that note, we'll take a break. Lots of other stocks to discuss with Parag as well. And then we'll have our technical experts joining in to talk about how to navigate what's likely to be a soft start today. Back with Sudarshan and Mitesh in just a bit.
Welcome back. You're tuned into Bazaar Morning Call. Well, it's that part of the show when Hormuz joins us to give us those big movers in trade and also those that were packed with volumes. Hormuz, morning.
Morning, Nigel. And while we're talking about grow all through yesterday's session, a new listing has been quietly making a very strong move on the upside, and that is Anand Rathi shares and stockbrokers. The stock has been on a 10-day winning streak now, and in these 10 days, the stock has risen 51%. And even in yesterday's session, the stock was up almost 5%. And in 9 out of those last 10 trading sessions, more than 10 lakh shares have been traded every single day. And in yesterday's session, we had close to 40 lakh shares that were traded for Anand Rathi. The 20-day average is 16.5 lakh shares. And out of those 40 lakh shares, 8.5 lakh shares were marked for delivery. The 20-day average here is only 5 lakh shares. Now, the 10-day winning streak, the average delivery volume during this 10-day period has dropped to around 29% of the total shares traded compared to the earlier trading sessions where the average delivery volume was anywhere between 40 to 42%. So, Anand Rathi on your radar. Of course, you're talking about grow, so we'll take a look at grow as well. And all 4 trading sessions that the stock has traded so far have been in the positive. Another 20% yesterday. Close to 50 lakh shares were traded on Monday. 6.5 lakh shares were marked for delivery. And the delivery percentage, though, barring the listing day, has been on the lower side. Now, on the listing day, 44% of the total shares traded were marked for delivery. But if you take a look at the other 3 sessions, that percentage ranges anywhere between 13% to 18%. So, not significantly higher when it comes to delivery volumes, even though the trading volumes are higher. Narayana Health in yesterday's session, the top gainer on the Nifty 500, the biggest single day gain and volumes on record for the stock. The Friday's volumes were Monday's volumes actually. They were almost a crore and a half shares were traded yesterday. The 20-day average is only 3 lakh shares. It shows the kind of volumes at which the stock was traded. But out of those crore and a half, only 14.5 lakh shares were marked for delivery. The 20-day average here is less than 2 lakh shares. And the stock has delivered positive annual returns every year since 2019. And lastly, 5 Paisa Capital, and that stock moved higher for the second day yesterday. Is a big spike towards the close of trade, 9% on that stock. The volumes yesterday were the highest in over a month, and 15.5 lakh shares traded. The 20-day average is less than 50,000 shares. And on the delivery front as well, 5.5 lakh shares were marked for delivery. Here too, the 20-day average is just around 25,000 shares.
Okay, all right, Hormaz, thank you very much for all of those details. Let's actually get you some updates from a Morgan Stanley note as well. Morgan Stanley is saying that 2026 is likely to be a macro trade in stocks. The brokerage also feels that most risks are likely to come from outside India. So it is here with the details. So fill us in, what is MS saying?
So it's an interesting note from Ridhan Desai of Morgan Stanley, and where he details 2026 outlook. As per him, long-term story is gaining strength with government policy action, and most of the risks that India might face will come from outside, and 2026 is likely to be a macro trade in the stocks. As far as Sensex outlook is concerned for 2026, base case where he finds 50% probability, target is 95,000, implying an upside of almost 12%. Bull case where the probability is of 30%, the target is as high as 107,000, implying an upside up to 26%. And in the bear case where the probability is 20%, target is 76,000, and implying downside of almost 10%. Now talking about the preferred sectors, first one is consumer discretionary. He says urban demand recovery will aid the consumption, and GST cut that government had recently announced augurs well for the sector. Second one is industrials. Robust government capex and pickup in private capex drive overweight on this sector. Financials, rising credit growth and low credit cost will be offset by the compression that these banks might see in NIM, but deregulation that government might take will be positive for these banks. On some of the sectors, he is neutral. First one is consumer staples, because he believes that fundamentals could improve as rural growth in the last few months has seen an improvement. Technology is least exposed to domestic growth, although US recession is a risk for the sector. But AI debate is hurting multiples, but on the earnings front, he is not seeing any downside in the foreseeable future. But some of the least preferred sectors, first one is utilities. He is underweight given lack of cyclicality. Second one is energy. He prefers domestic cyclicals over global cyclicals, and healthcare because he is avoiding defensive sectors. And last one is materials, because he is taking cyclical exposures via industrials. We'll have to see over the next 1 year, it's 76,000 or 107,000 for Sensex.
Okay, all right. So thank you very much for that. That's the Morgan Stanley view on equities. Let's get back to our conversation with Parag Thakkar. Parag, Westlife Food. So Mr. Jatia bought some shares from the market. Not too much, I think just about 8,000 shares. But as far as Q2 goes, the performance was still sluggish. I'm just checking the numbers again. Same-store sales growth still in contraction territory. I think a little over 2% down year on year. What's your sense? Do you like anything in this space, Westlife or otherwise?
No, QSR space, see, after long, I would say 2-3 years of sluggishness might come out of, because overall consumption has picked up after the GST cut in the festive season. So I would say that this is a good sector to watch. Up till now, we have not bought anything. We saw good results from Jubilant Foods, and stock also reacted positively to it. So we will look into this space. It looks interesting. It had offered a long, I would say, 4-5 years ago, everybody was bullish on this thing, but then earnings never came. And so everybody gave up. So this is a good time to look at this space, in my view. And coming back to this Morgan Stanley note, I would agree with two things highlighted over there. One is in India, I don't see any big risk because India's macros were absolutely brilliant. And one big macro factor which everybody forgets is corporate debt to GDP. India's corporate debt to GDP is so low, it is at 56%. And Indian corporates are under leveraged and banking balance sheets are absolutely strong. So apart from current account deficit, fiscal deficit and inflation, these are the two big macro positives for India. And now finally we are seeing a double-digit earning growth coming in. Q2 results were very positive. I would like to highlight some of them. For example, SBI increased its credit growth guidance from now to 12 to 14% with a credit cost of only below 50 bips. So I would say that L&T, for example, the best indicator of private sector capex or capex cycle, L&T is one order of around 1,15,000 crore in Q2, which was highest ever. They are sitting on 6.67 lakh crore order book. Mahindra has increased its tractor volume growth guidance. Escorts has also increased its tractor growth guidance. Reliance has delivered 16% revenue growth in Q2 and Q3 it will accelerate in retail. So I would say that all broad factors which you see, I feel from Indian economy perspective are improving. So the only risk which can come is from outside. Suppose if US market corrects 15-20% due to this AI thing or something else, then of course we will also correct. But I would say that I would agree with two parts. One is banking and industrials will do well. And second is that any risk which can come from global side. On India perspective, I would say that once the trade tariff deal is signed and we get a tariff which is below 20%, I don't see any risk from the Indian perspective.
Okay, all right. Parag, final question before we let you go. The outperforming sector or the comeback stock of this month has been Asian Paints. You know, Nomura, they had turned the corner at the start of the month, and that worked very, very well. In fact, I had the author of that report, Mr. Mihir Shah, who had joined in yesterday on Finding Alpha. And he says there's more to go because the street is still very negative. He believes that the disruption wasn't as big as expected. The healthy competition is likely to continue, but it won't be disruptive. What is your view on Asian Paints as well as Berger Paints? A rank underperforming for the last 2 years. Now it seems competition seems to be evening out a little bit and these guys are making a comeback. Your take?
Yeah, I would agree to that because whatever competition had to do. And this is not a geo kind of business, right? Where you have a fixed expense of spectrum. And so, because ultimately Birla of course will also have to buy same raw material which Asian Paints have to buy, right? So it was my view earlier also that this space cannot be disrupted for long term. It can be disrupted for 1 or 1.5 years. And so we also bought Asian Paints at 2,200. Of course, we booked profits also. But I would say that, and plus we are nearing a fair. So festive season was there. Now wedding season is going to come. So from near-term perspective also and from long-term perspective also, I would agree with that view.
You know, I have more questions, Parag. I'm not sure if we'll have time. I have to take a break, though, for now. So, yeah, we'll take that break. We're going to come back in just a bit. The pre-open session is about 4 minutes away. And we'll have Nilesh Chug of HDFC Securities to shed more light on, of course, the India-US LPG import deal, which was, of course, flagged off by the oil minister yesterday. And, of course, with some technical trading ideas as well. Stay tuned. Okay, welcome back. We've got a minute to go for the pre-open session. Sudarshan Sukhani and Mitesh Thakkar are with us with what they want you to do in terms of trades. Gentlemen, morning, great. Given where we've ended in the overnight queues, what's the trade today?
Yeah, good morning. Well, sometimes we just can't help the outside environment. And we can see the US markets were down, Asia is not very conducive. So we are going to get affected. But that will not change the larger picture. The larger picture is that we are now in an uptrend which should last for the next 1.5, 2 months. So if you have long positions, keep them. Your stops have to be a little wide at 25,700 and just suffer through this small dip that comes about. If you don't have a position, this dip is a buying opportunity.
Buy the dip. That's the call coming in from Sudarshan. Got it. Mitesh, what about you? What would you do? 60, 70 point downtick is what the Gift Nifty was suggesting for the time being. The pre-open is not really aligned. But if you get the dip, what would you do?
Good morning, Nigel. I think, this time I'll avoid it or pass it rather because, multiple times we've kind of gone beyond 26,000 and failed to sustain or build upon that momentum. Maybe, this is an early sign of some kind of consolidation. So a 60-point dip will not excite me. But yeah, if you get closer to about 25,800, that's when I would look for buying opportunities. My belief is that we might be developing a new range broadly between 26,100 to about 25,800, 750 on the downside, and therefore towards the lower end of the range is where I would want to be very keen.
Okay, all right, let's get to stocks then. Mitesh saying he'll stand by buy this time around, but stock-specific action. So Mitesh, let's get your picks first out of the way.
I have a mix of buys and sells. On the buying side is IIFL with a stop at 549 for targets of around 585. I also have a buy on Lodha Developers. It's a conditional buy, so let it get past yesterday's high. 1225 is what I suggest should be a trigger. If it crosses that, buy with a stop at 1209 for targets of 1260. And a couple of names on the selling side. The Emphasis had a breakdown yesterday, so keep a stop at 2710, look for targets of 2640. And Inox Wind, I think post the numbers had a negative reaction, jump in volume was bearish candlestick pattern, so sell with a stop at 150 for targets of 138.
Got it. Inox Wind, got that as well. Thanks for that, Mitesh. Well, Sudarshan, coming across to you, tell us your picks for the day.
Well, it's an all-buy list. The only point is that depending on how the markets open, adjust your stop losses. But SBI Card is a buy with a stop under 870. Jubilant Foods, which had done very well, is a buying opportunity still with a stop under 590. Bharti Airtel is a buying opportunity with a stop under 2070. And Axis Bank is a buy with a stop under 1230.
Okay, all right. Thanks a lot, gentlemen. We'll come back to you all for your 9:10 call. But let's turn our attention to the oil and gas space. Well, India has signed a one-year deal to source liquefied petroleum gas from the United States. 10% of annual LPG imports in 2026 will be from the United States. To analyze this as well as the CNG supply disruption in Mumbai, we're now joined by Nilesh Guge, the analyst institutional equities at HDFC Securities. Hi Nilesh, good morning. Good to see you win. Let's talk about the LPG piece first with regard to the deal that India signed with the United States. What is your initial comments on it and who stands to gain?
Yeah, definitely it's a positive move for, I will say, overall Indian LPG market. It not only gives the stability, but resilience, and it's integrated the entire LPG ecosystem globally. So that's a definitely positive move from the government and the PSU oil marketing companies.
Okay, all right. What do you make of this, supply disruption here in Mumbai? MGL, we just had the management who joined us. They were saying things will get resolved. Your view on it, what are you penciling in terms of volumes? Will you have to, scale it back a little bit? Your take?
Yeah, see, our back of envelope calculation indicates that if supply had been stopped for, let's say, a couple of weeks, then it could be the impact of roughly about 3.5 to 3.8% at top line level. But they restore the supply in just less than a week or maybe just a couple of days, 2 to 3 days. So not much impact on the revenue, just for a couple of days, that's all. And that too restrict to the CNG because they continue supplying this domestic PNG supply.
Right. Got that. Nilesh, do you have a coverage on oil marketing companies?
Yes, sir. Yes.
Okay. And of course, Reliance as well, right? My question is, we're in an environment where it's been actually various shades of it since COVID, that refining capacity has been, they've been, for whatever reasons, has been running, I guess, a little behind. And hence, especially on diesel, etc., cracks are pretty healthy, pretty strong.
Yes.
Is that something you've looked at closely? Standalone refiners have done absolutely fantastically well. Chennai Petro has doubled from its March levels this year. MRPL has done phenomenally well. The more diversified IOC, HP, BP, have done well, but not as well. There's a marketing component as well. First of all, what's your view? Will these high spreads cracks persist? And what's the best way to play them from here?
Yeah, you're right. The pure refiners like MRPL, CPCL in this environment will continue to do good. These cracks, fuel oil cracks are still better. So they will continue to perform better in, let's say, this quarter as well. So MRPL, CPCL, which are pure refiners. As far as oil marketing, where they are losing on some marketing margin because the cracks have moved up while the retail prices are there is no change in retail price. At the same time, they are getting on the refining side. But overall, if you let's look at from net perspective, there is not much gain for the oil marketing companies in this environment. This positive thing is the crude oil. The crude oil prices are remaining in the range of $62 to $64 per barrel. If I compare that with the last year, it was around $85. So that's the comfort that oil marketing companies are enjoying. Also on this LPG front, till 2Q, there was under recovery of close to about 100 rupees. And now in Q3, the under recoveries have come off to about 40 to 50 rupees per cylinder. So that's a positive sign for oil marketing companies. At the same time, government has announced that 30,000 under recovery for last year will be paid to oil marketing companies over the next 12 months, starting this month. So this will strengthen their balance sheet as well. The working capital condition will be good for oil marketing companies.
And on the standalone refiners, you think there's more to go? Because there are various arguments. JRM's moving up, the replacement cost as well is quite high in comparison to what they're trading at, and their balance sheets are pretty okay. Do you think there's more scope?
See, but cracks are still in the healthy position, I will say. So their earnings this quarter also will be very good. So still, I mean 1.5 months it's left, but still till today, the margins are much better compared to last quarter, compared to last year. So there is still some steam left in this MRPL CPCL.
That the market already knows. The point is, stocks will try to price where things will be 6 months down the line. Is there any way to tell?
See, overall, in my belief, in the long run, these cracks may not sustain at such a high level. If you take the view of, let's say, 1.5 year down the line, there will be some pressure on particularly diesel cracks and gasoline cracks. But momentum is in their favor as of now.
Okay, all right, Nilesh, we'll leave it there. Good speaking with you. Thank you very much for joining us. And good to get that perspective from you. Well, look at that. Is that Grow is up another 6%? I think 185. Well, let's have the Grow stock in the pre-open session. That was the first question to Parag. And look at that. I mean, 10 rupees, 10.5 rupees once again. So it's just a blockbuster move since listing. Sometimes, I mean, they're right there and they do so well. Well, I think we just want to look at the pre-open and where they've ended as well, and then we can kind of sort of look at some of the other stuff. So yeah, I mean, 8 points, 26,021. The Nifty Bank should come up, and we'll look at that as well. What we'll do is shine the spotlight, of course, on Max Health in a bit with Ekta, where numbers came through, and we have the management with us as well. And we look at blocks. I mean, some have happened, and I think some are yet to happen. So we'll just revisit some of this stuff which is coming through. So 7,000 crores worth of blocks today is the lineup. Let's get those calls out of the way. 9-10 calls. Sudarshan and Smitesh are with us. Sudarshan, what do you have?
It's Jubilant Foods, buy with a stop under 590.
Mitesh?
Yeah, I'll go with the buy on IIFL. I think good continuation patterns over there. So buy IIFL. And as I said, look for targets of around 585.
Okay, all right. Jubilant Food and IIFL are the two calls coming through. Okay, as promised, let's revisit some of the blocks, right? And the status as of now. Vivek, take it away.
Well, that's right. So we were targeting 4 blocks that we had access to, out of which 2 are already out of the way. In fact, one was a bit of a surprise. ITC also saw a large block deal, and Zinka Logistics, that's Blackbuck, that particular block deal too has transpired. Now, we are still awaiting 3 block deals, possibly closer to market open is when, or just post market open is when these could happen. Emphasis, remember yesterday we told you that large trade would happen along expected lines. You're looking at the private equity Blackstone that holds 40% stake, looking to exit close to 9.5% stake at 2,570, a little over 4% discount. Offer size or the size of the block will be in excess of 4,600 crore. Paytm, that's 197. Again, over here, SEF partners as well as Elevation Capital are looking to sell close to 2% of total equity at a 4% discount. This particular block size is again a little over 1,600 crore. And lastly, Emcure Pharma. Again, here it's a private equity, Bain Capital, that is looking to exit close to 2% of total equity at a 7% discount to yesterday's close. The size of this particular block will be close to 500 crore. So I'm assuming there will be a little bit of pressure on all of these stocks, given the kind of equity supply that they would be seeing.
Okay, all right, Vivek, thank you very much. So Emcure is going to be on our radar for sure. Let's go back to Ekta now for some details on Max Health. Ekta.
Well, yes, there are some brokerages which have written on Max Health. So, for example, UBS has a buy with a target price of 1550. They've said that the brownfield capacity addition is going to drive growth and earnings. Q2 revenue and EBITDA growth of around 21% and 23% is what they reported. A couple of details from the conference call. The management indicated that the issues related to cashless service for insurance patients has been resolved, and mentioned that there was no or only limited impact as patients shifted from insurance to cash in such instances. Jefferies has a buy and a target price of 1,400. According to them, the September quarter was a beat led by higher volume. EBITDA was in line and profit was boosted by a one-off. Adjusted PAT was also in line. The CGHS revision, in fact, adds 5% to the FY 27-28 EBITDA, and new beds will be operationalized in phases, thereby limiting the negative impact on margins.
Absolutely. Thanks very much for that. Stocks at about 1,141. Mitesh, I think, is still with us. Mitesh, any thoughts on this one? Max?
Max Financial is something which I have not tracked regularly, but last week it made a fresh high and then gave a pullback. So as long as it's above 1650, I think is good, and I think it should not only clear the recent highs of 1720, but head towards 1800. So in that sense, a positive view over here.
Okay, that's fine. Max, view on Max Financial, where you think you looked at the charts. Just one more. The PSU bank space was up about 1% yesterday. Mitesh, are there trades? Do you have longs there in that space?
No, I think not yet, Prashant. I think, Bank of Baroda, Canara Bank were calls sometime back. Now to buy them after a big rally, I think is slightly tricky. Even though BOB, I think I had a call yesterday because it came down after about 7-8 days of pullback to the gap support area. But a positional call now, I think, will be very late.
Just one more name, transformers and rectifiers, right? So big damage on charts and now recovery for the last 2-3 days. Any view here?
No, I've not been tracking the stock, sorry.
Okay, all right. Thanks very much, Mitesh. We'll chat again. Appreciate it here on CNBC-TV18. Well, I think let's just quickly take a look at the, I think it's just a couple of seconds to go for the market open. As always, we will look at the indices. We'll go down and look at individual stocks, etc. Because there is enough and more buzzing, as I was saying. Almost feels like there's perhaps, at least in lots of segments of the market, there's a big bull market going. It doesn't show up on the indices in a meaningful way. Although indices have been making new highs, it's not that indices are lagging behind, far off highs. But, I mean, the momentum in many of the stocks across many segments is a lot more as compared to the headline indices. 26,021, 26,100 basically is the upper end of the range. The Nifty Bank, of course, it's a rising channel, which we've been highlighting. What do we have? 55 lower on the Sensex, 40 lower on the Nifty. So, you know, it's kind of a small reaction on the downside this morning after last night's sell-off. Mid-cap index is flat. The small-cap index will come up on your screen. And I think there as well, we'll have the rates on your screen. So 20 points, so nothing at all. It's a very, very quiet start. A bit more pronounced now, 0.25% on the Nifty. 25,955 is where the index is starting at. The Nifty 50 heat map gives you a quick sense of where stocks are opening, and then we'll get down to it. 40 odd names are lower, and about 9 or 10 stocks are higher right now. Tata Steel, Bajaj Finance, Tech Mahindra, etc. on one end. Max, Healthcare, Eternal, JSW amongst a few winners to begin today's session. 70 points now on the Nifty on the downside. And of course, all these blocks, etc., which we will point out and highlight in terms of individual names. Surabhi.
Yeah, absolutely. On the Nifty, I mean, there are no major huge polarized moves either up or down. It's just an overall sense of profit taking that you're getting. Some of the global facing sectors and names, for instance, metals, there's money coming off there. Hindalco and Tata Steel are your two biggest losers on the Nifty right now, down about 1% each. Some selling in financials and in technology, the two parts of the market that have done very well in the recent past. So Bajaj Finance 1% lower, Bajaj Finserv 1% lower, HCL Tech 0.5% lower, Infosys 0.5% lower, Reliance also is starting 0.5% down as we get into the opening trades right now. Some of the auto stocks, they were quite revved up last afternoon, but again, the color is red today. So names would include the likes of Mahindra and Mahindra to start off with. Even Maruti is down about 0.7%. L&T is lower by about 0.5%. So it's overall sense of profit taking is what we're seeing. On the upside, not too many names to count right now. Max Healthcare. And I'll watch out for the Bank Nifty because it's showing so much momentum and strength. So if this is to be a buy the dip, then will the financials get bought first? And there are some signs of that already. Axis Bank, HDFC Bank, they're in the positive territory. SBI Life is exactly at the flat line. ICICI Bank is just about 0.25% lower. So let's see. Financial is a big watch point for me. Nigel?
Well, that's right. And just take a look at the capital market plays. Grow is growing yet again. Yesterday, it hit a 1 lakh crore market capitalization, which was a feat in itself. Today, it's at 1.2 lakh crore in terms of market capitalization. Yes, there will be a limited float that's playing out there. That could be one of the reasons. But the stock, from around $100 just last week, what a 1 week of listing. It's moved to around 190 rupees. Big move is what we're seeing on that particular name. Giving it company on the upside is another, newly listed company, which is WeWork. That stock, in fact, is moving on good volumes. That is well up, close to around 5.5%. Fairchem Organics, that's a stock that doesn't have very large volumes, only 50,000-60,000 shares traded out there. But that, for some reason, is coming up on the sheet that it's up close to around 13%. So Fairchem Organics is another one that's moved up and about in today's trading session. Westlife, promoter chipping in very, very small quantum out there. That stock, in fact, is up close to around 5% as we speak. So good up move is what we're seeing on that particular name. And pull up a couple of other names as well. RateGain, there was some promoter buying out there, 1.5 lakh shares. I'm not sure whether or not the stock is, gaining out there. The last 1 month, it's already up close to around 11%. RateGain is another one that could come up for you on the screen, very, very mildly higher. And a few other names. Keynes Technologies will be having the management very, very shortly who will be joining in. For the time being, the stock is down close to around 3%. And you have Blackbuck. There was that large trade that got out of the way in pre-open. That stock is continuing its upward journey. And Paytm, as you can see to the bottom of your screen, post the clearing out of the large trade, that one as well has seen a good recovery from the lows of the day. Also keep an eye out on Tilaknagar Industries. I can see some large volumes out there. The stock has seen a fairly decent correction in the last few days. That's pulled back a little bit. On the NSE, the volumes are far higher, coming up as one of the top volume movers out there.
Well, there is enough and more action, right? I mean, across the board, which is coming through. Market breadth is negative. About 1,450 stocks are lower and about 900 stocks are higher. But as always the case, there is enough and more activity on the upside with volumes, which is, I think, the case today as well. Piramal Finance is up 5%. So it continues to move from strength to strength. Listing was, I think, on the 7th of November. And just look at where it is now, right? 1260 to 1640 now. Piramal Finance moved up very, very strongly. There is Pine Labs, which is up 2.5%. You got WeWork. I think there is a Jeffries initiation, 5% on WeWork, 640. This 5 Paisa, which is up 11%, 350. It's coming up with very large volumes for this point in the day. GMR Power had a very large move yesterday, ended about 7% higher. Stock's at about 131 right now this morning. Aster DM is coming up with 3.33% gain right now. Westlife, Jubilant Food, of course, saw that big move yesterday, 4% on Westlife. That's McDonald's, 565. And I can go down and look at more names, but this is the bulk of where there is volume as we start today's trading session. You've got these silver ETFs, etc., which are starting lower this morning. So keep an eye out on some of these names. And more stuff on the downside. There's some stuff which is opening up with volume. Lenskart is down about 2% this morning at about 422. Sirma is down about 1.25%. Transformers rectifies, big recovery from the lows. It's down about 2%. And so on and so forth. Gautam Shah is founder, Goldilocks Global Research. Gautam, great to have you with us here. Good morning. Thanks very much for joining us. New highs, I guess, across indices. I just want to start with the Nifty Bank. It's almost funny because, a viewer wrote in saying, well, when you start asking about markets and what will do well, just preface your question by saying that, please tell me what will do well. Don't ask and exclude financials because financial seems to be consensus out there. So वो तो ठीक है, बाकी बताइए. But so I thought I'll start with you and how you think about it on financials, Nifty Bank, and the structure there. PSUs, privates, go on.
Good morning, Prashant. Banking might be consensus, but you can't be complacent. The reason being it's such a big heavyweight for the Nifty and the Bank Nifty that if banks don't do well, our markets go nowhere. And I think we've seen this over the last few years. And I'm liking the way the Bank Nifty has shaped up beautifully in the recent past. Just a couple of months back, it was languishing at the lows and people were questioning banks because of the positioning of the economy, and then the GST measures kicked in and people started to believe that things are looking better. So if banks are a reflection of the economy, which we want to believe, then I think it's a good place to be in. And I think the chart setup has been phenomenal. The fact that the Bank Nifty has led this entire market move and getting past that 58,500 resistance number in the last couple of days, I think is a bigger positive. So I'm tempted to believe that the Bank Nifty is moving towards that psychological number of 60,000 in the near term. And over the medium term, you could get a 67,000. So there is still about 10-12% upside for the Bank Nifty. And if that were to happen, then the Nifty and the overall market is going to be safe. But within the banks, I think in our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher.
Okay, so sounding optimistic, and that's how you've been for a while, Gautam. Good to have you in. So within financials, let's try and break this down, right? Because it's a very large universe. And there's so much going on. There are all these deals that the tier 2 banks are now getting a huge surge of capital, right? Foreign capital's flowing in. So now, prioritize it for us. Mid-sized banks, large blue chip names. Should you look at capital market plays? Because a lot of these stocks have come back despite all the regulatory back and forth. Should you look at insurers? Just, drop a waterfall for us, so to speak.
See, I would now stay away from mid-sized banks because I think they've had a phenomenal run. I think we are behind the curve. We are no more ahead of the curve. Money has already flown in. We've already seen a massive trend for many of these banks in the last few months. So entering them at these levels might not be ideal. But then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my picking order: PSU banks, NBFCs, and housing finance companies. The typical HDFC Bank and Kotak and ICICI, they will do well, no recommendation. But then, as I said, they're just going to mirror Nifty returns and would not do anything special.
Okay, sorry. So your order of preference is PSU banks, housing finance, and what else did you say?
NBFCs.
NBFCs. Within NBFCs, I have to ask you about gold financiers, right? Look, what is going on? I mean, what did Muthoot do that day when the results came out? 10% in surging. So we got your order. It's PSU banks and it's housing finance companies. Within NBFCs, are there any specific pockets, and where do these gold financiers fit in?
No, I think we have become neutral on gold and silver. We believe that these are good levels for profit booking. Gold and these gold financing companies have typically been a proxy trade to gold and silver in the last 1.5 years. I think it's already played out. These are good levels to indulge in profit booking. I know there is a little bit of madness on the screen, but that's how tops are made. That's how stocks become overbought. I don't think the trade is there. I think this market is moving to other pockets. I mean, if you look at metals, the comeback in capital goods, comeback in engineering and industrial stocks, slight comeback in pharma. I think these are some pockets that we like. And overall on the Nifty, I think we continue to be quite positive as well.
Okay, all right. Hi, Gautam. Good to hear your thoughts. I remember you telling us that by January, you probably could see the Nifty taking aim at around 27,000 odd. But I think for the year end, you had a target of around 26,700. So let's revise that number. Nifty, the small cap index, the portfolios are not feeling like the markets are on their way to fresh all-time highs. The small cap index is facing resistance. I think the level you were mentioning is around 20,000 odd. While the mid cap, the target you had set earlier, you said once mid cap index gets past that 60,000 odd, it could look for more. So tell us the targets both on the Nifty as well as on the small cap index.
Well, thank you for revising the numbers. I think you were spot on there. We continue to be quite positive. I think 26,100 is really the line in the sand. The market is trying its best to get past this number. We were dealing with a lot of negatives a couple of months back, but I think as we speak now, the news flow from US is better. The AI trade seems to be reversing. Domestic money continues to be strong. There is definitely lower FI selling. People believe that the GST measures will kick in, and we are in a seasonally positive period. And the earnings season has gone off relatively well. Given all of these factors, I do believe that the market is at the perfect platform to confirm that breakout above 26,100. And once that gets confirmed, we are looking at 26,700, possibly this year itself, and thereafter 27,500. But I still believe that the bigger trade is in the mid caps and the small caps. As we speak, the mid cap index is at lifetime highs. The small cap index could take a move towards 20,000. So I think one big wave of strength in the mid caps and small caps could be coming over the next 3 to 6 months, while the Nifty does well but does nothing special.
Okay, all right. And the other one you had spotted out the last time around was the big boy. When the team requires the big boys to play, you turn to the largest one on the index, Reliance Industries. I recall you saying that was good for more. It seems to have got its act together. Now it's just, I think, 2% away from the 52-week high. How is that looking on the charts? Will that be one of the leaders if we need to, move towards the 27,000 odd mark?
I think the leader will still be the banking and the overall financial space, but I think it will be very well supported by the energy space led by Reliance. I've liked the way it has shown relative strength in the recent past. It's a stock that has not done so well in the last 1 year, but I think the signals are there to suggest that even it could move to lifetime highs and beyond. And not just Reliance, the entire energy index seems to be on the cusp of a major breakout. And if that were to happen, I think a 15% move on that index is likely. So IT, we remain negative. So I don't think technology is going to do anything special, because I think that's a multi-month underperformance that IT will go through and is still going through. But Reliance and the entire banking space will help this entire market higher.
And you briefly mentioned the metal index as well. And I recall, a couple of times ago, I think maybe in September, you said the metal index is good for a big melt up. I think you were talking about 20% up out there. Actually, it's done very, very well from that September chart that we had. From ballpark 9,000, we're holding at around 10,500. So we've done 15% of the 20% you're talking about. And with metals, we know it's about momentum, not so much about valuations. Where's it headed from here?
I just had a call with a couple of institutional investors a couple of days back, and the question was, how can you build a technical case for metals when fundamentally we are not in a position to join the dots, which I think is a fair argument. But maybe market knows something that we do not know, and the news flow will come out at some point of time going forward. But clearly, base metals, I think, is a very big trend. I mean, look at copper, zinc, aluminum. I think some of these base metal charts are excellent. So if you want to believe that metal stocks in India will be a proxy to that trend, weekend, I think that could be one explanation. But the chart setup is phenomenal. I'm looking at another 15% upside from here. Our working target for the NSE Metals Index is about 12,000. I think we will get there gradually. And I think it's going to still surprise a lot of market participants because everybody is focusing on other sectors while metal stocks, I mean, look at the top names. They're either trading at lifetime highs or still very, very strong.
Just one maybe risk factor, Gautam, is have you looked at US charts, etc., all okay? Or you think there's a, I had this chat with a completely fundamental investor, but he was pointing out, Naren, that the risk comes from US. If US falls 15-20%, which is no one's case right now, but you've got to look at outliers in that sense. I mean, no one will be spared. But technically, NASDAQ, Russell, Dow, etc., have you looked at those?
You know, Prashant, for the last couple of years, people as market participants have been saying that there is a possibility of a 15-20% drop for the US, and it just keeps moving higher. That's been the case for a year and a half, and we've had massive uptrends. In fact, we turned bearish on the US a month back in many of our recent reports. But while we were analyzing US, and when we looked at India, we felt that the correlation is not there. And I think a great example is the last 2 weeks, because we've had a sizable correction in the NASDAQ, the S&P, and the Dow, but the Indian market are still around levels of 26,000 because, this correlation we've talked out over the years. If you actually divide the Nifty by the NASDAQ, we are at a long-term support. So I'm tempted to believe that if the US markets were to see a plain vanilla correction, which is typically 5-7%, which I think will play out, I don't think Indian markets will get impacted. And as some analysts have been talking about, AI trade reversing is great for India. I would be in that same boat. And I do believe that money will start flowing into emerging markets, including India, a lot more. Any which way, I'm firmly of the view that China is the next big opportunity for the next 18 months. I've maintained that. So China will be the poster boy market going forward. But India, I don't think will get impacted because of US weakness.
And for your clients at Goldilocks, how are you advising them to get exposure to China? I mean, through funds?
I think there are some ETFs through which you can take, exposure. There are limited number of funds. I remember a couple of years back, there were limited funds in gold and silver as well, but they all came in and, people participated. So I think China opportunity is limited. I'm sure it'll get better as the price action gets better.
Okay. All right. Gautam, thank you so much for all that perspective, local as well as global. Quite helpful. And we look forward to the next conversation. You have a good rest of the day. Well, let's move on to our next corporate conversation. And the company we're putting the spotlight now on is Keynes. The company had a pretty steady quarter. In fact, the numbers look very, very good, if you just look at them optically, because the revenue growth was 58%. Though some will argue on the street it was a tad shy of really elevated expectations. The company also saw solid margin expansion, and the order book has seen a year-on-year growth of nearly 50%. Mr. Jairam Sampath, CFO of Keynes Technology, is with us. Mr. Sampath, thanks for joining in. So it's all guns blazing, right? Your top line is growing at nearly 60%. You've had margin expansion. Your order book is swelling. And I think in the call, you guided for better working capital cycle and higher operating cash flows going forward. So there's just, so much going on. Before we talk about the base business, I actually want to come to your new businesses that the street has been very excited about, because they're all now, chugging along. There's the OSAT facility, where apparently you've already tied up 60% of that capacity with the, in terms of orders. And then there is PCB. And everyone's so excited about these printed circuit boards, right? Just the other day, we heard Amber announcing an acquisition. There is obviously Sirma that's setting up this huge capacity in Andhra Pradesh. So let's start with the newer businesses first in terms of what their contribution is going to be as we get into next year, and how's the ramp up shaping up, OSAT and PCB.
Sure. A very good morning to you and all the viewers. I think you got it right. I think the existing businesses are doing well. Like I've said before, these are all businesses which work over the long term, in the sense that order books typically span more than 1.5 years or so. As far as new business is concerned, we were quite lucky that our OSAT business, we were the first in the country to ship out assembled wafers, that is integrated circuits. And this was a 5 wafer module, which we shipped out for one of our clients. And you're right, a bulk portion of the first phase of capacity has been already tied up. And there are 3 major clients, and each of them potentially can tie up more than what we've offered them yet. So from that perspective, it's doing well, and I think our main plant is also getting ready. And by the end of the year, the pilot plant and main plant both will be functioning in Sanand. As far as the PC board is concerned,
before that, sir, Mr. Sampath, before we talk PCBs, now that the plants are getting commissioned and 60% of your capacity is tied up, what are we talking in terms of revenue accretion? Say maybe, I'm not sure how much you'll book in the second half this year, if at all, but if we talk full year basis, FY27, how much revenue will you start getting from OSAT?
See, I wouldn't be surprised if we exceed about 1,000 crores in OSAT in FY27. Though earlier projections were about 1,500 crores in FY28 out of the $1 billion that we're talking about. So in terms of Indian rupee, I think next year will probably come somewhere near or even exceed about 1,000 crores or so. And also there'll be other clients addition, which will be in the advanced packaging area too. So right now we've got 3 clients in the modules area. One of them is power modules, the other one is MEMS modules of different kinds, and the third is also another power module. They're all large companies, and once we get approvals from all of these, one of them we have got, another 2 we have to get. Once we get approvals, I think we can probably look forward to even bigger businesses coming in.
Okay, all right.
Yeah, about 1,000 crores is something that you can probably look at. Yeah.
1,000 crores in FY27, right?
Yes.
And this business will give you what sort of a margin? Obviously, as you grow and full capacities come on, then operating leverage kicks in. But on 1,000 crore of revenue, this will work at what kind of a margin?
This will be margin accretive to our existing business. I'd leave it at that. Maybe it will be significantly higher than the existing businesses.
All right. Got it. Hi, Mr. Sampath. Good morning. Good to see you in. And that $1 billion revenue target by when?
FY28 was what we had committed. Probably early in FY28 and 12-month running basis will probably exceed that.
Got it. So you have your target set in mind for the next few years. But let's talk about the near term, FY26. First half of the year, you've done well, actually. You've grown by close to around 47%. However, for the year, you're guiding for around 60% growth. So part of the street believes you're being a little too aggressive. And the second half of the year will require a very, very good, number to get to that. You'll have to grow by, I think, roughly around 68, 69% in the second half of the year on a year-on-year basis. You're sticking to that 60% revenue growth for the year, and also give us a margin band, because what was positive in the past quarter was your margins expanded, and it looked much better than competition as well. Product mix, operating leverage played out. So what is the rough range?
Yeah. So whenever we give kind of an estimate or a guidance or a target publicly, it's based on a slightly longish term perspective. It's not just based on what happened last quarter or what's going to happen next quarter. That perspective, I think we can hold the guidance for this year, whatever we have given. That kind of growth is there in the order book for sure. Unless there are some major issues in the marketplace which are external to the company's or industry environment, I think we are set to achieve those numbers. In terms of margins, I think good news is that it's looking up a little bit because of the mix of different businesses that we get. So we are fortunate that in the order book as well as in the actual businesses in the first half too, we have had a margin improvement. And I think this will sustain in the near term, maybe a few years or so. And next year we get the newer businesses coming in. So they also are, from the perspective of margins, they are higher. Of course, we are always concerned about the quality of business. It's not just the margins, but also the technology that we have to employ to do it.
So, Mr. Sampath, 16 to 17% margin, you can maintain it, right, in this range for this year? And then
around 16% is what I would say for the year end.
Okay.
And we'll see. By third quarter, it will be up.
Just one more question, sir. At the start of trade, there were a lot of large trades that took place on your counter. Are you aware of who were the participants, who were there in the large trade? I'm getting some feedback from a couple of desks, but I just wanted to know whether or not you're aware of it. Who were the participants?
No. We see what happens in the marketplace. We are not aware of it, and we also don't bother too much about it because, see, our job is to make sure that the company's performance and the customers are catered to and so on. The remaining thing, what happens in the marketplace, is something which, frankly speaking, is out of our control. And we are also not aware of anything that seems to be happening.
Yes.
So
people will do what they have to do. We do what we have to do. That is outperform the expectations.
Now, just clarifying, sir, since we had you on air and since the stock was down and the volumes are big, just want to know whether or not you were aware of it. As you're saying, market does a thing of its own. You focus on business.
Sure.
Okay, well, I think we'll talk about the PCB thing in a later conversation. I got to it, but thank you very much for joining us. Appreciate it very much here on CNBC TV18. Well, I think we want to talk about Max Healthcare, which is the next management of the program. They reported numbers. Profits have been aided by favorable tax impact of 150 crores. The company says cash flow was weak due to delayed institutional receivables. We are now joined by Abhay Soi, Chairman and Managing Director at Max Healthcare. Abhay, good morning. Great to have you with us here. Appreciate it. Prashant this side. So just briefly, if you can characterize what you saw in the quarter, how is third quarter panning out in terms of basic RPOP, occupancies? If you can give us the status so far this quarter, and of course the environment for the second quarter for which you've reported, and specifically with regards to the CGHS rate revision, what is it expected to do to your revenues? What can it do to margins as well? Go on.
I think last quarter was this year we haven't had too many seasonal patients, so last quarter was impacted negatively by that. Typically, you have a higher occupancy. So Q2 this year versus last year, we had a huge amount of dengue patients and so on. But this year seems to be that monsoons have graduated straight away to winter, and therefore you did not have the seasonal sort of variants of diseases which came through. Having said that, in spite of that, we've had a 21% growth of top line, 23% growth of EBITDA, and close to 60% growth of profit after tax. Owing to largely, like you rightly said, about 149 crores of one-time benefit due to the merger on PAT. Otherwise, the increase was about 16%, which is again healthy as far as we are concerned, given the fact that it was a low occupancy quarter compared to quarters previously. As well as the fact that coming into the year, we've had early Diwali into this quarter. We had early Diwali in October. And on the flip side, we've had the CGHS impact, like you rightly sort of pointed out. CGHS should give us, when it comes through entirely, because certain race, categories of super specialty have yet to be sort of streamlined in the government's portal. But once it comes through, we are expecting it, the process to be completed any day. This should give us a fillip of over 200 crores towards the top line, and almost entirely all of it should flow to EBITDA as well.
200 crores, FY27 revenues, and almost full pass through into margins as well.
Yes, about 90% of it, 85 to 90% of it should pass through to margins.
Abhay, two questions. I think international patient growth has been pretty strong. So it's now about 9% of your business. So if you can comment whether that is picking up and that momentum will continue. And second, we broke the story. It's a few weeks old now that the government actually has been part of negotiations between insurers and hospitals. I mean, the end aim is to actually, lower the cost of healthcare for consumers, for patients. And with regards to some hospital chains, it's been agreed that treatment, there won't be any rate increases as far as treatment costs are concerned for 2026. Could you confirm that for us from Max's perspective?
I've yet to hear of any hospital or anywhere where there's been any arrangement that there will be no increase in prices for 2026 or any year for that matter. You asked two questions. One is with respect to international medical tourism. And the second is with respect to any intervention or any sort of capping or implicit tacit understanding that prices will not be increased. I think let's take a step back. Let's look at the hospital sector. And let's remove one fallacy particularly with respect to medical inflation in India. I keep hearing of all sorts of sort of numbers being tommed around. that medical inflation in India is 13%, is 15%, and whatever else it is. The fact of the matter is that the medical inflation in India is not more than 2 to 3%, and it has been that historically. And now, why am I saying this? I mean, you're aware that the average revenue per occupied bed, okay, for all listed players, okay, has typically hovered anything year on year, has hovered anything around 7 to 8%. If your average revenue per occupied bed is not in excess of 7 to 8%, inflation certainly is a component of that. It cannot exceed that. This 7 to 8%, like you mentioned earlier, also has a component of international business, which has been growing by 25 to 30%. It has a component of oncology or cancer business, which is growing at 25%. It has a component of robotics, which is growing at 35 to 40%. All this is real growth, immunotherapy drugs, and new sort of innovations which come into the market. So if I remove all of these, you come down to medical inflation. Medical inflation typically would mean for the same service, for the same procedure, what would the inflation or the price change be? You can't change the basket, right? I mean, if you look at the same basket of procedures, the price increase is not more than 2 to 3%. The healthcare sector, even if you look at the top, 5-7 players within the healthcare sector, operating at a 10 to 12% net profit margin. When you look at a 10 to 12% of net profit margin, what it also includes is that the investments that you make in technology with that, all the new beds that you're setting up, which is so required in the next decade for the aspirational India, because you're just not going to have the number of beds 10 years later.
No, so Abhay, point taken. I think so. You're saying 2 to 3% is the medical inflation, and has been that historically. So for the so to that question, you're saying absolutely no. There's been no discussion, nothing tacit, otherwise implicit, explicit, nothing, right? In terms of capping, I'm just
not at all. Not
nothing.
at all.
Nothing at all.
Okay, and so to that extent, and we had a similar conversation with Ms. Sunita Reddy as well, just to understand if there is any agreement in terms of not revising prices or revising within a certain band. You're saying none of that sort, nothing of that sort. So looking at prevailing trends, what can patients expect? I mean, what would be your definition of reasonable medical inflation over the next, say, year or two? What sort of a price appreciation? Which also brings me to the margin question, because you've had, decent margin expansion as well. So would the margins at, say, 26% thereabouts be sustainable, or could they look even better?
Look, you're mixing two things over here. First and foremost, medical inflation, and you don't revise prices of healthcare on a monthly basis. You typically do it on an annual basis, unless there's been a huge sort of increase in minimum wages or some sort of cost impact, which is sudden, that you would do it perhaps mid-year. But typically, and that would be 30th of September. Otherwise, you would wait for the end of the year. And historically, that's the way it sort of happened. You've never seen hospitals revising.
That's what I'm asking, Abhay. I mean, because as we step into 26 on an annual basis, what sort of an increase, across industry, or if you can talk to us about yourself, what could we be potentially looking at?
Would be the same as it has historically been, which is 2 to 3%. Your salaries go up by 7%. You need to push that through. You will push it through, and your fixed cost is about typically 1/3 of your revenue. The fixed cost goes up by 6 to 7%. And in order to absorb that fixed cost, you have to push it through increase in prices by 2 to 3%. Historically, that's been the case, and that is the case which is going to prevail going forward as well.
Okay, got that point. That is how you're looking at pricing and inflation going forward. Then on the margin front, this quarter has, of course, been good. RPOB has been moving up. Margins have been moving higher. So what can you guide for the remainder of this financial year and also the calendar year? Because I guess the price resets happen calendar year-wise.
So again, price increase is a very small component, of margins increasing. Margins increase because you also start operating at a higher capacity. If somebody is operating at a 50% capacity, will have lower margins compared to somebody operating at 80%.
Oh, absolutely. There are a lot of operating parameters that feed into that margin line, not taking away from that at all. We're just trying to get a sense on how the second half will look, with respect to margins.
The second half is typically better in terms of margins by slight. But having said that, look, I'm not going to give forward-looking statements. I've never done that in the past, whether it's quarter or annual in the basis. What I can tell you structurally, margins, as your occupancy sort of increases, your third and fourth, typically your fourth quarter is the best. So you'll see your margin expand in the fourth quarter because your occupancy levels go up. And as you put up more and more capacity, you're going to have more and more utilization. Even your fixed cost, which is management related, etc., gets defrayed over a larger number of beds which comes.
Okay, all right, Abhay, very quickly before we let you go, you know, your ROEs and ROCE is expected to improve from here on. And I'm reading a domestic brokerage note that's very bullish on your company. They believe that there is a 400 basis points ROCE and ROE expansion from here on. Last year, I think you did around 15-16% on the ROE and ROCE. They're expecting it to go to 19 to 21%. Possible?
No, look, of course, but you can't look at things on a static basis. If we add more hospitals going forward, if we invest for growth going forward, hospitals take 3 to 4 years to build. If you do an acquisition, then always the idea of the acquisition is...
As things stand, Abhay, as things stand, I know your bed capacity is going to around 9,400 beds, I think, by 2029, 2030. So we've got that on board. But as things stand, would the aspiration be that your return ratios improve by 300 to 400 basis points? Will that be fair?
Absolutely.
Good to speak to you, Abhay. We have taken all your points on board, valid arguments as well that you've made, and the trajectory for the business, as you believe, moves forward. Thanks a lot for joining in and filling us in with all of that. We look forward to having a chat with you as, the quarter does progress. Interesting one, Surabhi.
Absolutely. Well, on that note, we'll take a quick break, come back on the other side, and we will connect with Chirag Negandhi and Ankur Zaveri from JM Financial. Their conference is going to get underway. We'll get you some highlights.
Welcome back. Well, JM Financial India Exchange 2025 will kick off tomorrow. We're now joined by Chirag Negandhi, the MD of JM Financial, as well as JM Financial. We have with us Ankur Zaveri, the MD and CEO. Hi, Ankur, as well as Chirag. Good to have you all on the show and wishing you all the best for the conference that kickstarts. Well, let's come across to you, Chirag, first. How are you feeling about the markets, in terms of activity? There's a lot of supply that's coming in there. There is some bit of bullish sentiment as well that's creeping in. Second half of the year could be far better in terms of earnings, in terms of the entire economic setup. Give us your initial take.
Thanks for having us. On the markets, frankly, we're pretty confident. We feel good about the markets. The outlook, like you mentioned on the earnings, is getting more positive. FY27 is likely to be a good year, as most are expecting on the earnings side. And I think the next leg of the bull run will get carried forward only with this earnings growth. So I think the visibility of this earnings growth will start driving the markets from here. We remain very positive on the markets. We believe certain spaces in the market provide good opportunities, and we're hoping that our conference helps with giving that window to the investors to come in, explore, and meet with companies up front and understand where they can find these pockets of opportunity.
Chirag, though you're sounding quite bullish and you all have been quite optimistic on the markets, and hopefully, there'll be a lot of interactions between large investors as well as the corporates out there. But one worry is the kind of supply of paper that we're seeing. Yes, the last few listings actually have done quite well. We have another one that's listed today, and it looks quite well. But what about this supply of paper? Barely earnings are over, and you have PEs, promoters coming to sell some stake. And all this talk of liquidity, actually that liquidity is getting absorbed in all these large trades. What do you make of that?
Yeah, no, look, the paper, I don't think it's, it's a little unfair to just think of this as paper. I think one has to qualify this with the quality of paper as well. So good companies, strong earnings, or good visibility of earnings, platform economy companies, good managements will always have a market to come to, to go public. And I think that continues. It's not easy for everyone to come to market. The investors are being far more discerning in what they're supporting and what they're backing. And I don't think that stops in a rush. Like I said, good companies will find their investors and will continue to come to market. I'm not so worried that this supply or this whole scare of this supply is going to be the dampener on the markets. They will only come to market when the valuations are right for the public market investors. And I don't think that's a big dampener on the markets.
Speaking of a dampener, if you're feeling a little off with this 100-point slide on Nifty, let's pull up Nifty. Nifty is obviously at the morning low right now. If, traders are feeling a little bleak, you just have to glance around the region. There's a big slide underway across Asia right now. It is unraveling of the so-called AI trade. It's not any major unraveling. It's just nervousness, profit-taking, in all probability ahead of the NVIDIA numbers, which is a big event on Wednesday evening US time. So Nifty is looking the best in the region. Nikkei is down 3%. Kospi is down almost 3%. Hong Kong is down 1.5%. Mainland China is down about 0.5% as well. So, Prashant, I go back to my thought and the belief that we are the anti-AI trade, even if it is... And, there was some trickle of FPI buying in the cash market yesterday. I just want to be an optimist, and I'll leave it at that.
Absolutely, and I think we'll have to track this one. But yeah, for now, I think the market's kind of given up some of the gains, etc. Chirag and Ankur, thanks very much for joining us. Prashant here. Ankur, so talk to us a little bit about the kind of conversations you expect out of the, of course, there will be company-specific questions, etc. But overall, right, across conferences and people that we've spoken with, people are constructive, but there's no great deal of excitement about how 26 perhaps is going to be this big year or anything of that sort. Even though 25 has not been all that great, at least at an index level. And people are just waiting whether growth will pick up, earnings growth, and maybe it will. So just your thoughts, Ankur, how you think about that question. The top 2 or 3 talking points of the conference as you see it.
Yeah, Prashant. So thank you very much. I think that, if you look at the broader space, and let's understand where the markets are today, right? I feel that the markets are in a broader trend of consolidation. If you think about from September 24, what we have been seeing is a very tight range in Nifty. And at every range, we've been seeing emergence of selling and buying both by domestics and foreign institutional investors. So my sense is that, if you consider from 2010, we've had such 3 phases of consolidation. All of the phases have, after the consolidation, we've seen, a market performing at least 30 to 40% higher from where the consolidation ended. If you think about, the current phase, I feel that the narrowing of consolidation itself means that there is an opportunity. We are trading at the higher end of the band. I feel that you are right that after FY26, the FY27 guidance as well as the earning uptake could be the key trigger for the investment cycle to again kick in, which means that we may be in the next range and probably also look at, the new ranges in the Nifty, which will come by. But it's very important that FY27, we don't miss out on earnings and we see that uptick on the earnings.
And that will depend in turn on overall growth picking up, right? I mean, I think nominal growth has to pick up in that sense. Chirag, at JM, what are you most excited about in terms of stuff which will do well on an absolute basis from here on?
So Prashant, thanks. I won't go into specific stocks, but I'll tell you that we remain continuously bullish. Just the fact that we go from a 4 trillion economy to 8 trillion means that a lot of sectors will get the tailwind. And I think we are seeing this already starting to play out. You can start seeing trickles of this in consumption. We are seeing this in energy, whether renewable or transmission. You're seeing this with the growth of the data centers, the platform economy, like we call it. I think there are many, many pockets that will see the tailwinds of the kind of growth that India will see over the next 5 and 7 years. It doesn't bother us on a daily or a weekly basis how the markets are playing out. We want, most of our investors are coming into the conference trying to understand the next mega trends and look at, where they can actually invest long-term capital money that allows them to kind of get gains over sustained periods of time.
By the way, one more listing, right? In Super One, even though the market is down 120 points, Physics Wala has listed it with a pop of about, 34-35%. We should have, I think we had shots coming out from there. Oof. Yeah, so there you go. That's the team at Physics Wala, and some selfies being taken and general jubilation all around. 50% now. Wow, 50 rupees on top of the issue price. So 160 rupees on Physics Wala coming through. It's phenomenal.
No, this is one issue where the OFS portion was not large, too large. It was actually money coming into the company. The fresh issue was about 3,100 crores, and there was a smaller OFS portion. The company has been, it's still, I think, loss-making, but it's been reducing the degree of those losses. Market's given it a resounding thumbs up. Issue price was 109. The price on the ticker right now, 154. So looking very, very good with Physics Wala. Chirag and Ankur, great to be listening into you, and thank you for being with us this morning. Chirag, on that point of foreigners looking at something exciting in India, it's all very relative, right, when we're talking about FPI flows. Foreign investors need a reason to go away from a trade that's been working phenomenally well, very comfortably well, and that's the AI trade. Now, for whatever reason, whether it's faltering, whether there is profit taking, or you generally want to kind of, spread your eggs in other baskets as well, if that money comes to India, first of all, what's the sense? In the coming few, months, do you get a sense that we'll start getting in more sustained FPI flows? And if yes, where do you see that money going? Which parts of the market?
No, I have no doubts in my mind that the FPI flows will start coming back to India. I think they look for rate of change. They look for growth. FY26 and FY25 for India in terms of earnings growth haven't been great years. We expect FY27 to be a solid mid-double-digit kind of growth numbers. And when you deliver those kind of, or the outlook of those kind of growth numbers, there is, you will see the crowding out that investors will, whether Indian or global, will have to, they don't have a choice but to come into growth markets. And the sectors, to me, will continue to be quite a few of the ones that I've been naming, whether it's the financials, whether it is, power transmission / renewables. They will come into consumption. That, to me, will be a big theme going forward in the next 18 months. We're seeing with the GST cut and the interest rate cuts, how that's beginning to trickle back in. So I think large places, I think there will be a few more IPOs that will look exciting. You all spoke about Physics Wala right now. What we are seeing incrementally on that side as well is that both promoters and investors are being far more sensible about the way they're pricing deals. Promoters are not worried about leaving a little more on the table just to make sure that deals open well and that the stock opens well, and that they have what they call long-term investors sticking with them for periods of time. If you talk to the private equity guys, you'll see the kind of money that is likely to flow into India or the targets that they have for investing in India over the next 5 years. And those are just staggering numbers. I think we'll be surprised on the upside when we start seeing growth coming back in terms of how FPIs come back into India.
Certainly hope so. Chirag and Ankur, thank you very much. Have a good conference, guys. And we'll, of course, from the sidelines of the JM India conference, get more views, perspective as the conference gets underway. Thanks very much. Well, I think we've got, what, a 100-point cut, 25,900. Take a quick commercial break here. So 2 listings, by the way. We focused on physics wala, but there's one more which is kind of listed at par with the IPO price, around the IPO price. Commodities in focus on the other side. Manisha will be joining in with that in just a bit. Stay tuned.
Welcome back. Let's straight away turn our attention to the commodity markets. Over to Manisha for the latest. Manisha.
Thank you so much for that. I'm looking at the soft commodities today. We haven't spoken about agriculture in a while, and that is because there is enough production. Inflation has been under control. But in the recent few weeks there, we are looking at strong demand coming into the markets. There are trade deals happening, buying happening. And then apart from that, the lower stock in the very immediate term seems to be supporting many of those agriculture commodity prices there. Take a look at the Baltic Dry Index. That's trading at a 7-week high, is telling you that there is that global trade back in the markets, and the higher freight prices seem to be rising as well. There is some bit of a backlog in the Black Sea as well, and that seems to be supporting many of these global markets there. Rapeseed prices are trading at a 15-week high as well. Edible oil as a sector has done quite well for this current year, 2025. When you look at the soybean prices, well, they are also trading at a 1-year highs. The last time you saw these kind of prices were in July 2024. Much of the support from soybean has come in on the back of US and China trade agreement, and China saying that it will continue to buy US soybeans that it had stopped buying in the last 1 year. So China has bought 7 cargoes from US for the December and Jan deliveries there. The USDA, in the meanwhile, also has trimmed the world production by 4.10 million tons to 421. So that lowering of global production and then China suddenly buying into the markets has been supportive. The USDA, that is the US Department of Agriculture, also has trimmed the global ending stock estimate to nearly 121.9 million tons. So everywhere that you look, you have supportive figures coming in on that. Not just edible oils, rubber prices also are trading at around 2-week highs, and this is on the back of rising auto demand from Brazil. China demand seems to be stagnating, but it is LATAM demand that is picking up. And then apart from that, there are supply constraints now coming in from Thailand because of the heavy rain there. That in turn also has been supportive. The other one on my radar is corn prices trading at a 5-month highs. Now, Brazil is turning a lot of corn instead of sugar into ethanol. So you have strong demand coming in from there. And then it also is about South Korean buyers buying very strong. Logistical delays, as I said, out of Black Sea region has been supportive. And then record US exports for the current year have taken the prices on the higher side. Take a look at wheat prices, and that's the last one on my list here. That one in the global markets is trading at a 4-month highs. The USDA has raised world production and ending stocks as well. So while that should be putting pressure on prices, but what is supporting is the aggressive buyer that we have seen in the very near term and the scarce prompt availability. So when you look at strong buying from much of Asian countries, North Africa has been quite supportive. Now let's talk about India, and the dynamics seem to be changing somewhat here. India's wheat output last year was a record 117.5 million tons. This time around, with the way Rabi sowing seems to be headed, we are looking at 119 million tons. So that's back-to-back record numbers coming in there. Last year's government procurement was the highest in last 4 years at around 30 million tons, with expectation that you could be looking at this number increasing yet again. Now, thing to watch out for is while the wheat exports have been suspended since 2022, but we do understand that there is conversation between Ministry of Agriculture and Commerce where wheat products perhaps could be exported to the tune of 1 million tons. That clearly is supportive for the FMCG companies in the Indian markets there.
All right, Manisha, thanks very much for that. It's agri-commodities in focus. Today, we take a quick commercial break here. On the other side, our special Indianomics segment, Lata, a conversation with 4 banking veterans on the costs and benefits of the next round of PSU bank consolidation. Stay tuned, coming up.
Welcome to Indianomics. The finance minister just confirmed earlier this month that the government is thinking about amalgamating banks to create more big world-class banks that India needs for growth. The announcement led investors in small banks like Bank of Maharashtra and IOB to worry if their bank will be merged into a larger bank which grows more slowly. It led bankers, on the other hand, to worry about the problems of cultural and technology integration and employee morale. To understand how best the consolidation may be done and what are the costs and benefits, I have with me 4 veteran elite bankers. S.S. Mundra, former Deputy Governor of the Reserve Bank and former Chairman and Managing Director of BOB. Dinesh Khara, former Chairman, State Bank of India. Padmaja Chandru, former Managing Director of Indian Bank. And Sunil Mehta, former MD of PNB. Mrs. Chandru and Mehta both piloted a merger in their time as MD. So, gentlemen and Mrs. Chandru, welcome to the show. Mr. Mundra, let me start with you. A slightly hatke question for our stock market audience. You know, in the previous round, when Dena merged into BOB, etc., the weaker bank merged into the large bank. So there wasn't much shareholder disgruntlement. But now the small bank, like say for instance, Bank of Maharashtra, they've grown some 200% in the last 5 years. So there is a bit of a worry that we may be merged into a slightly slowly growing bank. How do you think this will be a factor at all when the government arranges amalgamation?
Okay, thanks Lata for opening salvo. See, the one point is the banks which you are talking about, government continue to be the majority shareholder.
Yes.
And I think the shareholder value would be equally weighing on the mind of the largest shareholders as well. I really don't think that shareholders would be really unduly worried about it. There may be some short-term concerns, because, you know, it's a mixed bag. While, okay, growth in terms of percentage may look like, okay, I'm growing at 20%, other is growing at 12%. But then I think the informed investors also understand that you are growing on a large base rather than a small base. You are also getting the benefit of size, of scale, technology and all that. So that's a mixed bag. But having said that, I would just confine myself to a little bit of opening comments so that I don't occupy too much of time. See, let us be say realistic about it. Previous round of merger, 1920, we can say in some way it had been a success. There were short-term pains in the beginning, but in long-term, profit and efficiency gain has been achieved. Yes. So and that is visible in the share performance and everything. But as you rightly mentioned in your opening comments, technology, other things, integration is fine. But as far as I understand and I hear from my friends, the cultural integration continue to remain a key challenge. And if that is the case, the point is whether you are surviving reasonably well or you have been put in a position to exploit your potential to the full extent. I think second is still something where a lot of questions are there. And also the fact that the market capitalization of 5 top private banks today is still higher than all the public sector banks put together. Yeah. So I think it raises a lot of questions. I'm sure in coming round we will be discussing that. Yes. I'll just stop at this point of time.
Yes, that is a very important policy question which I will raise a little later in the show. First, what do you think, Mr. Khara, will be the mechanics of the merger? Immediately the shareholders think that, will Bank of, those 5 amalgamated banks, Central, UCO, BOM and IOB, will they be merged into Bank of India and create one big pool? Or do you think, the finance minister did not say about the unmerged banks. She only said India needs large banks for growth, and the amalgamation will also have a growth angle. Do you think merging the already merged banks, Union and BOB, will also be something? Because that will create a 25-30 trillion deposit base.
Well,
Lata, when it comes to, if you look at the way the banking system is stacked up currently, SBI balance sheet would be about 800 billion plus, and the others are quite small. So I think if at all the scale is intended to be achieved the way it is there with the global banks, the biggest one would be from China, about $7 trillion US equivalent. And then the next would be maybe JP Morgan would be about 4 trillion plus. So I think if at all we have to scale up to those levels, maybe I think merging the bigger may not really be of much value. But I would like to subscribe to the view that if at all merger has to happen, merger should actually lead to strengthening of the growth levers in the banks. So which actually means that unless and until there is a synergy which will flow, post-merger, it may not really yield the desired results. The intention should be that if at all merger has to happen, then the subsequent growth should be significantly higher. That is what it should be. And for that, there's a need for the stronger muscles, and those stronger muscles will essentially come from the skill, the technology, and also the ability to take the risk. And of course, consolidation of the capital, because capital being the one scarce commodity, unless and until it is put to good use, which actually means that the higher capital adequacy ratio is also not a welcome situation.
I agree.
Yeah, so I think optimally, if at all, we can have a situation where the banks which have got a higher capital, they can be merged with the one which are having lower capital base, and also they can offer synergies in the in the sense that their ability to underwrite better risk will also emerge. So I think that should be the focus.
No, I think both you and Mr. Mundra are pointing to the same thing. Let's think growth and profitability and not let that be the guiding star. Very quickly, Mr. Khara, do you think State Bank will be left untouched? Because that's under a different act. And the PSU banks are under the Nationalization of Takeover of Banking Companies Act. So do you think in this round or in any round, even in the previous, only the State Bank babies were merged into SBI. You think the others will not, you won't have a Bank of India or a BOM getting into State Bank. You think so?
No, I think we have, in the last round of merger, we actually even merged the Bharatiya Mahila Bank, which was part of the State Bank group. So I think that is not a challenge. That can perhaps be looked into. There are ways, and we have already done it also. So I think that's not a challenge. But as I mentioned, that if at all, unless and until we address the core fundamental, what are we going to gain out of merger, and is it really? I mean, what will be the contours of the merger? Are they really addressing the basic issue? That is something which I would like to really
Okay. So concentrate on financials, concentrate on the operational gains, is what both of you are saying. Mr. Mehta, what's your sense? Since you have gone through this, Oriental Bank of Commerce was one of the banks that was merged into PNB in your time. Do you think merger should be geographical? That is, people of the same geography merge so that common branches are closed. There is genuine, savings. Or should it be the other way around, that, you merge into a region where PNB is not, well spread, say with a southern bank? Should it be geographical or should it be cultural? If two northern banks merge, then culture is more easy to handle. How should the government think?
So, Lata, in my opinion, consolidation is just not an arithmetic sum up of the balance sheet. What the finance minister has signaled is that basically they are creating a financial architecture which can support the country's aspiration of 5 trillion economy and becoming a developed economy by 47. And to that direction, I think the supporting a banking system will be necessary to fund that. And I totally subscribe to what Kharaji said and all that. In fact, there is a need to create a large size banks which can support that type of a country's ambition. And for that matter, I think a lot of consideration, like what you say, whether the technology or the geography, in my opinion, there are strategic business advantages every bank has. Somewhere they have a niche segment, somewhere they have a different segment. So it has to be strategically thought of.
Okay.
What are the value the merger will bring to the table, and those and there. Because last time it was basically on the technology, because that gives a convenience of integration. But I think now we have crossed that stage, and we can swing to the other levers that can facilitate the value creation in terms of capital size, profitability, and the efficiency indicator.
I take your point that every bank will come with some kind of a strategic advantage. And the fact that size, I mean, today I think it's only State Bank which can finance a 15,000 crore project or something. The other banks will not go beyond 7,000-8,000 crore. So the size will have its own advantage. Mrs. Chandra, actually similar question like I asked Mr. Mehta, but more a human angle. You had to take Indian Bank, which is largely a South-based bank, had to handhold or take in Allahabad Bank, which is more a Eastern Northern bank. Are cultural integrations very difficult, so much so that they may actually impact profitability?
Lata, I think, we learned a lot from that merger. Yes, in the beginning when it was announced, there was a kind of a apprehension that, the cultures don't fit in. IT does to some extent, so that was sort of managed. But culture was a big challenge. I think it depends on the way you take it up, the narrative that you give from the beginning. Where whichever two banks merge, I'm sure there would be a culture challenge. Yes. But yes, more so in this case. When you position it as a merger of equals, there is no victor or vanquished here. It's all the same owner. We are all working with the government mandate. I think that message again and again, communication plays a big role. Also, fairness and transparency in handling the people. I think people make or mar an organization. Whichever merger, whichever consolidation, unless we take care of people, it's not going to succeed. I think in Indian Bank, we could focus on the right areas, and then it's where it is today. I think it's doing very well.
No, take your point, but I want to just start the other big conversation that Mr. Mundra began, and then go to my first break. Mr. Mundra, you said the fact of the matter is that the market cap of the first 5 public sector banks is not equal to the private sector banks. Now, a private sector bank like RBL managed a huge foreign bank welcoming into it very well. So, they got that much of capital, 26,000 crores of capital. Do you think we have to recast the Bank Nationalization Act altogether? There have been advice from the past. Dr. Y.V. Reddy did that. PJ Nayak has recommended in various ways that first let us do away with that act, bring all the banks under Companies Act. Then there will be 51% independent members. The board becomes independent. In a matter of years, it takes time for the board to be independent. Let the board decide what is the profitable one to merge into. Do you think that is the way to go?
That is a larger question, Lata, and I think we have debated several times
on this.
But as you know, there is a business angle to it, there is a political angle to it. But I partially agree with you, because I think that will be a right way of starting it. And even if you are going up to 49, you are not changing the structure of basic control, which can always remain. But I think FM, while talking about the merger, has given certain subtle hint about it. So I think it is also occupying the mind space of the government and all those who matter. And probably some work would happen into there. Because, see, to my mind, scale is not the only thing. Scale, for the size of scale, doesn't really achieve anything. See, in running a bank, there are other issues like how you create a meaningful network of partnership, how smart is your technology, how much is good is your customer connect, how you are innovating. I think those are the things which become very important, which brings the profitability and which ultimately leads to the market capitalization. So how you design the merger, how you phase it, and important point is, when you create behemoth like this, your regulation should also be at the same time need to be really packed up to meet with the challenge. Otherwise, there could be risk. Actually, Lata, there are two larger questions. Maybe I think
after the break, sir,
we can discuss that. But let me put those questions. What do we want to achieve by this merger? right? And what are the risks involved? I
Yes.
think it will be worth debating on those 2 points.
We will, sir. We'll do that exactly after the break and also ask, there's a bigger challenge emerging for the entire banking space, private sector included, that a company like Grow has a bigger market capitalization than most of the banks. Technology is staring and taking away the customers of banks. So those questions after the break. For Bazaar viewers, you will get to see the whole show after market hours.
Jefferies initiates coverage on WeWork with a buy rating and a target price of some 800 rupees per share, expecting a 22% revenue compounding till FY28. The stock surges nearly 4.5%.
GMR Airports is also up close to 4% following a bullish note coming from Jefferies. The brokerage has a buy rating on the stock, raised the target price to 115 a share, expecting a recovery in the second half of FY26.
Keynes Tech slips 5% following a largely in-line second quarter, although revenue missed estimates. The management tells CNBC-TV18 that margin improvement is likely to sustain and will be maintained around 16% in FY26.
NQ Pharma slumps close to around 4% after around 2.5% equity change hands in two large trades, with Bain Capital likely to be the seller.
Online education platform Physics Wala makes a stellar debut on D Street, extending its post-listing gains to over 40% from its issue price, currently holding around a 34% gain from its issue price.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see on the screen, well, a lot of stocks are actually in the red. The top of our heads as well, you can see that, in fact, both the Nifty and Nifty Bank, the mid-cap index, all of them trading in the red. And the breadth of the market is negative. But to be fair, the Nifty Bank is still doing a relative outperformance. And to be fair, Mangalam, if you look at the remainder of Asia, well, we're not doing so badly. Though we're down close to 0.5%, the remainder of Asia is down 1.5% or even more.
Down but not out, and we put behind us a decent rally as well. Yesterday, after a very long time, we closed above that 26,000 mark as well. And where we are as well, is an important support zone. The only thing that I'll be watching out for as we move towards the end of trade would be any sort of volatility that would accrue on account of the weekly options expiry. And secondly, usually when the markets were, lower, we didn't see a big impact on the India VIX. But right now, as we speak, the India VIX has moved to the high point of trade. So those are a couple of factors that we will monitor as we go along. But no real problems. The Nifty Bank has been outperforming. And at the same time, we will watch for any sort of recovery, if at all it would come by, on the other two heavyweights, which is the IT index as well as Reliance. So we'll watch out for that. Currently at the lower level of today's trading session. But let's talk about one stock which is doing extremely well in an otherwise wobbly market, and that is the debutant. We have EdTech firm Physics Wala making its D Street debut today, listed at 145 rupees versus its issue price of 109, and that implies a good 30-35% premium versus its opening as well. While the issue opened, we spoke with Prateek Maheshwari, who's the co-founder and whole-time director. Now, post-listing, he joins us once again. Prateek, thank you so much for joining in. Congratulations on this listing for your company, for the dream that all the owners had and all the employees had as well. It's fairly good, and I hope that this translates into better service and overall better education for all the millions of students that you have as well. And that truly will be the biggest achievement of a company like Physics Wala in its vision. But be that as it may, now that you've listed, now that the street has rewarded you with this sort of premium and promise as well, could you give us a sense on what a sustainable growth path for the company would be from here on? And at the same time, what's the kind of profitability that you're looking at in a couple of quarters from here, as you promised last time?
Yeah. So, thank you so much, for inviting me, and good outcome, as a listing process. We are we are a very young company, as well as improving top line and bottom line at a very rapid rate, and very soon, as I told last time also, we have a path to profitability. The listing is the valuation, the listing, the share price is just a number. What is more important is 98% of the India doesn't have access of a good quality education, and we are on a mission. And that mission is more important, that access is more important, there will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So, so continue to make impact in the student's life, as well as we will be utmost responsible, to create our shareholder value as well.
All right. Hi, Prateek. Good morning. First of all, congratulations on that big listing. Good to see you, family, friends, well-wishers, all of you all giving that bell a good ring. So good on that. And you've built a very, very good business. But as you said, you're playing a very, very important role in India's education system. However, now you're also playing a very important role in shareholders' wealth as well, which is extremely crucial. So, we understand that there's a big potential for penetration. You're building the base for various children, students for tomorrow. Excellent work out there. Tell us the path to profitability. Which year will you turn profitable? And the endeavor is to continue growing. What is the growth rate we should work with? Just two numbers. One is revenue growth, a broad band. And which year do you turn profitable? That's it.
So the path to PAT level profitability will achieved in less than 12 months from now, as well as what is more important is we want to capture Southern India. We want to win in 11 different Indic languages, as well as we will continue to expand into multiple exam categories. Shareholder value creation is like, we take it with utmost responsibility. This is the same middle class India, via mutual fund have invested in us, as well as a good retail participation as well. So we are taking care of their kids, and we will make sure that their investments lie in safe hands and in turn to be a great returns for them.
All right, we understand that. Path to profitability less than 12 months from now, that would be the headline. Revenue growth rate is something that you haven't spoken about. Can you once again, iterate the kind of growth rate that you will post on your revenue? And how much of that, again, if you could clarify, come from offline centers, how much of that would come from online? A broad revenue growth band and growth rate for both offline and online.
So current revenue mix, 52% revenue comes from our online business and 48% revenue comes from our offline business. In upcoming years, we will have a little bit more skewed revenue towards online, but revenue mix will remain near same, 55, 45 in a couple of years. As well as, both are growing at a very healthy rate. If you see my FY 24 to 25, improvement in revenues was more than 40%, and we will continue to grow, more than 30% in upcoming years.
All right, more than 20% upcoming years would be your revenue growth. That would be organic.
More than 30. Yeah, more than, that is completely organic.
All right, but more than around 30%, more than 30% is something that the street would like as well, especially because, you were offered at 10 times sales. So maybe to justify that sort of multiple, path to profitability and revenue growth were extremely important. And I'm glad that you've clarified on that as well. But what we also needed to understand is, in a business like yours, there is a fair amount of teacher attrition. And in your business in particular, it's nearly 35% or thereabouts. How do you curtail that, and how do you ensure that, this is something that is managed well? Because 35% teacher attrition implies a third of your overall strength is actually churned every year.
So that number, is have reduced drastically. See, in FY 24 and FY 25, we were in a hyper expansion mode, and we hired a lot of lateral faculties at that point of time. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance, and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms. And what is more important is, the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where, where 3 to 6 months there is an intense training program, crafted by Alak, is actually, solving this problem completely. But you will see a sharp dip in this number this year.
All right. What would that number be?
What would the number be? The attrition number? Attrition number, what will it be? And more inorganic growth is what?
That number is not handy with me.
Okay.
No. There are a lot of headroom to expand in, domestic market, and, no as such big plans for inorganic expansion.
All right. Just one final question before we let you go, and this one's on attrition as well. You said that you had to let go of a lot of non-performing teachers, but typically what happens in a business like yours as well, where there are extremely high-performing teachers, when they go, they take along with them students also. Non-performing teachers going, good for business, but good-performing teachers going, not so good for business. So if you could give us a sense on how much of that happens in a business like yours as well?
Yeah. So just to clarify the last question, the teacher attrition was very heavy in, in our offline mode of learning, in which we have controlled completely. Our online teacher attritions is less than 5% historically. Teacher moving out and taking out students with them, it's not, doesn't applicable to us. It happened in the past also. If you see, our competitor had $1 billion of cash, but this is a very unique business model which is born out of community. If your science results are unbiased of any science topic, if you put laws of motion or thermodynamics in your Google search, in your YouTube search, out of 10, 5 videos will be physics walas. So this is a very unique community-led model which we have created. The community which Alag had built in 2020 with 30 lakh students now have grown to 12 crore students across 250 YouTube channels. So, nobody can take away that community from us. So that gives us a great moat and a great entry barrier for us. As well as, there is economy of scale. We have built amazing tech stack where thousands of students studies in a live classroom, with the AI-led doubt solving.
Got it. Prateek, thank you so much for joining in and explaining your business to us. Today is a day for you to celebrate. Today is a day for you to be a lot more thankful and obviously mindful about the future. Bunk classes today and party today?
Yeah, you can bunk for the remaining of the day, Prateek, and just celebrate with you and family. Congratulations. We look forward to more such interactions. We'll push you a little bit for numbers because now you have to answer even to the shareholders and at times communicate via us. Thanks a lot for joining in.
And Nigel, he was talking about the laws of science, the laws of motion, etc. One law that everyone will be watching out for is the law of gravity as well, because when the valuations go up and the performance does not come by, then there is law of gravity that applies. And when it doesn't, then there is that velocity that applies to the share market as well. So that's some physics from a stock market standpoint. But with that, we'll take a short break, come back on the other side. We have another D Street debutant waiting in. MV Photovoltaic Power joins us. Stay with us. Hello and welcome. You're watching us back here on Chartbusters, and alongside Physics Wala, the other company that listed was MV Photovoltaic. Saw a subdued debut on D Street, listing with minor losses. Suhas Donti, who's the whole-time director and president, as well as CEO of the company, now joins us. Thanks a lot, Suhas, for joining in. The nature of the markets, right? Sometimes up, sometimes down. Welcome to the secondary markets. The obvious question from where we are standing right now, you have a capex plan of close to 5,500 crore rupees, of which funding is secured as well, 3,300 crores from Iroida. That's what you had told us last time when you joined in. The question is, what is the kind of asset turns that you're expecting on this 5,500 crore capex? When does all of this get completed? And what would your peak revenue potential look like?
Thank you very much, sir, for having us on this show, and we are very happy to be listed on the stock exchange. And we thank the regulators and the exchanges. So, as you know, we are the second largest solar manufacturer, integrated manufacturer with cell and module manufacturing capability. And for our expansion of 6 gigawatt of cell and module manufacturing, taking us to 16.3 gigawatt of capacity of modules and 8.9 gigawatt of capacity of cell, the project cost, as you said, is a 5,500 crore project, where 3,300 crore is the debt that we have secured from IREDA. And this project is going to be commissioned in the next 18 months, and timing it well for our, for the India's growth of solar.
All right. Hi, Suhas. Good to see you in. And, those visuals are very, very lovely, particularly those little kids in there. That's a dream that people dream for many, many years, to be there, to ring that bell. So give them a big hug, particularly from my end. But let's talk about numbers. 5,500 crores of capex comes on stream in 18 months. What is the asset turn? If you could help us out with that. What kind of revenue potential can you see in the next few years? Point number one. Point number two is you're using some part of the proceeds that you raised to repay debt. And I think that number is around 1,600 crores. What are the interest savings? Two numbers, asset turn and debt number. Go ahead.
Absolutely. So, sir, as you have seen, the MV's fundamental business for the last so many years, we have had a strong profitability year on year. In fact, with a capacity of 6 gigawatt of module and 3.9 gigawatt of cell, which was commissioned only in September 2024, we had a profit of 390 crores. And with that, you can see our Q1 profits are at 18% EBITDA margins. At a 33% EBITDA margins, and that is the strength of the run-up we are doing with the current expansion. So as we scale up our operations from, as we scale up our operations from 7.8 gigawatt of module and 2.9 gigawatt of cells to 16.3 gigawatt of module, that is the fold of increase in capacity, which is going to be backed by the revenue numbers. As you know, that I probably cannot take up the...
Okay. Let us do the hard work then. Let us do the hard work for investors. Suhas, at 7.8 gigawatts of solar module and 2.94 gigawatts of solar cell production, your revenue was close to 2,300 crores. Now this grows to 16 gigawatts of solar PV module and 9 gigawatts of solar cell production. Do you believe that your revenue at peak level can cross 5,000 crores? Is that a possibility?
So that absolutely sounds like about right, because you can see that more importantly, one is that is important. Also, it's important to understand that our integrated capacity is growing, not just the module capacity that is growing, and that is what is fundamentally required for this industry right now. And that is where, especially with ALMM2, these two coming into place, it is basically the necessity of the...
Yes. So we're getting a few numbers out of the way. One is revenue potential goes to 5,000 crores. Very good. That's a tick mark out there. Second point you made, very important. You're getting more backward integrated. So you'll be consuming higher amount of raw material in-house. What does it mean for margins? What is the margin band we can work with? And then I have another point, but let's get done with this.
Yes. So to give you an idea on that, you can see that in FY24, we had about 12% EBITDA. And with backward integration, half year of operation in 2020, in FY25, we did about 33% of EBITDA. So that can give you a fair idea of what the backward integration is doing and the result of that backward integration in our numbers.
All right. And how much of that is already realized? Can the margins go to around 35% when the revenue is 5,000 crores?
No, we continue to hope to do at the levels that we are at right now, and that would be the endeavor.
Happy with current margins and debt? You paid 1,600 crores. What is the current debt in the books?
Debt in the book right now, all the outstanding debt is going to be repaid through this issue.
You'll become debt free.
The new debt that is going to come on the balance sheet is going to be, yes.
All right, the new debt comes in around 3,300 crores. What we'll do is we'll have a conversation with you once you are out with your quarterly numbers, so then you'll be at a little more ease to give us some more outlook into what the business looks like. But for now, we'll be happy with 5,000 crore revenue potential with margins around that 33% as well. With that, take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us here on Chartbusters.
Welcome back. Well, as you can see, the Nifty Bank is almost moving into the green. I think we just need to refresh that in just a bit. As we speak, the Nifty Bank has moved into the green, and that's the reason the markets actually have recovered a little bit. The Nifty is back over the 25,900 odd mark. The breadth of the market is still in favor, and the number of stocks declining. But that will refresh, as we wrap up on Chartbusters. When you come back on Trading Arm, hopefully the Nifty Bank will continue to remain in the green as we speak. That one, it just requires a bit of a refresh. So let's slip into the break, come back. By that time, we'll have a refreshed Nifty Bank rate, and we'll have the team of Trading Hour as well.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormuz Fatakia. Hey Hormuz, good morning. Well, some recovery which is underway. Of course, so far we are snapping that 6-day winning streak that we saw till yesterday. For now, Nifty Bank, it has turned into the green, and that is something which is leading to the Nifty recovery as well. We're above that 25,900 mark. Remains to be seen whether we continue to do so or not. It's, of course, a lot of these names which are leading to the recovery from the lows, banks being one of them. But we do have Bajaj Auto, Maruti Suzuki, some of these auto names as well, which are recovering from the lows, leading to the green that we're seeing on the screen currently. In terms of the movers in the Nifty pack, Bharti Airtel is the top gainer. We have Shriram Finance, which is giving it some company. There's Axis Bank. That is the one which has led to the recovery that we're seeing on the Nifty currently. And Asian Paints is the other one which is doing well. But yes, more losing stocks in trade today versus gaining stocks. And the advanced decline ratio comfortably in the favor of declines as we speak, 1:2. That's the ratio on the Nifty, on the NSE as well. And the index is down around 0.5%. So let's take that story forward, because Hormuz has gone across the big wall. He's going to put the spotlight on top movers in the broader market and more. Hormuz, tell us more.
It's a day of block deals, but it is also a day of major listings. And speaking of listings, you can't not take your eyes off Grow. And that stock continues to move higher from its IPO price, another 7% today. So it's almost doubled now from its issue price, which was 100 rupees. There's a fifth straight day of trading for the stock, and all 5 days the stock has gained. The stock now has already had close to 25 crore shares that have already been traded in today's session. So that is as well. The market cap now is well above 1.1 lakh crore rupees. And of course, the next big trigger is on Friday, when the company will declare its quarterly results. The top gainer among the small cap names today is Fairchem Organics, and the stock had declined in 8 out of the last 9 trading sessions before Monday. It's the second straight day of gains for the stock, 15% higher in today's session. The volumes today are already at the highest level in the last 6 months, and so far we've had close to 3.5 lakh shares that have been traded on the stock. The 20-day average is only 3,000 shares, and despite this move, the stock remains below its key moving averages. And the next important level on the upside is the 50-day moving average, which is at 759. But it's been an underperformer this year. It's the 5th straight month that the stock has had negative returns. The 5 Paisa Capital has been making some noise in the last couple of trading sessions. Was up 12% yesterday, another 12% in today's session as well. Now we've had close to 35 lakh shares that have already been traded on the stock. The 20-day average is only 17,000 shares, and it has now turned positive courtesy of this 2-day move on a month-to-date basis in the month of November, and that comes on the back of 4 straight months of losses. And the stock has been an underperformer yet, 24% down for this year, and that is after a 17% fall that the stock had seen in 2024. And lastly, Bombay Burma, that stock too is among the top movers today, 7.5% higher on the stock. The second straight day of gains after 4 straight days of losses that it had last week. The volumes are at the highest level in a month, over 7.5 lakh shares that have been traded on the stock today. The 20-day average is only 40,000 shares, and the stock on a year-to-date basis is still lower by around 8%, but that is after some strong moves that were seen in 2023 and 2024, Sonal.
Okay, all right. Some interesting movers there. Thank you so much, Hormuz, for putting spotlight on those names. But let's talk about the bigger market move, because Morgan Stanley in a recent note says 2026 is likely to be a macro trade in stocks. They add most risk will be coming in from outside India. Sudarshan is here with more details on this note by Morgan Stanley. Sudarshan.
So there is an interesting note from Ridham Desai of Morgan Stanley, and he believes that long-term story of India is gaining strength from government's policy action. And as far as risks are concerned, it's likely to come only from the outside of India. And as per him, 2026 is likely to be a macro trade in stocks. So what about the target? For Sensex 2026 end target base case, where there is a probability of 50%, target is 95,000. That implies an upside of almost 12% from the current level. Bull case, where the probability is 30% and target is as high as 107,000. And that implies an upside up to 26%. In the bear case, where the probability is 20%, target is 76,000, implying downside of almost 10%. Now, what are the preferred sectors? On top of the list is consumer discretionary, where he believes that urban demand recovery will aid the consumption, and the recent GST cut that government had announced, it might augur well for the sector. Next one is industrial, where he believes that robust government capex and pickup in private capex, that drives overweight stance of Morgan Stanley on industrials. For financials, rising credit growth and low credit costs will be offset by likely NIM compression that these financial banks might see in S2 of FY26, but deregulation that government has been talking can be positive for the banks. Now, on some of the sectors, he is neutral. First one is consumer staples, where he believes that fundamentals could improve as rural growth over the last few months has significantly improved. Second one is technology, which is least exposed to domestic growth, although US recession is a risk for the sector, and AI debate is hurting multiples, but going forward, or say in the near term, it might not impact on the earnings of this sector. Some of the sectors that he's like, it's the least preferred. On top of the list is utility, where he's underweight given lack of cyclicality. Second one is energy. He prefers domestic cyclicals over global cyclicals, and healthcare because he's avoiding defensive sectors. And last one is materials because he's taking cyclical exposure via industrial. So we'll have to see over the next 1 year, it's 76,000 or 1,07,000 for Sensex.
Sudarshan, thank you for that update there from Morgan Stanley. A 1 lakh plus price, not a price, but a 1 lakh plus target for the Sensex by the end of next year. Taking this conversation on the markets forward with Gautam Baid, the equity advisor at Complete Circle Stellar Wealth PMS, who's joining in now. Gautam, good morning. Thank you for joining in. You've mentioned the fact that the IPOs are sucking a lot of liquidity out of the market, but if the IPOs were not enough, now you're getting a lot more supply. As soon as earnings season is over, there is a flurry of block deals that have taken place, $1 billion on the first day itself. Are these two main factors acting as potential headwinds to prevent the market from not moving faster enough towards those record high levels?
Good morning, Hormuz. Good morning, Sonal. Thank you for having me on your show. And you're absolutely right. There's a flurry of activity in the primary market and in the block deal market, which is sucking out a lot of liquidity from the broader markets. And as a result, you're seeing the broader markets becoming very narrow. It's only a selective group of stocks which are getting handsomely rewarded. Those are the names with good earnings growth visibility and bullish management commentary. That was the trend in the most recent Q2 earnings. So this is increasingly becoming a market for active bottom-up stock pickers. However, the volatility in the markets could sharply pick up if any fresh geopolitical tensions arise after the recent Delhi terror attacks. And also, one thing to keep a close eye on is the yen carry trade, which can unwind globally because we are seeing a surge in the Japanese 10 and 20-year bond yields in the last few days. So that is a global macro item to keep a close track on.
So Gautam, do you think it is not a domestic risk that the market is weighing, but it is something that could potentially happen globally? That is what the markets are factoring in right now?
I think it is not yet factored in by the markets. You know, if it was factored in, then you would have seen the sharp uptick in the volatility index, the VIX, but that has not happened yet. I think markets generally fall on unknown shocks, not known or expected shocks. So if the magnitude of this yen carry unwind is far larger than what people are expecting, then we may see a sharp sell-off in the broader market, and that may provide good opportunities to add to your core holdings.
No, so what I meant to ask is, do you think there are more domestic risks that the market should be watching out for, or it's largely geopolitical or global that the markets are either expecting or could happen?
The latter, Sonal. You know, I think the macro setup for India has never been better. You've already seen the latest CPI print, which was at a decadal low. So there's ample room for the RBI to pursue aggressive rate cuts. And along with that, we have had very good monsoons this year. And add to that, you know, the big fiscal stimulus from the government through the income tax cuts in the budget and GST 2.0. I think a sector which has been underperformed for the last few years, that is urban and rural consumption, that may well be the theme of 2026.
I was reading through your stock recommendations, Gautam. One of them was Car Trade Tech, and that stock has been pretty much talked about almost every other day in the recent past, especially considering the reversal that it has seen from the lows that it made somewhere around 300, 350. Now the stock is 2000 plus. Do you still believe that there is still more upside that is left in a name that has moved from the lows in a pace at which car trade has?
Well, just to give a brief background about this company, Hormuz, Car Trade Tech is India's largest auto and classifieds platform, which offers discovery, remarketing, and value-added services. And the game changer for this business was the acquisition of OLX India, because that acquisition greatly boosted the listings density for Car Trade Tech, and it's driving lead generation in a very, very big way. More importantly, OLX India opened up scaled non-auto categories for car trade, including electronics and real estate. And this has greatly widened the monetization funnel for car trade without a commensurate step up in customer acquisition cost. The EBITDA margins of this business has been steadily inching up over the last 4 quarters, and we expect EBITDA margins to sustain at 30% plus, driven by 2 key factors. First one is operating leverage, because 95% of the traffic on car trade website is organic in nature. And number 2, premium monetization through paid memberships, paid visibility, and cross-sell of finance, insurance, and logistics services. The key risks to the investment thesis for car trade are twofold. First is the cyclicality in used car demand. And the second risk in car trade is integration issues with a potentially large acquisition in the future, because recently there were news in the media and Car Trade also confirmed the same, that they are in talks with Car Dekho for acquiring their auto classifieds business. So any potential integration issues there may dent margins of Car Trade.
All right, so, a lot of funds and a lot of other PMSs have also been looking at Car Trade Tech, but as you pointed out, there could still be some upside from these levels. The other one is Sensex Pharma, Gautam. We don't talk about this one so often. Why do you like this, and why not other generic names? Why are you so bullish on this one? And do you think, considering whatever is happening with the US in terms of tariffs and other geopolitical issues, the pharma space in general could be seeing a lot of risk?
I'll answer the first part of your question, Sonal. Sensex Pharma is the fastest growing name in the listed generics formulation space in India. The management has guided for 50% top line growth in FY26, the current financial year, and it has guided for 25 to 30% top line growth in the next 2 to 3 years after that, coupled with EBITDA margins in the range of 24 to 26%. This will be driven by operating leverage through the scale up of the new unit at its US facility, and also through the launch of higher margin CGT products. CGT stands for competitive generic therapy products, which enjoy a initial exclusivity period upon launch in the US. And finally, the company will also get backward integration benefits once the API plant in India becomes operational. As regards the Trump tariff issue, Trump has imposed tariffs and import duties on branded formulation imports, but this company is immune from those tariffs because it's in the export of generic formulations. However, the key risk to the investment thesis for this company is any potential non-compliance with the stringent US FDA regulations, because that may lead to an import alert and adversely impact the revenues of the business.
Gautam, you have mentioned about IPOs. You can't not help but ask you, any recent IPOs that you have looked at or you've been bullish on? There's been a whole host of big names, right? Grow, Physics Wala, Lenskart. Grow is almost unstoppable now, has almost doubled from its issue price. There is Urban Company. Any one of them that have been on your radar?
Well, Hormuz, rather than focusing on the primary markets, at Complete Circle's level PMS, we basically look for potential re-rating opportunities of a listed peer in the secondary markets. For instance, the Grow IPO has ignited a lot of buzz in the capital market stocks. So a lot of brokerage stocks, wealth management stocks, and other ancillary stocks are basically on our radar. I think generally in the past, when you have seen any large player getting listed at a very big premium valuation, then the market, then after the initial re-rating is done in the primary market, the market participants start looking for cheaper relative plays in the secondary market. So that is the area that we are focusing on.
All right, Gautam, thank you so much for joining in today and taking us through your specific picks or stocks that you're bullish on and overall market scenario as well. That's the word coming in from Gautam Baid. With that, we'll slip into a short break. When we come back, we'll focus on the crypto market from Manisha Gupta on the other side.
Welcome back. Shifting focus to the crypto space as promised, Manisha is here with more on the latest from the crypto markets. Manisha.
Well, thank you so much for that. I'm looking at crypto market continuing to decline, really. You know, the first half was really good. You had positive policies coming across. You had almost all corporate treasuries and banks and brokerages also talking about crypto. But when you look at the last 1 month, we have seen a very sharp decline come in for the cryptos. It really seems to be getting into an bear market right now. The overall standing or market cap for crypto has touched an all-time high of $4.4 trillion in this year, which has declined to $3.1 trillion as we speak right now. Bitcoin itself has declined below 90,000. It did hit an all-time high of 126,000 on 6th of October. And from there, it has been a very sharp decline that you are looking at in case of Bitcoin. Well, if you look at the overall market there, we have seen Bitcoin market value decline by nearly $600 billion from its October highs. And that's not just with Bitcoin. It clearly has been the case with various other altcoins as well. Bitcoin itself, when you look at those markets, did see Bitcoin halving, which happens every 4 years. Last year, it was in the month of May. And if you look at the history going behind, after that Bitcoin halving every 4th year, there is a sudden surge that you see in prices and then a sharp decline as well. And that's exactly what the markets are looking at this point in time. And as I said, while Bitcoin has turned negative for the year, it's down by 3% in the year. Ether is down 11%. You have Polygon falling 68%. And other cryptos like Cardano is down 45%, Solana 29% in the red, and Chainlink is down 33% as well. The other stuff that does not augur well for the markets and could perhaps be one of the factors that you've seen putting pressure on crypto has been the kind of scams, frauds and rug pulls that we've seen. There actually is a report that has come out from ICIJ investigation which says that $28 billion worth linked to illicit activity has reached crypto exchanges in the last 2 years there. They also have broken this down, and the major numbers clearly come in from Binance, where you have $400 million come in from a Huan Group, a Cambodian conglomerate. Huan Group also did see some money being put in OKX as an exchange as well. Apart from that, nearly $900 million was funneled into Binance accounts. This came in from a service used by North Korean hackers there. So when you look at all of these names from Cambodia and North Korea and hacking, that does seem to be taking markets into a bit of a bear territory there. The other number that ICIJ also exchanges is that exchanges worldwide took in at least $4 billion linked to scams in the year 2024 alone. And when you look at the cash to crypto operations, well, they have been high to the tune of $500 million as well. So clearly, markets not getting a very good feeling with all those numbers coming across.
All right. Thank you so much, Manisha, for joining in and explaining that to us. But with that, we have to slip into another break. When we come back, we'll discuss market technicals with Somil Mehta of Mirae Asset Share Khan and also discuss their top trading bets. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It is a good time to get a technical check on the market. Somil Mehta from Mirae Asset Share Khan is joining us for a quick check. There's some recovery from the low, Somil, in the markets right now. Do you think it could be the 7th straight day of gains for our markets, or we could snap that winning streak?
Good morning to everyone. I'm absolutely positive on the markets in the short term, in the medium term, both. However, in the very, very short term, I think there could be a small correction or a small consolidation around these levels, but I'm not expecting markets to go below the previous swing low, which is around 25,700, 25,750. So that zone becomes very crucial in the very short term. So buy on decline should be the strategy. And on the upside, I'll be targeting at least the previous swing high and the all-time highs, which is 26,250, 26,300 levels. In the medium term outlook, I'll be expecting a target of around 26,800. So overall, I think the trend remains positive, and buy on decline should be the strategy on Nifty. There are sectors which are doing extremely good, which is banking, metals are doing great, autos have started picking up. So overall, sector-specific rotation and sector-specific focus should be a good thing right now.
What about specific stocks, Somil? What's on your radar this morning?
Banking is definitely looking good. So Bank of Baroda would be one of my picks. A small flag pattern has broken on the upside, high top, high bottom formation, already in the uptrend. Stop loss would be around 281 and target would be 300. The second stock is from the auto pack, Bajaj Auto. As I said, it has Bajaj Auto and other stocks in the auto pack are looking great at the moment. Bajaj Auto has taken support at 200 daily moving average, high top, high bottom formation. It's been consolidating around that area, but I think now the next trend on the upside has started. So the stop loss would be 8,850 and targets would be 9,450.
All right. Thank you so much, Somil, for joining in. So those are some technical bets coming in. But let's also understand what are the recent trends coming in from the F&O space. Mangalam Malu is joining us now. Mangalam?
Well, if you look at a couple of these indices, they've recovered from the lows led by the Nifty Bank, but we're still, slightly under pressure for the Nifty as well as the mid-cap index. It is the weekly options expiry today, so it'll be very important to track how the market goes on from here. But one thing is fairly clear that, as we move towards that 26,000 mark, and as we've been doing that over the last month or so, every time it is between 26,000 and 26,100, which was the October 23rd high, we did face some sort of supply. So by when does the market break out of this congestion is something that we will be tracking very closely. For starters, we will have to cross yesterday's high, and whether we do cross that or not will be the big question as we move towards expiry. The market breadth is a lot weaker today than what we've seen in the recent past. The mid-cap index hit a fresh record high yesterday, so maybe some bit of profit taking is currently underway. And the other interesting part is that usually when the markets would decline earlier, we would see the India VIX not rise as much. But today as well, when the markets saw a decline, the India VIX rose by almost 5%. And now that there has been some recovery from the lows, it's come down to about 2.8, 2.6% in terms of gains. So we'll watch out for the India VIX as well as we move towards expiry. Two data points that tell you that the expiry is likely to be in this 25,800 to 26,000 range. One are the strangle writers. What is a strangle? A call and a put of different strikes written ahead of expiry. So 25,950 call, premium of 30 rupees, 25,850 put comes up for you, premium for almost 10-15 rupees. So together, for a 50 rupee premium on both the strangle, which is the 25,950 call and the 25,850 put, you add that on either side of 25,850 and 25,950, you get a range of 25,800 and 26,000 on the way up. The other data point is the straddle writers, which is a call and a put at the same strike. And the strike that we're looking at is the 25,900 one. The 25,900 call and the 25,900 put. Put both of them together, the combined premium that you have on both of them is close to about 100 rupees. So 25,900 minus 100, 25,800, that's the support, plus 100, 26,000, that's the resistance. So 25,800 to 26,000 is the broad range that the option writers are playing with. Today's low on the Nifty, 25,877, extremely crucial. Below that is the 20-day moving average, which is the 25,800 mark as well. A lot of stocks on our radar. Keynes Tech is seeing a lot of shorting today, and the other stocks which are fairly well bid, GMR Airports among the top F&O gainers today, and alongside that we have Bharti Airtel as well among the top Nifty gainers today. We've seen a lot of long build-up on both these counters. So watch out for how that progresses.
shorts seen in Keynes Tech, the lock-in period ending today as well. Mangalam, thank you for that update from the FNO desk. The big talking point, though, in the city of Mumbai over the last couple of days has been the major disruption in CNG supply, and that supply pipeline from GAIL was damaged on Sunday morning. And to discuss this and more, we spoke to Ashu Singhal, the Managing Director of Mahanagar Gas, after the major disruption seen all through last evening and including a better part of today as well. Listen to what he had to say.
As a measure, we have to immediately start emergency response plan. And in that plan, we have asked our industrial customers to shut down and go to the alternate fuels. And similarly, we have given the first priority to domestic pipe natural gas, and that is remain unaffected all through on Sunday or even today or Monday, Tuesday also. Thereafter, we have got around 390 CNG stations in Mumbai and nearby areas, out of which 230 are operating and 160 have been shut down because of non-availability of gas. So some of the gas we have diverted from other CGS stations through the looping network and redundancy network. So we are trying to have minimum impact on CNG as well, but the priority customers, that is the PNG, is totally unaffected and the commercial customers are totally unaffected. We sell around 4 million gas, 4 MMSCMD, million standard cubic meter per day, and around 2 MMSCMD comes from the Wadala station. So some of it we have diverted from other CGS stations. So around 40% volume loss has happened. And restoration, the pipeline has damaged piece has been isolated. Nitrogen has been purged. Now the cutting is going on. So that spool piece will be removed and a new piece will be added. And after that, nitrogen purging, some radiography testing, etc., and technical things will be done. And it is expected by today noon or afternoon, supply will be starting as normalcy will be restored by Tuesday noon time or slightly in the afternoon on Tuesday.
All right, that's an important story, and the word coming in from Mahanagar Gas is that the supply could be resumed by today noon or evening. So we'll keep tracking that for you. But for now, we'll slip into a short break. When we come back, we'll discuss the multiple block deals in our special segment, The Big Story.
for investment.
Welcome back. And just as we were mentioning at the start of the show, earnings season is over and block deal season has begun. And we've already had over $1 billion worth of block deals taken place today itself. Vivek is here in the roundup of all the stocks that saw some major transactions earlier in the day. Vivek.
Well, that's right. November 15th marked the end of, when companies could go ahead and report their Q2 results. And immediately after that, there was just a small break for a weekend, post which we've seen a whole host of block deals that have been launched. Today we've had almost 5 large block deals that have transpired, a few prior to market open and a few just at market open itself. The first and the largest one, of course, has to be Emphasis. Have a look at, the seller. The seller actually is the private equity Blackstone that held a little over 40% stake. They've trimmed stake by 9.5%. Size of the block closer to the 4,600. In fact, it will be slightly higher given the fact that the deal didn't actually transpire at the lower end of the price band, but very closer to the actual market price. The other stock, of course, was Paytm, 197 Communication. Again, this is early stage investors, SEF, Mauritius, SEF Partners and Elevation Capital. Close to 1,600 crore worth of shares is what they sold. And remember, there's a lockout of 60 days as far as further sale of shares are concerned. The third stock, of course, was Emcure Pharma. Again, here it's a private equity player, that's actually exiting. Bain Capital held close to 6.3% stake. They exited close to 2% stake. 500 crore block deal is what transpired. Another 90 days or 3 months before they can sell stake again. The other fourth stock, of course, was Blackbuck, also known as Zinca Logistics. Clutch of promoters exited stake, lockup of 12 months. Size of the block was closer to 240 crore. And ITC, while we don't know the actual sellers, close to 0.5% equity, almost 1,900 crore of shares actually exchange hands. So all of this put together, a little over $1 billion is what we've actually seen exchange hands in terms of block deal just in today's trading session.
That's a big number, but I believe there would be more action for you tonight as well. But we actually get all these details coming out, Vivek. Thank you so much for joining in. And the action never stops, earnings or no earnings. So we'll keep getting that for you as well. But it's time for a short break. We'll put the spotlight on the latest listing, PhysicsWallah, and also talk about WeWork. That stock too is buzzing in trade today. Welcome back. You're still tuned into Trading Hour. Well, there's some more recovery that is underway for the Nifty. It is down just 58 points as we speak. When we started the show, it was down around 100. And if we talk about the stocks which are leading to the recovery, M&M, Eicher Motors, we do have Axis Bank as well. So some of these auto names are recovering from the lows of the day. Look at that. M&M reached that today's high but has come off from those levels as well. The Tata Steel as well, which is leading to the gains that we are seeing from the lows, and JSW Steel. So watch out for the metal index as well, because these are some names which are leading to the recovery that we are seeing in the Nifty as we speak. But there's no dearth of action that we're seeing in the primary markets as well, because we do have a new kid on the block. Physicswala made its D Street debut today. Upasana is here with the listing details and also the key takeaways from our chat with the management. Upasana?
Well, certainly it's been a strong debut for the company. It has listed at a 33% premium, surpassing the market expectations. Company has listed at 145 per share versus the issue price of 109. Now, company is a leading Indian edtech player specializing in test preparations for various competitive examinations such as NEET, IITG. Now, coming to the industry outlook, the Indian education market is a dominant global sector, is what the brokerages are saying, and they are also projecting a significant CAGR of 10% for the upcoming next 5 to 7 years. Now, company joined us after their listing today morning, and here are some of the important key takeaways. Now, the company aims to bring access to good education to under-penetrated areas in India. It is guided that it will turn profitable in less than 12 months from now. In terms of revenue mix, it has guided that the revenue mix is likely to remain skewed towards the online business, which currently contributes nearly 52% of the overall share. In terms of revenue growth guidance, it has given a guidance of 30% for the next few years, and the key concern, that is the attrition of the company. On that front, company says that the attrition is likely to see a sharp fall in FY26. So all in all, these are the key details given to us by the company.
Interesting. 37% higher now, 150 for Physicswala, a market cap of well over 43,000 crore rupees. And since we are on the subject of new listings, another recent one was WeWork. It received an initiation today from Jefferies, Sonal, and they are projecting some healthy upsides here as well.
They are. And, you know, briefly, the stock also crossed its listing price, which was lower than the issue price, but it is back below that level now. So 639 on WeWork India. Jefferies is bullish. They have initiated a coverage with a buy rating and a target price of 790. That's big upside from current levels. It is India's largest flexible workspace operator by revenues. Do remember, we have Office, which is listed. There's Smart Workspace Solutions and IndiCube as well, which are the others in the listed space. At 17% CAGR, the flexible workspace stock is growing at 2 times what we are seeing in the office space. So they expect it to grow faster than the commercial real estate as well. Total revenue CAGR of around 22% over the last 2 fiscal. It was driven by combination of surge in demand for flex office space, which was around 66%, and also growth in their rentals, which were around 33%. And if we adjust for operating leverage, if we look at operating leverage, the adjusted EBITDA that grew from 14.5% to 19.2% in FY25, which is what they like. And they now project revenue CAGR of 22% and EBITDA CAGR of 28%. This is as per IGAP, which is the other accounting standard. Capex cost per desk is at 1,35,000 rupees, which basically implies 250 to 300 crore of expenditure that they'll need to make for growth. But how do they fund it? Jeffrey says they have enough cash flows. They have cash flow generation of 300 crore rupees, which is already seen in the last 3 years. They've reduced debt from IPO proceeds as well. So they're quite bullish on this name, up 4% as we speak.
790 rupee price target for WeWork India, currently below its IPO price of 648. Take a short break. Put the spotlight on Neogen Chemicals on the other side in our special segment Under the Lens. Stay tuned. Welcome back. It's time for Under the Lens. Sonal has hopped across to the wall to tell us more about Neogen Chemicals. Sonal.
Thank you so much for that. Well, Neogen Chemicals, it is under the lens today. The stock, remember, surged over 10% yesterday, but that bounce comes after a tough stretch. It's still down 8.5% over the last 1 month, and in this year itself, it is down around 29%. Now to the business. The company is a key supplier of agrochem and pharma intermediates with strong capabilities in bromination, chlorination and other chemistries as well. But the earnings picture this quarter was mixed. Revenues, yes, they grew 8% on a YOY basis to 209 crore rupees, but the EBITDA fell 13% to around 30 crore rupees, and the profits, they fell even more. They were down 69% to just 3.4 crore rupees. And if you zoom out and talk about the bigger picture, the trend is telling. Revenue has inched up steadily. 686 crore rupees is what we saw in FY23. It reached FY25 levels of 778 crore rupees. It was around 691 crore in the previous year as well. And in the first half, around 395 crore rupees. In terms of EBITDA, that number should also come up for you. It has reached levels of 136 crore rupees in FY25 and now at 61.5 crore rupees. Profitability, however, hasn't kept pace so much. Profits at 13.7 crore rupees in the first half, which compares with 35 crores in FY25, and it was as high as 50 crore rupees in FY23. Now, the key talking point has been the battery chemicals business. The street was very bullish on it, but it is now an overhang because the management now says they won't hit the earlier target of 300 crore rupees revenues in FY26. The reason? Delayed electrolyte orders, largely because Ola's gigafactory ramp-up has been pushed out. And the ramp-up now shifts to Q4 of FY26 with meaningful volumes only from second half of FY27. But there is a silver lining to this because the company expects a very strong demand cycle kicking in from FY27, and that is what maybe the street liked as well. With battery chemical revenues projected at 400 to 500 crore rupees in FY27. On the base business, which is X of the battery business, they expect FY26 revenues at 850 crore rupees. Their capex remains quite heavy. 620 crore is already done in this year and another 500 crore is planned by the year end as well. In terms of that, the capex will be done, but the peak gross debt is expected to hit 1800 crore rupees in FY28, and they will see a lot of growth in FY28 because of their battery chemicals business as well. Let's talk about the balance sheet metrics now. Working capital days have improved slightly from 129 to 123. Return on capital employed, however, stands at that modest 9% mark for FY25, and they do have a lot of capex and expansion coming up as well. On the ownership front, promoters hold 51.23% stake, which is reduced over years. Mutual funds at 22.76%, and FPIs also hold around 5.15% stake. But the valuations remain very steep. The stock trades at 133 times FY26 earnings. Maybe when the battery chemicals growth kicks in, this valuation could go down, but that is something that the street is closely watching out for.
It's no longer a surprise, right? Stocks trading at 100 plus PE. Sonal, thank you for putting Neogen Chemicals under the lens. By the way, the recovery continues from the lows of the day for the index. Now just 30 points lower is where the Nifty stands, heading back towards that 26,000 mark. And the mid-cap index too has recovered significantly from the lows of the day. And good recovery seen on the index. The Dow futures, though, that was the one that started this sell-off from the intraday highs in the morning. They are too still 150 lower, but significantly off the lows of the day. Just pull up Aether Energy before we call time on the show. That stock has seen a bit of a spike in the last few minutes, 4.5% higher on Aether Energy as well. Take a leave on this edition of Trading Hour from Sonal, me and the team. Thank you for watching. Halftime report on the other side.
Stocks see a broad-based decline thereafter recovery from the lows on account of fading optimism in AI. Realty and metals are big losers even as financials hold steady and continue to rise.
The end of earnings sparks a block deal rush with 5 such transactions mopping up around 8,800 crores. Emphasis Paytm, ITC, Emcure Pharma and Zinca Logistics see pairing of stakes.
Stock of Physicswala lists at a hefty premium of 33% to its IPO price. The bootstrap startup focused on offering affordable education boasts over 300 centers, hopes to grow at a 30% clip and turn profitable in the next 12 months.
The stock of Grow owner Billion Brains Garage Ventures scales to 85% above its offer price in what some see as a rationality-defying bull run. CNBC-TV18 studies key metrics of India's #1 brokerage by customers for answers. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Manglam Malu. Well, it's turning out to be a session where we are seeing some amount of red on the screen. This is after 6 consecutive days of gains for the markets. So some amount of profit booking is not something that, is completely surprising at this point in time. We do have, the indices such as the Nifty Bank, the mid-caps, which really scaled to record highs. So maybe some amount of profits being taken off the table, par for course.
Yep, par for course. But the interesting part is, 6 days of a rally has led to this buy on dip sort of sentiment that has played by. And which is why from the lows today, the Nifty has actually recovered almost 100 points. So, where it goes as it moves towards that 26,000 mark will be extremely crucial to track, given that it's options expiry, weekly options expiry that plays out in the afternoon as well. But suffice to say that there has been a strong amount of recovery from the low. So as soon as the Nifty moves towards that 25,850, 25,800 sort of mark, we've seen recovery. And this one understandably has been led by the Nifty Bank, which continues to hold around that 59,000 mark after hitting a fresh record high in yesterday's trading session. Some further purchase on that. And some non-banking names as well, which are doing extremely well from the frontline end. We have Bharti Airtel, which is among the top Nifty gainers. Asian Paints, ever since its numbers and ever since Rakshit Hargave's exit from Birla Opus, that stock's up 16%. So a big move is what we're seeing on that counter. And a couple of these financials, non-banking financials doing well too. HDB Financial for one and Shriram Finance stand out as gainers. But a lot of the movers and shakers that we're tracking today, one of them definitely is GMR Airports. Vivek joins in first up. Vivek.
Well, that's right. So GMR Airports, remember, came out with a very strong set of numbers. The higher tariff that the company has received in terms of dial or the Delhi airport is something that has aided the operational performance. And today, very interesting report from Jefferies actually has gone ahead and further aided the up move. So Jefferies, has gone ahead and raised the target price to 115 rupees a share from their earlier 108 rupees. They've raised their EBITDA estimates by 3 to 7% as they believe that the outlook for the company's earnings profile is improving. What they're saying is that GMR presents a unique blend to play utility as well as it is a consumption business model. The standout EBITDA beat in Q2 was despite soft traffic, and they believe Q2 was largely driven by newer tariffs, strong non-aero growth, as well as scaling of the adjacent businesses. Traffic dipped due to Delhi upgrades as well as airline capacity cuts, but they believe H2, there will be a significant rebound as far as traffic growth is concerned. Along with that, they believe yields benefited from tailwinds both in the retail as well as in the duty-free segment. The blended aero yield per passenger actually grew 69% on a year-on-year basis, and the non-aero yield per passenger grew 17% on a year-on-year basis. The company actually has gone ahead and given a formal guidance that targeting minimum non-aero revenue growth at 14 to 15% year-on-year. And on the back of that today, one of the top gainers, that is GMR Airports.
Yes, absolutely buzzing around in today's trading session, up around close to 5% odd. But hold on, Vivek, Emcure Pharma is the other stock that you're tracking on the back of a large block deal that's taken place.
That's right. So earlier, just at market open, you saw close to 500 crores worth of equity change hands as far as Emcure Pharma is concerned. Last evening, we managed to get access to the term sheet. So BC Investments, an affiliate of Bain Capital, remember they held a little over 6% stake in the company at the end of Q2. They went ahead and trimmed close to 2%. And the floor price for this particular deal was at a steep 7% discount. So now the interesting part is for further sale of shares, there's a 3-month hold-up or almost a 90 days of lock-in. But on the back of that, Emcure under a bit of pressure. This is due to the large equity supply that it saw in the trade today.
All right, Vivek, thanks a lot for that. That's about MKR Pharma. Upasna joins in with more on Keynes Tech. Upasna, the numbers weren't particularly bad, neither was the commentary, but the stock is sharply lower today.
Well, certainly, Mangalam, as rightly pointed out by you, the numbers were good and even the commentary. But mind you that today marks as the day as the QIP lock-in has been released. Now, according to Nuvama Alternate Research, as many as 12 million shares have been freed up for trade, which were under lock-in for 1.5 years or even more, which is why we can see the sharp fall. Now, coming to the management commentary, it remains quite upbeat. Here are some of the important takeaways. Now, management sees 1,000 crore revenue from its OSAT business in FY27 is what they've highlighted today, and 60% of the OSAT capacity is tied up with clients is what they have emphasized on. Coming to the OSAT business margins, it will be significantly higher than the existing business margin is what the management has indicated. And mind you, in terms of EMS players, Keynes Tech enjoys the highest margins amongst its listed peers. Now, it expects PCB facility to be ready by the end of this financial year. And in terms of margin improvement, it believes that it will sustain going forward as well. And it has given a EBITDA margin guidance of 16% for FY26. So certainly the management is sticking to their FY26 guidance in terms of margin, and overall commentary remains upbeat.
Okay, all right. Keynes Technology, that stock down around 4.8% at this point in time. I just want to point out that overall for the bank Nifty is just about holding its head above the water, up around 15 to 16 odd points. But separately, we have the Nifty, which is down around 47 odd points at this point. The advanced decline ratio also nothing to write home about. So just about 1,560 stocks advancing to over 2,600 stocks declining. So there's a huge gap which is taking place in the advanced decline ratio this afternoon. But let's go across to Vivek. He's here to tell us about all the stocks that are moving around in trade today. Vivek.
Well, thank you so much for that. You know, we discussed three important ones, stocks that were moving around. And like you mentioned, in the broader end of the market, the advanced decline ratio quite skewed in favor of the declines. But some of the individual stocks that we're tracking today, Hutco, have a look at this particular NBFC. Among the top F&O gainers today, almost 2.5% higher. Cooled off a little bit. The other stock on the radar is PNB Housing, a ratings upgrade coming in for this particular name. Brokerage is quite bullish. That particular stock doing quite well as well. And a recent listing, that is Physicswallah, a very strong debut. After a while, we're seeing a company list at over almost a 30% premium. So Physicswallah, the other stock on our radar today, 37% higher for this particular name. Well, 5 large block deals that happened in the session today. Most of them reacting, with a negative bias. Emphasis, has recovered from the day's lowest point. But remember, it's been an underperformer going into this particular block deal. ITC saw large trade. Paytm almost a little over 2% equity. MKR Pharma we just discussed, and also Blackbuck, also known as Zinka Logistics. All of these names actually saw block deals take place in the session today. On the other hand, have a look at Keynes as well, one of the top NSE 500 laggards. And Aavas Financial, after a while, this particular stock on higher volumes is slipping significantly, the top mid-cap laggard in the session today.
All right, take that point. Thanks a lot for that, Vivek. With that, we'll slip into a short break. On the other side, we'll focus on Max Healthcare in our Insight Edge segment. The management spoke to us. Ekta tells us what she made of it. Welcome back. The Nifty continues to hold at the cut of almost 50 points, but a fair amount of recovery from the lows is what we've seen. The Nifty Bank at around that 59,000 mark as well. One of the stocks on our radar is Max Healthcare, and here's why. Because the company reported a good set of numbers, and we spoke with the management as well. So what were the insights that we got? Here's our special segment, Insight Edge. Ekta.
Well, yes, the numbers did come out a few days ago, but they did hold their calls. So there was a lot of takeaways which came in from the conference call, as well as what they have told investors. So a couple of brokerage notes, and then I'll get to what the management said. So UBS has written on Max Health. They have a buy and a target price of 15.50. According to them, the brownfield capacity addition will be driving growth and earnings. The management indicated that the issues related to cashless service for insurance patients has been resolved. Jefferies has a buy and a target price of 1,400. According to them, the CGHS rate revision adds 5% to the FY27-28 EBITDA, and new beds will be operationalized in phases, thereby limiting the negative impact on margins. Now, we did speak to the management earlier, and they had a couple of important takeaways. They said that they haven't had as many seasonal patients this year. There was an early Diwali as well, which probably impacted numbers to a certain extent. The CGHS revenue should be around 200 crores, so they should get an addition of around 200 crores. Remember that there are multiple procedures, around 2,000 procedures, where the rate has been revised to as much as 25 to 30% for some, and that came into effect in October. So that is going to help companies such as Max, which gets 10% of their revenue from CGHS. 80 to 90% of the CGHS incremental revenue should now flow into their EBITDA. They've also mentioned that they revise healthcare prices on an annualized basis. Medical inflation is currently at around 2 to 3% according to ABSOI, and the revision in hospital rates would be around 2 to 3% as it has been historically. They have indicated that they've pretty much, ironed out the issues with the insurers. And when it was, when there were issues with cashless payments, the patients actually just started paying in cash as compared to going for cashless payments. But let's listen in to the management. They spoke to us earlier this morning.
CGHS should give us, when it comes through entirely, because certain race, categories of super speciality have yet to be sort of streamlined in the government's portal. But once it comes through, and we are expecting it, the process to be completed any day, this should give us a fillip of over 200 crores towards the top line, and almost entirely all of it should flow to EBITDA as well. You don't revise prices of healthcare on a monthly basis. You typically do it on an annual basis, unless there's been a huge sort of increase in minimum wages or some sort of cost impact, which is sudden, that you would do it perhaps mid-year. But typically, and that would be 30th of September. Otherwise, you would wait for the end of the year. It would be the same as it has historically been, which is 2 to 3%.
All right, speaking about healthcare, just watch out for a couple of these life insurance names. SBI Life, for one, has moved to the high point of trade. In fact, it's crossed that 2,000 mark. 2,000 psychologically important from an SBI Life standpoint, largely because, it's been flitting around this mark for the last few trading sessions. So currently recovered off lows. This morning, there was a brokerage note that came in from HSBC as well. They've upped their target on SBI Life from their current level. So the stock holding well above that 2,000 mark. Let's see where it goes from here on. Historically seen a little bit of a resistance around that 2,000, but now that it's broken out, let's see how that goes. And backed by a brokerage note itself. Speaking about brokerage notes, we do have Morgan Stanley, which in its recent note said that 2026 is likely to be a macro trade in stocks. Most risks have come from outside India. Sudarshan joins in with more. Sudarshan, what's Morgan Stanley saying?
So there is an interesting note from Ridham Desai of Morgan Stanley, and he believes that going forward, or say government's policy action is basically strengthening the long-term story of India. And if there is any risk that we might see, it will come from outside, and 2026 is expected to be a macro trade in the stocks. Now, what will be the Sensex target? So as per Ridham Desai, 2026 and Sensex target base case is 95,000, and there is a probability of 50% in that, which implies an upside of almost 12% from current levels. In the bull case, which has the probability of 30%, target is almost 107,000, implying an upside up to 26%. And in the bear case, which has the probability of 20%, target is 76,000, and that implies downside of 10% from current levels. Now, if you talk about the sectors, preferred sector, first one is consumer discretionary. He says urban demand recovery will aid the consumption, and the recently announcement that government has made of GST cut, it augurs well for the sector. Second one is industrials, and the reason he is positive on backed by robust government capex and pickup in the private capex. Third one is financials, where deregulation, if government takes, it would be positive for banks. Neutral on consumer staples, fundamentals should improve as rural growth in the last few months has seen a major improvement. On technology, AI debate is hurting multiples, but he believes that it's not going to impact earnings in the foreseeable future. Amongst least preferred sector, first one is utilities. He's underweight given lack of cyclicality in the energy because he prefers domestic cyclicals over global cyclicals, healthcare because he's avoiding defense sectors, and materials because he's taking cyclical exposure via industrial. So we'll have to see over the next 1 year, it's 76,000 for Sensex or 107,000.
Okay, all right. Thanks very much for that, Sudarshan. So interesting note coming in there. We'll take a break on that note, but on the other side, full tilt on the markets continues. We have Sachitana Notikar joining in to give us a couple of his trading calls. Welcome back. Well, let's get talking about the F&O space. We have Manglam who's joining in to give us more details on what he's tracking in terms of the F&O statistics this afternoon. He's at the F&O desk. Manglam, over to you.
Well, if you look at the Nifty, it's been fairly range-bound, but it's recovered from the lows, and that's a heartening fact. So 25,950 thereabouts is where we are, and it's been led by outperformance that we've seen for the Nifty Bank. The Nifty Bank hit a record high yesterday. The mid-cap index is seeing some bit of profit booking after hitting a record high yesterday. The good part is that the Nifty has continued to, recover from the lows, even as we're facing supply a little around that 26,000 mark, a little upwards of that as well. If you look at the last 5 or 6 trading sessions, the lows on the Nifty come up for you on the screen. And, today's low of 25,877, extremely crucial. Yesterday's low of 25,906 tells you that the lows have been, gradually moving higher for the frontline index. Ahead of the weekly options expiry, the India VIX 2 is fairly contained. At one point, it was up around 4-5%. Now it's come off a little bit, even as the markets recovered from the lows, telling you that maybe the street believes that this range continues as well. And the range has moved higher. How do I say, why do I say that, and how do I decipher that? A couple of things. One is an hour ago, we had the 26,000 call and the 25,800 put fairly active. Right now, the put writing has moved higher to 25,900, even as the 26,000 calls have been seeing a fair amount of writing. The second part, towards the options expiry day, we see a lot of straddle writers, a call and a put together. About an hour ago, the most active was 25,950 call and 25,850 call and 25,850 put. But now it's the 25,950 call and the 25,950 put, both of them extremely active, telling you that the option writers are hoping for support around 25,870 and some resistance around 26,030, 26,040 thereabouts. Today's low extremely crucial. Below that is the 20-day moving average of the Nifty. Fresh shorts are seen on a couple of these stocks like Ireda and 197 Communications. Remember, that's Paytm, saw a large trade in the morning as well. But suddenly, we've seen a lot of spurt in long positions in PG Electroplast. That stock's moved to the high point of trade with a lot of OI backing it. So that's telling you that, it's fairly well speculated in the F&O space right now on the long side.
Okay, all right, Manglam, thanks very much for that. Sachidanand Utikar joins in to discuss the technicals now. Sachidanand, thanks very much for joining in. Well, it is a market where we're seeing some amount of red on the screen, but this is after 6 days of gains on the trot for the markets. So how would you approach today's Nifty dip? Would it be a buy?
Good afternoon, Ekta. Good afternoon, Manglam. I think going by the trend, clearly we have seen that for 7 consecutive trading sessions, Nifty has maintained a positive close. And if you look at the data closely, it has managed to, recover above and close above its 5-day exponential moving average support. Now, this particular support for the day is placed somewhere close to around 25,900 even for today's session. And the way the ADX has been turning up, it is about to break above that 25 level. So overall, the structure has been very healthy. It's a classic buy on decline sequence, which is ongoing. We expect this particular progress to continue, and we are anticipating that eventually the Nifty could scale towards 26,330. But at least for the day, 26,050 looks like a very significant, resistance. So we are not expecting a closing above this particular level, at least from today's trading session. But on the lower side, it has been finding meaningful support somewhere close to around 25,900. So in case if we see a decline, I think that decline could be again healthy. We continue with our stance of, deploying long positions. One can keep a stop loss at 25,840 on closing basis and build significant aggressive long positions once we see a breakout about that 26,050 mark. Eventually, we see the Nifty scaling towards 26,330.
Okay, 26,330, that's where you see the Nifty eventually scaling. Specific stocks, both frontline as well as broader market?
From the front line, we are liking TCS now. Now, if you look at the last couple of weeks, we have already seen a very steady, silent up move developing in this particular counter. It has started trending above its 50-day exponential moving average support, which is placed somewhere close to around 3,060. But if you look at the daily scale, it looks like a classic rising 3 formation. The overall, sequence looks very affirmative. We may see this particular stock scaling towards, 3,200, 3,250 kind of level. And hence, we have recommended this to our clients as well. One can keep a stop loss at 3,065 on closing basis and build, long positions in TCS futures. for a positional target of around 30 to 50. The other stock which has hit our radar is Mazukao Dock. Now, if you look at the overall performance of the stock in the last few trading sessions, we've already seen a V-shaped recovery. We saw a very strong base building formation somewhere close to around 2650. A piercing line candlestick formation was established there. It reconfirmed the base, and now the stock is trending near its 50-day exponential moving average, which is placed around 2800. So eventually we see this rally getting extended towards 3010 levels, which is the V pattern target zone. But from a trading perspective, one can expect an immediate swing towards 2885, and hence we are recommending building long positions with a stop loss at 2776 on closing basis.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us, giving us all of your strategies. We'll take a short break. But up next, commodities. Manisha Gupta will join in. She has with her Colin Shah, the MD of Kama Jewelry.
Welcome back. Joining us on the show now is Colin Shah, he's MD at Kama Jewelry. Colin, hi, thank you so much for joining in. First of all, your sense on the prices itself, because they continue to be very volatile. Looks like gold is going to break $4,000 an ounce anytime from now. How would you look at the very high volatility in gold prices? And how are you reading all of those global reports, which still suggest that 4,500, 4,800, 5,000 by next year end is a possibility?
Thanks, Manisha. So gold has been volatile, will continue to be volatile. This global uncertainty that we've been seeing continues over the last, 3 quarters now since Liberation Day, as Trump calls it. So I guess we are not seeing any pause, I would say, in tariffs, in the Russia-Ukraine war, in what's happening in Israel. So with everything being the way it is, gold is the safest haven and looks like it's on its way to $5,000 for sure. Maybe it's in the next 12 months, 15 months, but it's on this northwards journey. So that does make trade extremely volatile. Retail in India has become challenging, especially in terms of volume. Volumes we saw were significantly down Diwali time, though retailers made it up on the value side, but the consumer is holding back on the number of grams they're wanting to buy. At the same time, we are obviously seeing a large part of everyone's portfolio moving into ETFs, digital gold. So gold continues to be, in a strong place.
Colin, how are you looking at the kind of import data that we have seen for the month of September and now October as well? As compared to last year, same month, we've seen imports kind of really jump up, whether it has been about gold or silver clearly continues to be a very, very strong contender there.
See, over here, I guess there will be monthly anomalies. So, that continues to happen, where we see one weak month and one strong month. But overall, if you look at the year, I think the entire financial year, we'll probably be seeing tonnages more or less where it was last year, but a greater chunk going into investment. So jewelry as volumes is coming down 10-15%. The value, because it went up 35-40%. So everyone's making up, their value turnovers, whatever they were doing. But there is a greater chunk now going into bars, coins, bullion, directly into savings.
It is. Colin, how are you also looking at the studding part of it? I mean, as you said, jewelry in numbers, in sense of value, perhaps would be the same volume, as you said, 10-15% of a decline there. But within this as well, is it going to be about budgeted? Is it about light? Do you see bridal numbers continue to be as strong?
Bridal will be strong because now in the next 6 months, obviously, is the wedding season. So, every year we do see December to March being quite a spike. The consumer was expecting, I think, some amount of correction post Diwali, which did not happen. So there was some kind of, holding on to their purchases, hoping that the pricing would correct and they'll get a deal closer to the wedding. But that's really not happening. So I guess we'll see a spike in sales from December to March period going into season. But having said that, volumes are subdued. Values will be made up.
How are you also looking at the exports number? Because that also continues to do well with the kind of other markets opening up and the rerouting that we've seen happen for US as well. What really seems to be doing well within that segment?
US continues to be strong. The consumer, in spite of inflation and everything that we're seeing, I guess the sales at the retail counter, even as of last weekend, haven't been very weak. Let's put it that way. The industry was expecting a little softer Christmas, but in the run up to Christmas, it seems like numbers will be more or less what they were last year. So it seems that tariffs have had its effect on supply chain and how the jewelry gets to the US and the counter, and everyone's had to jump through hoops, just to make, I guess, this whole thing happen. But at the end of it, consumption still is strong. Lab grown is in a good place. Natural also, after, I guess, the volume drop that we've seen over the last 2-3 years, seems to be steady this year. And actually, in the larger stones, especially 2 to 5 carats, there's also been a little, upside on the pricing. And even in the very small goods, we are seeing strengthening or a little going up, especially after Diwali, as manufacturing in Surat is down. So natural also seems to be in a good place. Lab grown is okay. And the jewelry business overall, especially on the US side, is quite strong. Coming to the brands, interestingly, they've had a very strong last quarter. The Richmond Group, LVMH, all the larger companies. So it seems like the luxury space and, the rich are getting richer, like and there's no, I guess, dearth of money at that very, very top end of the market. So if you see large stones, large emeralds, large rubies, all kinds of luxury, whether it's, I would say, any country in the world, that continues to be extremely strong, actually.
Wow. Okay. Okay, all right. The rich seem to be getting richer. Thanks very much, Colin, for taking us through that conversation, and Manisha as well. Well, the other example of the rich getting richer definitely is in the stock, in the Physics Wala listing today. So 38% increase is what we've seen in terms of the price post-listing. So Physics Wala, as you can see, has just zoomed ahead in today's trading session, and taking it with it is Grow, which is up around 8.5% at the high point of today, already picked up around 27% this week. We'll do one thing. In fact, we'll stick with this story. We'll take a break, but on the other side, we'll focus on these recent listings, Physics Wala and WeWork. More details on both of these coming up. Welcome back. Well, for the markets, it's a bit sluggish. So we have the Nifty, which is down around 70 odd points. But one which is really defying gravity is Physics Wala. That stock is up around 38 odd % at this point in time. And if you look at it, it was subscribed quite modestly. So it was only 1.9 times in terms of a total subscription. But it's really taken the market by storm in today's trade. But to give us more details about this particular education company, Upasna is here with the listing details and the takeaways that we had with the management earlier today as well.
Well, overall, it's been certainly a strong listing. The company has listed at a 33% premium, surpassing the market expectations. It listed at 145 per share versus the issue price of 109 per share. Now, company is a leading edtech player specializing in test preparation for major competitive exams like IIT-G, NET and various others. Now, looking at the industry outlook, it remains quite robust is what the brokerages have also highlighted. The Indian education market is a dominant global sector and it's projected to expand nearly at a CAGR of 10% going forward for the next 5 to 7 years. Now, management joined us post-listing and here are some of the important takeaways highlighted by them. Now, company aims to bring access to good education to under-penetrated areas in India. It has guided it will turn profitable in less than 12 months from now. Now, coming to the revenue mix, it has guided that it will remain skewed towards the online business, the contribution of which is nearly about 52% as of now. Company has also given a revenue growth guidance of 30% for the next few years. Now, coming to attrition, which is one of the key concerns the management has highlighted, it will certainly see a decline in FY26. And overall, coming to the inorganic expansion, the company is not planning for anything as of now is what they have indicated. So overall, management commentary remains quite upbeat and a strong debut.
A strong debut indeed, Upasna. Thanks a lot for that. In fact, earlier today we spoke with the management. Prateek Maheshwari, who's the co-founder and whole-time director of Physics Wala, joined us, and this is what he had to say.
Like, we are on a mission, and that mission is more important. That access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance, and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms. And what is more important is the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where where 3 to 6 months there is an intense training program crafted by Alag is actually solving this problem completely. But you will see a sharp dip in this number this year. A lot of headroom to expand in domestic market, and no as such big plans for inorganic expansion.
All right, no big plans for inorganic expansion. Profitability is less than 12 months away, and good growth is what they are foreseeing over the next sustainable years, over 30%. But another stock, recent listing, which is doing extremely well today is WeWork. In less than a month from listing, we've gotten a note coming in from Jefferies, a bullish note. Sonal joins in with more details on that one. Sonal.
Well, yes, the stock is buzzing in trade, but do remember it is still below its listing price. The stock is on our radar because Jefferies has initiated coverage on the stock with a buy rating, and the target price is 790 rupees a share. Now, do remember it is India's largest flexible workspace solutions provider, which is by revenues in the country and in the listed space as well, of course. At 17% CAGR, Jefferies says flexible workspace stock is growing at 2 times the pace of the office stock. So basically, co-working space sector in general is growing faster than the commercial space, and the total revenue CAGR of 22% for this company over the last two financial years was driven by a combination of two things. First, they could increase the rentals, that's the average rental per unit, and also because of demand for flex office space grew considerably, which contributed around 66% of the total growth. The operating leverage led to adjusted EBITDA to grow as well from 14.4% to 19.2%, which came by in FY25, and they expect this trend to continue as well. So basis IGAP accounting, they expect the revenue CAGR to be around 22% and EBITDA CAGR to come in at 28% for the next 3 fiscal years. And also the capex cost, which is coming currently per desk, is at 1,35,000. This implies that going forward, the capex could be around 250 to 300 crore rupees in terms of expansion. Do they have that cash? They have been continuously improving that number. They already saw cash flow generation of 300 crore rupees in the last 3 fiscal. They've been able to reduce debt with the IPO proceeds, and Jefferies believes this is a trend which would continue going forward as well.
Okay, all right. Thanks very much for that, Sonal. Well, we'll take a short break, but here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at just your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.
Welcome back. High flying is the GMR Airport stock. It's up 5% right now, a big mover in today's trading session. In fact, this year itself, it's moved around 30% after a big move that we saw in the previous year. So that's about GMR Airports. But guess what's flown faster and higher than GMR Airports? The Grow owner share, which is Billion Brains Garage Ventures. It's 85% above its offer price. In what seems like a rationality-defying bull run, the shares of Grow have nearly doubled since listing in just the last few days. Hormaz joins in.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark every time someone hit a huge six. Going, going, gone. However, this latest listing on Dalal Street has been growing some more, at least in terms of stock price. Now, it has been 5 days since Grow listed, and the stock has nearly doubled from its IPO price of $100. But how does the latest Dalal Street entrant stack up when it compared to peers and unlisted ones as well? Now, on the revenue front, Grow's top line is lower than peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform, and therefore it stacks well above the other two names. But its average revenue per user is less than half of Angel One and even well below Zerodha, whose ARPU is well above 10,000 rupees, as you can see on your screens. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow 25 to 30% and costs to grow by 15 to 20% over the next few years. Now, basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees by FY30. Its margins could grow from 63% to 80%, and its profits could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio, or the price to earnings growth ratio, that comes up to around 1.63. Now, this is basis a 37% profit CAGR and based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it comes to its value. Now, at the highest point of the day today, Grow was valued at well over 1.1 lakh crore rupees, which is the sum total of the other three put together here, Angel One, Motilal Oswal and Nuvama Wealth. Now, the management spoke to us earlier, and they also mentioned about how they plan on growing the MTF book, and that lending business will become bigger than the personal loan business as well in the next few years. Now, with a healthy growth guidance, expansion to new businesses, Grow's ARPU may also see some uptick as the clients in different verticals grow as well. Whether that can help it catch up with peers, only time will tell. For now, the next major growth trigger for the company comes on Friday, when it reports its first earnings post-listing on the 21st of November. That's Grow for you. It has made quite some noise in the first few days of listings, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Okay, all right, absolutely. Growing, and growing. That's what you said, Hormuz. That's thanks very much for that. And on that note, we need to actually wrap up on Halftime Report. Business Lunch will take all of the action and all of the buzzing stocks forward. Stay tuned.
Stocks see a broad-based decline after a sell-off in the US overnight on fading of some AI optimism. Realty and metals are some big losers even as financials hold steady. The end of the earnings season sparks a block deal rush with 5 such transactions mopping up close to 9,000 crore rupees. Emphasis Paytm, ITC, Emcure Pharma and Zinka Logistics see pairing of stakes. The stock of PhysicsWallah lists at a hefty premium of 33% to its issue price. The bootstrapped startup focused on offering affordable education, boasts of over 300 centers and hopes to grow at a 30% clip and turn profitable in less than 12 months. The stock of Grow owner Billion Brains Garage Ventures scales to over 90% of its issue price in what some see as a rationality-defying bull run. CNBC-TV18 studies key metrics of India's #1 brokerage by customers for answers. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. It's the weekly expiry of the NSE contracts today, and on expected lines, we are witnessing some choppy moves for the indices. The index currently at 25,950. Sudarshan highlighted this in the morning that 25,900 is a very important level to watch out for on the index on the downside. For now, the index has managed to protect that level. It's taken support there around about 25,880 levels and has reversed from there. So 60 points lower on the Nifty. The same can't be said though for the Dow futures though. It is the Dow futures that sparked that initial sell-off at the start. At one point, the Dow futures were down almost 300 points. And still, after a brief recovery in just a few hours earlier, that recovery has been sold into and the Dow futures are back down trading 250 points lower. So the sell-off on Wall Street is likely to continue in today's session as well. At least that's what the futures are indicating. But for now, of course, you can't, for now, the index is holding on to some important levels, but that does not take away from the fact that there is a lot of stock-specific activity, particularly the newly listed names. PhysicsWallah, of course, very healthy listing in today's session, 33% premium compared to its issue price and still holding on to gains of around 38%. The surpassed its market expectations as well. It listed at 145 rupees and the listing price, the issue price was 109. Now, the stock gained over 40% as soon as it listed. And the stock has now a market cap of well over 43,000 crore rupees. Now, earlier we spoke to the management about their path to profitability and the overall outlook going forward. Listen in.
We are on a mission, and that mission is more important. That access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So, so continue to make impact in the student's life as well as we will be utmost responsible, to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow, more than 30% in upcoming years. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms, and what is more important is the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where 3 to 6 months there is an intense training program crafted by Alag, is actually solving this problem completely. But you will see a sharp dip in this number this year. Lot of headroom to expand in domestic market and no as such big plans for inorganic expansion.
Well, that was PhysicsWallah for you, the listing of the day. And of course, speaking of new listings, we just highlighted Grow a few minutes earlier. That stock too, still 90% higher from its issue price of 100 rupees a share, another 8% in today's session. So good going for Grow as well. There's some flashes on your screen with regards to Bombay Burma. It's terminated its agreement with MSTC. And the stock now has surged to the highest point of the day as MSTC was signed as the selling agent for the for selling its immovable properties or land, and that agreement has now been terminated effective today itself. So 9.5% higher on Bombay Burma. The stock was doing well at the start of the session itself, so it's managed to hold on to those gains, has Bombay Burma. But result season is over. Block deal season is here, and we had 5 such block deals taking place today, mopping up over $1 billion in those transactions. Vivek is here to summarize all of those transactions that took place earlier in the day today. Vivek.
Well, thank you so much for that. So essentially what has transpired in just the first half hour of trade, or even earlier than that, we've actually seen over $1 billion just via block deals actually getting executed. Now, quite a few large blocks as well. The first one, of course, being Emphasis. Yesterday afternoon, we told you about how there was likely going to be a very large block deal coming in from, the promoter entity, which is a private equity, Blackstone. 4,600 crore, a 6-month lock-in for that particular name. Paytm, again, quite a large block deal, 1,600 crores worth of shares. Saif Partners as well as Elevation Capital, a 2-month lock-in for that particular name. Emcure Pharma, again, here it's a private equity. Bain Capital exited, close to 500 crore worth of equity. 3-month lock-in for this particular name. Blackbuck or Zinca Logistics, a smaller block deal of close to 240 crore. Clutch of promoters, making a partial exit. Lockup of close to a year. And ITC, this particular name, while we don't have the exact details of who exactly sold, but last couple of days we've seen high volume-based activity in this particular name. A block deal today valued at a little over 1,900 crores is what transpired. So totally almost 8,800 or close to $1 billion worth of block deals is what we've seen in the session today. And what we understand is that quite a few large blocks are in the offing as well.
Block deals galore on Dalal Street just as the earnings season has come to an end. Vivek, thank you for that. Now, Kaynes Tech is another stock that's under pressure today. The results were largely in line with expectations, although the revenue was a slight miss. We did speak to the CFO of the company, Jairam Sampath, earlier in the day, and he spoke about their outlook going forward. Listen in.
See, I wouldn't be surprised if we exceed about 1,000 crores in OSAT in FY27. Though earlier projections were about 1,500 crores in FY28 out of the $1 billion that we're talking about. So in terms of Indian rupee, I think next year will probably come somewhere near or even exceed about 1,000 crores or so. And also there'll be other clients addition, which will be in the advanced packaging area too. So right now we've got 3 clients in the modules area. Margins, I think good news is that it's looking up a little bit because of the mix of different businesses that we get. So we are fortunate that in the order book as well as in the actual businesses in the first half too, we have had a margin improvement. And I think this will sustain in the near term, maybe a few years or so. And next year we get the newer businesses coming in. So they also are, from the perspective of margins, they are higher. Of course, we are always concerned about the quality of business. It's not just the margins, but also the technology that we have to employ to do it.
5.5% lower on Kaynes Technologies. Of course, the management interaction not being the trigger, but the shareholder lock-in came to an end today, and that is what is putting pressure on the stock. But Morgan Stanley came out with its 2026 outlook earlier in the day, and it said that that year is likely to be a macro trade in stocks. It added that the most risks to the Indian equities come from outside the country. Sudarshan is here with more, and what Morgan Stanley is projecting as the Sensex target. Sudarshan.
So as per Ridham Desai of Morgan Stanley, long-term story of India is gaining strength with government's policy action. And if there is any risk that we might see, it would come from outside, and 2026 is likely to be a macro trade in the stocks. On Sensex, 2026 end target, base case target is 95,000, implying an upside of almost 12% from current levels. And there is a probability of almost 50% for this. In the bull case, where the probability is 30%, target is as high as 107,000. In the bear case, target is 76,000, and their probability is 20%. Talking about the sectors that Ridham Desai prefers, on top of the list is consumer discretionary, where he says that urban demand recovery will aid the consumption, and GST rate cut that government has announced recently will augur well. Next one is industrial, with robust government capex and the pickup in the private capex will be positive for the sector. For financials, he believes that deregulation that government has been talking about will be taken positively for banks. Some of the sectors that he is neutral on, first one is consumer staples, where fundamentals could improve as over the last few months we have seen a pickup in the rural growth. Next one is technology, where he believes that AI debate is hurting multiples, but it's unlikely to impact or unlikely to have an impact on the earnings in the foreseeable future. Amongst least preferred sectors, on top of the list is utilities, where he's underweight given lack of cyclicality. Second one is energy, because he prefers domestic cyclicals over global cyclicals. Healthcare, he's avoiding defensive names. And last one is materials, because he's taking cyclical exposures via industrials. We'll have to see over the next 1 year, it's 76,000 on the downside, or on the upside, we hit 107,000 for Sensex.
The bull case target is music to the ears for a lot of the bulls, 107,000 on the Sensex by the end of next year. Sudarshan, thank you for that. As we take a short break, here's some good news for our viewers. India's business news leader is now just a click away, and that is CNBC TV18's all-new app, where you get instant access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app from the App Store or the Google Play Store, or even scan the QR code that comes up on your screens. Take a short break. More news and updates on the other side. Welcome back. Now, the other major talking point in Mumbai has been the severe CNG shortage that has disrupted public transport across the city in Thane and in Navi Mumbai for the third consecutive day. My colleague Santya joins us to give the latest updates on this. Santya.
So the third consecutive day of CNG supply disruption has made the situation extremely difficult and challenging for office goers and other commuters in Mumbai and the Mumbai metropolitan region. We are in Mumbai's Santa Cruz area right now. This is a queue for the auto rickshaws here outside Santa Cruz railway station. Let me try and speak to some of the people. Sir, आप line में कब से खड़े हैं यहाँ पे?
I am here from last 10 minutes, so facing lot of issues. Because since yesterday, normally it takes 10-15 minutes to get an auto, but since yesterday we are taking almost 40 minutes standing in the queue.
So yesterday also you took an auto from here?
Yeah. So yesterday it took me around 40-45 minutes to get an auto. Normally it takes 10-15 minutes. So seriously facing a lot of challenges and issues for reaching office.
Right. And right now also I can see that the line is all the way up to there, so it's going to take another half an hour at least.
Minimum half an hour, correct. I can see around 150 people are there, in front of me. So normally around 30-40 people are there, but today I think 150-200 people are there in front of me. So it will take minimum 45 minutes to get an auto.
Thank you so much. And the gentleman here is not alone, whether it's Bandra, Santa Cruz, Borivali, Goregaon, all these key areas from where commuters take auto rickshaws and Kalipili taxis to their respective workplaces or their respective destinations. All of these places have similar lines and people are having a tough time during this CNG supply disruption. And MGL and GAIL, they have said that the supply will be restored by this afternoon.
Santya, thank you for that update from the ground there. And Mahanagar Gas is the stock or the company that has been in focus. Now, the supply pipeline from GAIL was damaged on Sunday morning, and as a result of which we are seeing this disruption taking place. And to discuss this and a lot more, we spoke to Ashu Singhal, the managing director of MGL, after this supply disruption and on the road ahead. Listen in.
As a measure, we have to immediately start emergency response plan. And in that plan, we have asked our industrial customers to shut down and go to the alternate fuels. And similarly, we have given the first priority to domestic pipe natural gas, and that is remain unaffected all through on Sunday or even today or Monday, Tuesday also. Thereafter, we have got around 390 CNG stations in Mumbai and nearby areas, out of which 230 are operating and 160 have been shut down because of non-availability of gas. So some of the gas we have diverted from other CGS stations through the looping network and redundancy network. So we are trying to have minimum impact on CNG as well. But the priority customers, that is the PNG, is totally unaffected and the commercial customers are totally unaffected. We sell around 4 million gas, 4 MMSCMD, million standard cubic meter per day, and around 2 MMSCMD comes from the Wadala station. So some of it we have diverted from other CGS stations. So around 40% volume loss has happened. And restoration, the pipeline has damaged piece has been isolated. It has been, nitrogen has been purged. Now the cutting is going on. So that spool piece will be removed and a new piece will be added. And after that, nitrogen purging, some radiography testing, etc., and technical things will be done. And it is expected by today noon or afternoon, supply will be starting as normalcy will be restored by Tuesday noon time or slightly in the afternoon on Tuesday.
Moving on, with the budget approaching closer, the finance minister has begun pre-budget consultations with a series of stakeholders as part of the budget preparations. The first stage of consultations with the capital market participants have concluded, where sources say that participants sought lower securities transaction tax on cash trades as compared to derivatives. This will be followed by interactions with startups and the manufacturing sector. These interactions are expected to highlight issues related to market depth, funding access, regulatory simplification, and opportunities for scaling domestic production. I take a short break. More news and updates follow on the other side. Stay tuned. Welcome back. On to some global updates. White House economic advisor Kevin Hassett has said that they are very close to reaching a deal with India. Listen in to what he had to say.
What's going on with India? Just as an aside, in terms of a trade deal, we've been so close so many times. Were we ever close?
Yeah, we were for sure very close. I've spoken to the ambassador, and we've had visits, and I think that it's a complicated situation because of the interaction between what India does with Russia and what India does with us. And so I think we're still quite hopeful, but it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
And with that, we take your leave on this edition of Business Lunch. From me and the team, thank you so much for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. So far, we are snapping that 6-day winning streak. But yes, there is some recovery from the lows of the day. At a point in time, we were down 120. We're down 40 points right now. That recovery is led by Bank Nifty and some recovery that we're seeing in the auto names as well.
That's right. Good afternoon. Remember yesterday the auto index was one of the top gainers, especially two-wheeler stocks did quite well. But today, we have a lot lined up on the show. The market breadth is improving. So let's start off with the top headlines. The stock of Physics Wala lists at a hefty premium of 33% to its IPO price. The bootstrap startup focused on offering affordable education, boasts over 300 centers and hopes to grow at a 30% clip and turn profitable in under 12 months.
The end of earnings season sparks a block deal rush with 5 such transactions mopping up around 8,800 crore rupees. Emphasis, Paytm, ITC, Emcure Pharma and Zinca Logistics see pairing of stakes.
Kaynes Technology slips over 4% following a largely inline second quarter, although revenue missed estimates. The management tells CNBC-TV18 that margin improvement is likely to sustain and will be maintained around 16% in FY26.
Jefferies initiates coverage on WeWork India with a buy rating and a target of 790 rupees a share, expecting 22% revenue CAGR till FY28. The stock is up around 3.5%. All right, those are the top headlines that we are tracking. Of course, the bigger takeaway is that massive recovery that we are seeing from the lows of the day. That is there for you at the bottom of the screen as well. Around 200-point recovery on the Nifty Bank. The Nifty as well, seeing some recovery from the lows of the day as well. What is doing well in trade today? Of course, Bank Nifty because of the recovery that we have seen. But other than that, we do have some of these auto names which are also leading to the push from the lows. Realty, IT, metals, however, in the red and bigger cuts that we are seeing there as we speak. And the small cap index as well has been falling in a bigger fall than mid caps today.
That's right. Another set of stocks that are doing quite well is actually the mid cap banks. So have a look at a name like Federal Bank. That particular stock near the day's highest point. Some names from the Power Pack, a name like Torrent Power is doing quite well, has moved to the highest point of the day. But these stocks and a whole host of other stocks is what Sudarshan has on his radar. This is our special segment, Mid Cap Movers. And Sudarshan will take us through all of the mid caps that are moving around in the session.
So on top of the list is GMR Airports, which is reacting positively after a positive brokerage note. Jefferies has upgraded the stock, also has increased the target price. Kaynes Technology, the shareholder lock-in period has ended, basically 1.5-year lock-in period. On the back of the stock is down. Glenmark Pharma, after a management commentary because of the earnings, we had seen a major one-offs and the stock had reacted negatively. It has extended its losses today, also it's down 2%. Paytm is under pressure after a block deal of almost 1,700 crore. Physics Wala, what a listing. Company has seen listing with a premium of 33%. And since then, stock has moved only in one direction, that is upside. Some of the other mid-cap gainers grow. It's reacting as per its name. It's just only been growing and up almost 90% from the IPO price, as well as up almost 70 to 80% from the listing price. And rub-off impact we are seeing on the other brokerage names. 5 Paisa Capital is up almost 13% today as well. Sturds seeing a huge move today as well. It's up almost 7% with healthy volumes. And Gallant Spart, since the time company has announced its earnings for Q2, and in that profit had almost doubled. Stock has been moving only higher today. Also, it's up more than 6%. Amongst mid-cap losers, we have seen a fall in gold and silver prices. And on the back of that, Hind Zinc is down today, almost down 2%. Gabriel India had recently hit record high. And from that level, the stock is down almost 17%, and this entire down move has come in this month, and today also the stock is down 6%. Another name is Inox Wind is down today, and that is with healthy volumes falling almost 3%. GM Breweries, it's just like one day it's moving higher and one day it moves lower, and today the stock is down almost 6%. And last one on the list is Transformers and Rectifiers. Recently, first the news came that World Bank had barred the company from any bidding, but again World Bank had taken that order back, but today the stock is under pressure, down more than 5%.
Okay, all right. Thank you so much, Sudarshan, for joining in. Some interesting names there which are on our radar. And it also is a good time to get a technical check on the markets. Ruchit Jain from Motilal Oswal Financial Services is joining us now. Ruchit, good afternoon. The big question, of course, is will we see further recovery or we will snap that 6-day winning streak that we've been seeing? What are the charts suggesting now?
Yeah, hi, very good afternoon. Well, the broader trend still seems to be positive in spite of this, in between small corrections that we are getting. Initially, Nifty in the recent correction formed a support base around the 25,300 mark, which was at 50-day EMA. Now, post this up move, the support base has shifted to 25,700. So we can see that as the index is going gradually higher, the support bases are getting shifted higher. And even if you look at the broader market momentum, I think the large caps have good price volume action going on. Although there has been a relative underperformance from the small cap space, but since the good buying interest is seen in the large cap names, so we think that the markets are poised to go higher from current levels. 25,700, 25,800 would be seen as an important support. Any dips, if we get towards this range, that would be a good buying opportunity. And the recent high of 26,000, 26,100, which has been acting as a resistance, I think we should see the index surpassing those levels very soon.
Right. Take your point completely, Richard. And any individual trades that you have for our viewers today?
A couple of stocks that we like from current levels. One is Axis Bank. I know banking space, of course, has been the relative outperformer. We can see that and Axis within the entire private sector banking space has seen a good momentum. The 20-day MA has been acting as a support. So stock just seems to have resumed its broader uptrend after some consolidation. So one can buy with stop loss below 1240 for potential up move towards 1320. And Biocon is another stock which is looking quite positive technically. Last week, we witnessed a breakout from 4 years of consolidation phase, and that too supported by very high volumes compared to what we usually see on a daily basis. So 4 years consolidation breakout accompanied with very good volume. So this just indicates the start of a fresh uptrend in Biocon. So one can go long here as well with stop loss below 400 for potential near-term up move towards 460.
Okay, all right. Richard, thank you so much for joining in and telling us the next levels to watch out for on the Nifty and individual stock names as well. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Welcome back to Midcap Radar. Well, the recovery that you're seeing in the broader end of the markets continues to remain quite steady. A few names from the room AC segment are names like Voltas near the day's highest point. Even a PG Electropast has recovered and now trading close to the high point of the day. But moving on, Axis Capital has written a very interesting note on MCX. Sudarshan joins in with more details.
So Axis Capital has today initiated coverage on MCX with a target price of 12,500. That implies an upside of almost 30% from current levels. It believes that Indian commodity exchanges are riding dual tailwinds. First, growing commodities market, and second, rising participation from institutional as well as individual investors. And MCX, being the market leader with 98% market share, is witnessing earnings acceleration. New shorter tenor products and smaller size products are boosting the revenue growth. Company has seen revenue growth of 59% in FY25 and 43% in H1 FY26 versus 15% growth that company had recorded over FY21 to 24. 81 going forward, it sees earnings CAGR of 44% over FY25-28, and that will be led by 37% revenue growth that company might see over next 3 years. Even margin is seen expanding to more than 70%, basically 71% over FY25-28 versus 63% that company has seen in FY25. So overall, Axis Capital is positive on MCX.
Okay, yes, that stock is on our radar. It is flat now, but yes, it's an important note to highlight as well. Let's talk about WeWork, because it's a day of a lot of initiating coverage notes coming by as well. WeWork India, that stock is on our radar. It is up 3.5%. There's a note by Jefferies where they have initiated coverage on the stock with a buy rating. They've also put a target price of 790 rupees on the share, but do remember it is still below its listing price right now at current levels. It, of course, is India's largest flexible workspace. This is led by revenues in terms of the entire universe. At 17% CAGR, Jefferies says the flexible workspace stock is growing at 2 times that of office stock. So it is doing better in terms of the overall commercial space as well. The total revenue CAGR of 22%. This was led by 2 things. One, because they were able to increase their average rental per unit, and also because of the flex office space, which saw a demand surge. So 66% of the growth was led by that. Operating leverage led to an increase in EBITDA margins as well, from 14.5% in FY23 to 19.3% in FY25. And they expect IGAAP revenues, that's an accounting standard revenue, to increase by 22% over next 3 fiscals, and EBITDA to increase by 28% over the same period. Now, capex per desk is around 1,35,000, and that applies 250 to 300 crore of capex every year to fund the growth that they are talking about. And cash flow generation is enough to do that. 300 crore rupees plus is what they've seen every year. They have used the IPO proceeds to reduce debt as well. So Jefferies is quite positive that they will continue to do this, and they are bullish, though the stock has come off from the highs of the day already.
Well, that's right. A very interesting note, almost 3.5% higher as far as WeWork is concerned. But moving on now, let's talk about Max Healthcare. The company reported a good set of Q2 numbers earlier today. We spoke to the management on Q2 earnings, CGHS price revision, and more. Let's listen in to bites from that conversation.
CGHS should give us, when it comes through entirely, because certain rates, categories of super specialty have yet to be sort of streamlined in the government's portal. But once it comes through, and we are expecting it, the process to be completed any day, this should give us a fillip of over 200 crores towards the top line, and almost entirely all of it should flow to EBITDA as well. You don't revise prices of healthcare on a monthly basis. You typically do it on an annual basis, unless there's been a huge sort of increase in minimum wages or some sort of cost impact, which is sudden, that you would do it perhaps mid-year. But typically, and that would be 30th of September. Otherwise, you would wait for the end of the year. It would be the same as it has historically been, which is 2 to 3%.
Well, 2 to 3% is the kind of price hike they're anticipating as far as the hospital space is concerned. But let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar, and this is our special segment, Midcap Spotlight. The spotlight is definitely on Grow. It continues to grow or surge post its listing. What a stellar rally. Hormuz is here to take it all the way and tell us more. Hormuz.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark every time someone hit a youth six. He used to say, going, going, gone. Now, however, this latest listing on Dalal Street has been growing and growing some more, at least in terms of stock price. Now, it's been 5 days since Grow listed and the stock has nearly doubled from its IPO price of $100. But how does this latest Dalal Street entrance stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, Grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform, and therefore it stacks well above the other two names. But when it comes to the average revenue per user, or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio, or the price to earnings growth for Grow, that comes up to 1.63. Now, that is based on a 37% profit CAGR, and it's based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Grow was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The management spoke to us earlier, and they spoke about how they plan on growing the MTF book, and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, Grow's ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Grow comes on Friday, when it reports its quarterly results, which will be its first after its listing. Now, that's Grow for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Well, thank you so much, Hormuz, for joining us and giving us all of the details as far as the recent listing Grow is concerned, and how it's made its mark higher as far as the last few trading sessions are concerned. But another listing that's made all the headlines today is PhysicsWallah. It made its D-Street debut today and continues to remain higher in the session. Earlier today, we spoke to Pratik Maheshwari, co-founder and whole-time director of PhysicsWallah, post-listing. Let's listen in.
We are on a mission, and that mission is more important, that access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance, and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms. And what is more important is the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where with 3 to 6 months, there is an intense training program, crafted by Alag, is actually, solving this problem completely. But you will see a sharp dip in this number this year. Lot of headroom to expand in, domestic market, and, no as such big plans for inorganic expansion.
Well, a significant listing pop as far as physics oil is concerned, over 37% higher. But shifting focus, sources say market representatives have sought lower STT on cash market trades against derivatives. Shivani joins in and brings in all the details.
Well, yes, the finance minister held a pre-budget consultation with the market representatives here in the Kartavya Bhavan in New Delhi, and sources are indicating some significant asks from the industry. Now, top of the list is a push to reduce STT on cash market trades and keep it lower than derivatives, something industry players say is essential for improving the market depth. There was also a detailed discussion on boosting household participation in equities, with a proposal to raise it from the current 5% to around 8%, signaling a big shift in how savings could be channelized into the capital markets. Now, another key recommendation by the industry participants was on buyback taxation, where companies want the tax to apply only on the profit portion instead of the entire buyback amount, a move they argue will encourage more efficient capital return. Now, sources also say that there is a call to align short-term dividend tax rates for domestic investors with NRIs. Right now, NRIs pay 20% in the short term, while domestic investors can be taxed as high as 42%. So all eyes are now on whether the finance ministry takes these suggestions on board as it shapes the upcoming budget. Back to you.
Well, thank you so much, Shivani, for joining us and giving us all of the details as far as the pre-budget consultations are concerned. Well, a couple of stocks on the radar, have a look at the life insurance space, and within that, SBI Life, in the last half hour or so of the session, that particular stock has moved to the day's highest point. A couple of auto ancillaries too have moved higher. Bharat Forge, a sharp recovery in that particular name, higher by 1%. Sona Comstar also following suit. And Container Corporation of India, that particular stock, after a while, is seeing and doing quite well in the session. But with that, it's all the time we have on this edition of Midcap Radar. With MF Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra, and today we'll try to decode one of the most important parts of investing when you do that via mutual funds, decoding the total expense ratio. It's so important to understand how much money you're giving and what are you giving it for. So what exactly goes into TER, what does not. In today's Mutual Fund Corner, we are joined by Nisreen Mamaji of Moneyworks Financial Services and Shweta Rajni of Anand Rathi Wealth to help us break down every component of TER and understand how even a 0.5% difference in expenses can significantly impact long-term returns and a lot more, because as an investor, it's very, very important to understand where your money is going. Ladies, good afternoon. Thank you so much for joining in. Shweta, let me start with you first up. We have spoken earlier when some consultation paper indicated there could be change to the TER regime overall. But as of now, what exactly is the total expense ratio? What does it include? And what is kept out of it?
Good afternoon, Sonal. Yes, expense ratios have been in news for the last 3 weeks when the consultation paper came in. But yes, in current regime, now what happens? Firstly, it's important to understand that total expense ratio is the overall cost that one pays of investing in a mutual fund. It covers, the operational costs, the fund running costs of this scheme. This is regulated by SEBI, so there is a maximum limit of how much an AMC can charge as an expense ratio. It's pretty much, visible in public domain as well. And broadly, if you go to any website of the AMC or AMFI, you will see 3 heads. One is the base TER. Second one, you would see is something called as expense charged in the lieu of exit load. And there is a component of GST on management fees. Let's take an example here. If it's a 500 crore scheme, the base TER fixed by SEBI is 2.25. On that, a 5 paisa of exit load makes it 2.3. And let's say the GST on the management fees is 10 paisa. So 2.4% is the total expense ratio of this scheme. That's what the investor would be paying. A further breakdown of this now. In this base TER of 2.25%, there are subheads under which the fees is getting charged. The first one would be the management fees. That's the fees that the AMC or the scheme is charging for doing the research, running the fund. Then there is a second component, which is sales and marketing. So whatever expenses are needed to market the scheme, to pay to the distributor, would come under this head. Third is your transaction costs. So brokerage that the fund manager would be paying on doing the underlying trades of the scheme. And the fourth one, I would say, would be the operational costs. So what the scheme pays for, let's say an RTA, the registrar, the custodian, the trustee, the fund accounting team. So those are your operational expenses. And there will be, again, a GST on these operational costs. So this is how the broader framework works. And this is all that's included when I say a TER. But what you see on the AMFI or on the fund fact sheet is what you are paying entirely for the scheme that you're investing in.
Okay, before I come to you, Nisreen, just to follow up on this, Shweta, are all of it under AMC's control? Of course, not the GST, but other than that, how much of it is controlled by the AMC? How much of it can be left to the market forces or the RTAs or the distributors as well?
Yes. So, let me again break this up into 3 parts where there is a very low control of the AMC. So fees like what you're paying to the registrar or the custodian, there's very less space of what the AMC can negotiate, because these costs are anyways smaller and they depend on the number of transactions that are happening in a scheme, how many SIP folios, the size of the scheme. So there's very little control of the AMC here, plus the statutory that goes to the government, there's no control. The second level where I can say there's a medium kind of a control where, it could be the brokerages that they pay on trades. Now, this again is been in news, especially after the consultation paper came in saying that you are paying around 10 to 12 paisa. It can be controlled and brought down to 2 to 5 paisa. So that's the second level, which is controllable. The third, where there is a high control, is the component of management fees, which, the AMC charges for their research and running of the scheme. The marketing and distribution, which goes towards marketing the scheme, doing the sales of the scheme, and the commission that goes to the distributor. So that is the layer, the top layer, where there is far more control and can be negotiated by the AMC.
Okay, take that point. So these are some important takeaways. This is what total expense ratio looks like, what is under AMC's control, and what is something that an investor has to pay because it's a regulatory requirement. Nisreen, in that case, how should a first-time investor read a fund's fact sheet to understand the expenses they are paying? Because, you know, sometimes we don't even understand it in the fact sheet. So if you can give us a point-by-point understanding, if an investor is investing for the first time or even further after that, what should they look out for?
Sure. So basically, they should be looking for the total expense ratio. That will be different for a direct investor and for a regular investor. Usually, you find that on the first page or the last page of the fact sheet. Then another ratio that they should be looking at is the portfolio turnover ratio. So this is basically, a fund with a very high churn ratio will obviously affect the NAV, which will be thereby reduced. So this is, typical in, say, like a small cap fund where the churning would be higher. The buying and selling in that fund would be, higher. So that's called the portfolio turnover ratio. And that also affects the, the NAV and the total returns that the investor will get. So a moderate turnover ratio is usually healthier for a long-term investor planning. Then there is something called, the actual management fee, the expense breakup. So what is the management fee and what are the recurring expenses? That is also very much mentioned in the fact sheet itself. So the, first time or a regular investor would be, wise to look at that. And then, they can be also looking at the benchmark returns and the category comparison. So if you want to know whether, your fund, how is it performing compared to the benchmark or to the peer group, you could also look at that to know that, you are possibly invested in a fund, which is typically in quartile 1 or 2 over a period of time. So that's something that, would be very important for the investor to read in the fact sheet. So the turnover ratio or the churn ratio, the total expense ratio, the expense breakup, as well as the benchmark and category comparisons. So I think, you already mentioned what the TER components are. So it's basically the fund manager, the research costs, the distributor commissions, if it's a regular plan, the RTA fees, custodian charges, servicing the investor accounts, audit, legal, custodian, mandatory regulatory expenses, and the administrative and marketing costs. So I think it's already been discussed.
No, absolutely. Take that point, Nisreen. Shweta, there are some ratios as well. It's not easy for every investor to understand that as well. But if you can just point them out, list them down, and just simply put what they mean for any investor when they are investing in a scheme in an AMC.
Sure. So, apart from the expense ratio, which was already mentioned, there's a turnover ratio, one ratio which is there in the fact sheet. Now, the turnover ratio basically means that how much of the portfolio is undergoing a change. If it's 50%, let's say that it means that 50% of the AUM has undergone a change. This could be on account of the fund manager doing active calls, or it could be on account of, new money coming in. That's why the turnover ratio would be a certain number. Then there is standard deviation, which is mentioned, another ratio, which is nothing but it's a measure of volatility. Now, to explain it in very simple terms, see, somebody is investing in FD, you're getting a standard 7% rate of return year on year. But if you're investing in equity, in 1 year, you could have got 10%. The next year, you could have got -5%. The third year, you could have got 3%. But you've averaged out as, let's say, 12% on a 3-year basis. So this volatility gets captured in standard deviation. The higher the standard deviation, it means more volatility in the fund's return. Then you have something called as a Sharpe ratio, generally mentioned in fact sheets. Sharpe ratio is, again, a ratio which is telling you for every 1 unit of risk that you have taken, how much is the extra return that you have made. Extra return is the word I mentioned. Extra return means the fund's return minus the risk-free rate. So let's say over here, the fund has delivered a 14% return, but your risk-free rate would be around a 6.5% return. So if you divide that, 14 minus 6.5, that becomes 7.5. That's your extra return. For that 7.5, let's say you've taken a risk also, which is 7.5. The volatility, the standard deviation is 7.5, which means for every 1% of risk you took, you got 1% extra return. So higher the Sharpe ratio, the better it is, when investing in a scheme. So over and above the expenses, because in an actively managed equity fund, your expenses can be on the higher side. But if some of these components, the standard deviation is low, but the Sharpe ratio is good, then it may still be worthwhile considering.
Take that point. Shweta, when we say a particular expense is related to a scheme and not the AMC, because, the new consultation paper also indicated there could be cut in some charges. But but as we spoke about earlier as well, you said it will go to the scheme and not the AMC. If you can explain the difference between the two.
Correct. So, see, there are some expenses which are the fund running expenses that go back to the scheme. For example, this 5 paisa, which is charged on account of the exit load. This goes back into the scheme. So if a scheme has an exit load and it's charging you a fees for that, whatever exit load is charged is getting back into the scheme, benefiting the other investors in it. Then you could have the RTA fees, the operational expenses of the scheme, which goes back into the scheme's balance sheet. Then you could have some amount of this, so-called management fees, which a part of it goes to the scheme because there's research, trading, all of that happening, and it's being charged to the scheme. There's some component which goes.
Okay, all right. Looks like there is some technical issue, but we'll get back to Shweta in a bit. Nisreen, if you would like to answer that, what is the difference when we say an expense is charged to a scheme versus when it's charged to an AMC?
Right. So the scheme cost basically would be, whatever is directly related to the scheme, and the AMC level would be at the higher level, So certain expenses are directly related to the scheme itself in terms of, the registrar costs, etc. So there is a difference in that is, those expenses which we easily justify by charging it to the scheme, and certain expenses like, the overall marketing expenses of the company, the advertising expenses, those would be related to the AMC level. So that is how they are, divided between scheme level and AMC level.
All right, take that point. We have a lot more questions, but we have to get into a quick commercial break. When we come back, we'll continue our discussion on the other side. Welcome back. You're still tuned into MF Corner. We still have with us Nisreen Mamaji of MoneyWorks Financial Services and Shweta Rajani of Anand Rathi Wealth. Ladies, we have spoken about a lot of things. The most important being the breakup of total expense ratio, and some of it which is not in the hands of AMCs, and some of it which can be changed according to the scheme and other factors involved as well. Just coming back to the question on the cost structure, Nisreen, is there something which is non-negotiable for an AMC, and what are the real challenges that an AMC faces in keeping the TER low?
So basically, what happens is that the TR, the compulsory components will typically be the fund manager and the research costs, distributor commissions for regular plans, the selling and administrative RTA, custodial, legal. But the TR will not include, brokerage and trading costs, for example, the STT and the stamp duty, the exit loads, the market impact cost, taxes on capital gains. So some parts which are hidden but which are very important are the bid-ask spreads. When you're buying and selling in certain derivatives, there are bid-ask spreads. The market impact cost, the exit loads on units, and the securities transaction tax. So these can be approximately say 0.5 to 1%. Now, these are, obviously not controllable because that's part of running the fund, and, the fund manager will have total discretion on how to run the fund in that case. So what the AMC can control, is its own operating efficiency. For example, the team size, the systems, the distribution decisions, the marketing costs. Some costs are regulatory, which are like through external partners like the custodians, the auditors, the registrar. So that part is mostly not controllable. But when we say something is scheme related, we mean the expense which is arising because the scheme exists. So for example, the custody of the securities, the audit of the scheme, the investor servicing for that specific fund, these aren't general AMC overheads and they belong to the scheme. So those are some things, which can be either controlled or not controlled at the, AMC level.
Got it. Shweta, and what is the real difference between, say, direct and regular plan expenses? What value does a regular plan justify for the higher TER? Because every investor would like to ask, why should I not go for the direct one and go for the regular one?
Absolutely. So see, if you're comparing a scheme, the same scheme, direct and the regular plan, the differential could be anywhere between a 0.75 to 1.1%. So if let's say I have ABC large cap fund direct plan versus ABC large cap fund regular plan, you'll see this difference. Now what happens is, let's say a large cap fund itself, there are around 33, 34 large cap funds available to you in the market, each of different sizes, each having different track records. So the difference that a regular plan or a distributor would bring to the table is by saying, out of these 30 funds, these are 1 or 2 funds which are good and can give you that extra return over and above the benchmark according to their research capabilities. So where a regular plan works is if the advisor who's doing that entire research for you and coming and telling you, out of this bulk universe, these are the funds that you should invest in. And that covers up for more than that 1% of savings that you could have if you're doing it DIY. You're doing it yourself by researching. Just to give you certain numbers that I have to talk about, in the last 10 years, if I look at all the mutual funds that are available and I just see the best scheme and the worst scheme in the equity category, the average differential has been around 50% per annum. And here we are talking about trying to save 1%. If you go wrong, the impact can be huge. So therefore, it becomes important that you either understand the funds well and how to evaluate them, then go in for a direct plan, or be with a distributor or an advisor who's doing this entire back-end research for you and covering up for more than the cost saving that you could have over that direct. So value being created could be the decision maker.
Got it. Value being created, because that's the end goal, right? To create more value for any investor, be it the direct way or the regular way, whichever way works for any investor. Shweta, let me ask you this one and then let me come to Nisreen, because we do see some of the other categories tend to have higher TERs than the usual ones. Say small caps have larger total expense ratio versus large cap funds. Is it justified?
So see, what happens is generally when an AMC launches new schemes, they first launch with the large caps, the flexi caps, and then they go to the small cap schemes. So most of the times it so happens that for that same AMC, the small cap scheme may have a lower AUM than compared to the large cap scheme. And it's important to understand that your expense ratios are defined, your caps are defined by SEBI. So rather than comparing, a large cap fund universe and a small cap fund universe and seeing the TER differentials, you would rather break it up into AUMs and see AUMs or funds which may belong to different categories but have similar AUMs. What are the expense ratios of that? And I had done this check here. If I'm looking at schemes which are more than 10,000 crores of AUM, a large cap fund may have an average TER of around 1.59. Small cap scheme with more than 10,000 crores may have an expense ratio of around 1.62. That's a marginal difference. Likewise, if you look at schemes which are more than 50,000 crores, large cap, flexi cap, mid cap, small cap, there'll be hardly a difference of around 2-3 paisa. So the right way to look at it is if you have schemes which belong to the same AUM bucket, if you have one scheme which is charging way more of 6 to 7 paisa more than the other scheme, then it should worry you, but not like just looking at category averages of AUMs.
Okay, take that point, Shweta. So the point is that we should not just look at a simpler way that, small cap categories have higher TERs and whether that's justified or not. It's different for every scheme as well. Nisreen, if an investor holds a fund, say, for 10 to 15 years, what do you think can a 0.5% difference in total expense ratio actually impact in terms of wealth creation? If you can give an example for that as well.
Sure. So, if you invested, say, 10 lakh rupees, and you stayed invested for, say, 20 years, and your gross return is, say, about 12%. So if, the difference between the regular and the direct is, say, 0.5%, what the impact would be is, if the total expense ratio is, say, about 1%, then your net return is obviously 11% because your gross is 12. So you would have in your target corpus about 80.6 lakh rupees. But if your total expense ratio went to 1.5%, where your net return went down to 10.5%, your corpus would be looking at about 74 lakhs. So the difference that you're looking at is about 6.6 lakh rupees over the 20-year period, which is approximately, say, 2,750 rupees per month. So if you get the service that you expect, either from the distributor or the, because you've gone in for a regular plan and you've paid those distribution charges, then if the, it can be justified only if they have helped you through the asset allocation process. One very important criteria is that have you lasted the 20 years? So, a lot of times we find that the direct investors don't really last for such a long period and they tend to stop at the most crucial times. When the market is corrected because they are lacking that hand-holding and the emotional, advice that is also needed in terms of, a panic situation. So it's very important also to stay invested for the 20-year period. Your asset allocation has to have been right. Your scheme selection has to have been right. Your risk profiling should have been done. So if you feel that, you have been handled in these ways, then of course it is justified. But if somebody is just asking you to fill forms and then sees you that you're going to buy something or you're going to go in ready for an investment and you don't have the reporting structure in place, you're not really hand-holding the investor, then obviously you should think twice whether you want to be in a regular plan if you haven't got service.
Got it.
So it has to be justified.
Absolutely. Totally take that point, ladies. It was a very helpful session to understand because it's very important for investors to know what they are paying for, where they are paying, and whether that can be reduced by any means or not. So it was a pleasure speaking with the two of you today.
Thank you. My pleasure completely.
Okay, all right. With that, we'll wrap on this edition of MF Corner for today. But stay tuned for Closing Bell to take you through the last hour of trade.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng down 1%. The Taiwanese index is down 1% as well.
Support is 25,798. The 20-day, which has actually moved higher a little bit. So that's the trailing kind of level on the downside.
There are a lot of different variables in the India-American relationship, but they're good friends, and we're hoping we can work it out soon.
We are trying to have minimum impact on CNG as well.
55 lower on the Sensex, 40 lower on the Nifty.
I think the leader will still be the banking and the overall financial space.
We do what we have to do, that is to outperform the expectations.
That we had a 21% growth of top line, 23% growth of EBITDA.
50 rupees on top of the issue price. So 160 rupees on Physics Wala.
We will continue to grow, more than 30% in upcoming years.
Well, some recovery which is underway. Of course, so far we are snapping that 6-day winning streak that we saw till yesterday.
The first and the largest one, of course, has to be Emphasis.
Now, it has been 5 days since Grow listed, and the stock has nearly doubled from its IPO price of $100.
We are snapping that 6-day winning streak, but yes, there is some recovery from the lows of the day.
Well, you're with us here on a fresh new edition of Closing Bell. That is the day so far. Markets, of course, not refusing to stay down. I guess that's the story. Down about 40 points, but that's not much. Off the lows by an equal amount, 50 or 60 points. The first half was a little more wobbly. It's been much more steadier, although it's quieter as compared to yesterday, day before. Look at the broader market screen. I mean, really very, very vibrant screen over the last 2 days. Today, it's a little more quiet in that sense. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surbi and Nigel with me. Here, guys, hi, afternoon.
Prashant, quiet, resilient, fantastic, superb. Why aren't you using those words, right? And I'm only saying that if you're wondering what I'm talking about. I'm only saying that if you contrast India with the rest of the region and what's happened with global markets, then this looks like a superlative performance because you've got markets like Japan sliding 3.5%. That was the last close for the Nikkei. The South Korean market, Kospi, closed down another 3%. And this, remember, is after a big wobble last week. The Kospi, I think it was Thursday, it had fallen 4%. Not Thursday, I think it was Friday, actually, last Friday. So in that context, US futures slightly lower, fear around this whole AI trade. In that context, this seems fairly okay, what we have on the Nifty. But I take Prashant's point entirely, Nigel. That's the thing, right? 26,100. We need to clear that hump for, real positive momentum to come in.
Well, in the Nifty Bank, that's the one that's a standout performer that continues to trade into the green. And every time there's been a pullback, actually, that's the one that's led the way and it continues to do well. Currently, it's being a little wibbly-wobbly. But, the story in the last 7 days or so has been these new listings. Lenskart, Grow, and today Physics Wala. Combined market capitalization is close to more than 2 lakh crore or thereabouts. And you'll debate on valuations, debate on, whether or not it's frothy or not. But at the end of the day, just one thing, right? Bhav, Bhagwan che. And that seems to be playing out. I mean, just take a look at these stocks. All three of them on fire, Physics Wala as well. Great potential, but valuations could be debatable. But for the time being, the screen is green. So you'll have to just stick to that.
Grow was Monday, right? Grow listed on last Monday.
Wednesday.
Last Wednesday. I think, okay. earlier last week, and in a matter of 7 trading sessions, we're talking 100 becoming 200. Yeah, that's a billionaire.
November 12th, yeah.
Yeah, so.
Today we're 18th, so it's, 5 sessions.
Wednesday. 5 sessions. Wednesday. Yeah, so 5 sessions and 100 has become 200 and then Physics Wala is doing its own thing. So I guess, those are the biggest headline grabbers in this market.
To use some physics terminology, gravity defying. But Grow, of course, now is quite I think the star list. Sometimes it's the best at the end, right? Look at all the slew of listings, and it's been such a long list of listings. When you look at the end of the year and look back at all the listings, I think this one is going to stand out in a big way. for the returns it's provided in just 5 days flat. Well, let's just quickly run you through what's coming up here. So markets, of course, are trading slightly flattish. Markets around 26,000 in the index. Banks doing well. And these mid-tier banks, there is a brokerage call, and we'll refer to that in a bit. Auto stocks are also doing quite okay. Growth strong run continues, as we've been saying. And we'll put out some data with Hormuz in just a bit from now on valuations and how it stacks up against peers, etc. So Physics Wala is the other one, which we will also talk about. So it's up 40%. Management has shown a path to profitability. At least they're saying they will. We'll play out some sound bites of that conversation as well. And as I said, I mean, that brokerage call from Investec on mid-tier banks, and many of them are buzzing in trade. How should you position yourself? That's a question. Mitesh is with us with answers to that. Mitesh, afternoon, what would you do?
Good afternoon, Prashant. I think on the index, I'm not very keen to trade the index. It's really a situation, when the chart pattern is not indicating any kind of immediate breakout. Though I think getting past 26,100 will add some momentum on the upside, and we could then test 26,280. But the setup slightly favors that we might just be in a range of 26,100 on the upside to about 25,800 to about 25,750. So I think that's the broad range which I'm working with. Therefore, trading with stock-specific biases is the way I think I recommend. And right now, I have a buy call on Bharti Airtel with a stop at 2129 for targets of 2190, and PG Electric PGEL, that's a buy as well, with a stop at 574 for targets of 610.
Okay. All right, got that, Mitesh. Thanks very much. By the way, there's an interesting trend playing out in the market in the QSR space. So just keep your eye out on some of these stocks. It all started with Westlife in the morning when it became clear that the promoters have bought a little bit of equity from the market, but they have purchased. Mr. Jatia purchased about 8,000 shares. Westlife was up in the morning, then it fizzled out. As you can see, it opened strong, then doing nothing. But it's caused a bit of a flutter in the rest of the pack. Sapphire is up 5% right now, Sapphire Foods. Devyani is up 3.5%. Restaurant Brands Asia, Burger King, is up about 0.5%. And maybe we can pull up some of the others like Specialty Foods and some of the others as well. So this is a bit of an interesting spot. And we'll talk more about it as we go forward with our market experts. But for the time being, let's put the spotlight on what has been indeed the biggest headline we've seen in the market in the past 4-5 trading sessions. And we're talking about what else but Grow, which continues to grow, surging after its listing, the stock nearly doubling from the issue price of 100 rupees. Or must fill us in on how things stand, valuations and otherwise, after what has been a tremendous rally.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark. Every time someone hit a youth six, he used to say, going, going, gone. Now, however, this latest listing on Dalal Street has been growing and growing some more, at least in terms of stock price. Now, it's been 5 days since Grow listed and the stock has nearly doubled from its IPO price of $100. But how does this latest Dalal Street entrant stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, Grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform and therefore it stacks well above the other two names. But when it comes to the average revenue per user or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio or the price to earnings growth for Grow, that comes up to 1.63. Now, that is based on a 37% profit CAGR and it's based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Grow was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The management spoke to us earlier and they spoke about how they plan on growing the MTF book and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, grows ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Grow comes on Friday when it reports its quarterly results, which will be its first after its listing. Now, that's Grow for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Well, indeed, it's absolutely smashing it out of the park, as late Dean Jones as well would say, in fine form. But let's focus on the other one that listed today. Physics Wala made its debut. That one as well bursting away in trade. Upasana joins us to fill us in with more details. And we had spoken to the management earlier today, so she'll chip in with some of those management takeaways as well. Upasana.
Overall, it's been certainly a strong listing. The company has listed at a 33% premium, surpassing the market expectations. It listed at 145 per share versus the issue price of 109 per share. Now, company is a leading edtech player specializing in test preparation for major competitive exams like IIT-G, NET, and various others. Now, looking at the industry outlook, it remains quite robust, is what the brokerages have also highlighted. The Indian education market is a dominant global sector, and it's projected to expand nearly at a CAGR of 10% going forward for the next 5 to 7 years. Now, management joined us post-listing, and here are some of the important takeaways highlighted by them. Now, company aims to bring access to good education to under-penetrated areas in India. It has guided it will turn profitable in less than 12 months from now. Now, coming to the revenue mix, it has guided that it will remain skewed towards the online business, the contribution of which is nearly about 52% as of now. Company has also given a revenue growth guidance of 30% for the next few years. Now, coming to attrition, which is one of the key concerns, the management has highlighted it will certainly see a decline in FY26. And overall, coming to the inorganic expansion, the company is not planning for anything as of now, is what they have indicated. So overall, management commentary remains quite upbeat and a strong debut.
Okay, all right, Upasa, thank you for putting that in perspective for us. So really, it is these new listings that are absolutely shining all the way. Now, in fact, we did have a conversation, detailed conversation with the management as well, Prateek Maheshwari, co-founder and whole-time director at Physics Wala, after the listing, to talk about the company's trajectory, strategy, and I mean the financial road ahead. Take a look.
We are on a mission, and that mission is more important. That access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance, and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms. And what is more important is the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where where 3 to 6 months there is an intense training program crafted by Alag is actually solving this problem completely. But you will see a sharp dip in this number this year. Lot of headroom to expand in domestic market, and no as such big plans for inorganic expansion.
Well, that is Physics Wala with commentary, path to profitability compared to, of course, losses that they're making at this point in time. Gurmeet Chadda is, of course, with Complete Circle. He's with us now. Gurmeet, great to have you with us on the program. I'm sure, Gurmeet, the thought has crossed your mind, right?
No, I have a feeling that the way things are going, everybody would eventually at some point of time, Prashant. But we are a few years away in terms of getting there. We are still traditional bankers, turned entrepreneurs, still believe in that, P metrics, price to book metrics, and all.
Yeah, but
price to books, wo kya hota hai? P? What are you talking? It has to be PEG, price to sales, or maybe some newfangled. I remember Gurmeet and I did a show a couple of years back on understanding valuation ratios. Gurmeet, we need to do a new one on the new ratios for the new market that we are in.
How to narrow down losses, how to do different blocks every 6 months.
No, but Gurmeet, I mean, to come to the point, and we want to quickly do a rapid fire and discuss on these stocks because it'll really do a world of good to investors who are just thinking, how did 100 become 200? And now if I haven't subscribed, have I missed out?
Gurmeet, and this is a point I made in the morning also, that I'm seeing lots of these things that Grow is trading at 50 times, 60 times earnings. But, and I'm just repeating myself, that it's actually not. It's trading at, and you saw those numbers from Hormuz, right? Their own guidance says 25 to 30% growth, which means 3,500 crores in net earnings. This is, of course, all, I mean, simple Excel projection. But at lakh and 20,000 crore market cap, 35 times earnings. Now, you can say that it's more expensive than others, but it's not 50, 60 times. That's all I'm saying.
Okay.
And the point is...
I think, Prashant, you're right. I think what they have built in 10 years is commendable. The brand recall, look at this, so in cap, their market share of more than 22% in cash. They have like 14% in options. Even in MF distribution, mutual fund, they are already at 13%. Amongst the top players. They were doing it last year, at some point of time, like 40, 50 lakh SIPs a quarter. So I think their in-house tech team, the way they execute, the user-friendly XX, I think is phenomenal. I think the capacity also in terms of, you'll not see, very rarely see on tweets on Grow servers being down, unlike we've seen with some of the startups. So, and I think they priced it well. You're right, at 100 rupees, it was priced well, around 30 times. But, there is a bit of a liking market is developing to profitable startups, tech-driven startups. And I think that is the reason the industry feels that the combined market cap of all of these new age companies was 8 lakh crores before Lenskart, Grow, and now Physics Wala got listed. It's just still about 10 lakh crores. So I think it's a bit of a play that some of them will find their way in top 100 and Nifty 50 over a period of time. And that is why all mutual fund managers I speak to have some pie of it. They don't want to be completely out of it. And that is the reason you're seeing this surge in volumes. But it's a great business model. But I just think that it's now getting into a range of, in my view, a no-buy zone. I think the others will probably start playing catch-up. You have something like, for example, a Motilal at about 15, 18 times. And their AMC is 1.5 lakh crores. So at some point of time, the AMC will do more than broking. In Grow, 82% is still broking.
Yeah.
Which means if you can have soft 2 quarters, your all these EPS estimates could go for a toss. So I think there is valuation comfort now in others. With this play.
Yeah. No, Gurmeet, absolutely blocking you for a show. We need to do Let's Talk Money and understand, because people need to understand basics of valuation once again. So just to go back to Grow, first of all, tell us which is the metric, maybe one, maybe it's 2, 3 metrics you have to look at when you compare brokers. And the whole argument in favor of Grow is that eventually they're going to be building on their, cross-selling, whether it is loans against shares, MTF, whether it's selling mutual funds. And that is where the big growth numbers and the profit numbers will come from. So just go over the valuation bit again. At 1 lakh crore rupees, what PEG or what price to earnings are we talking about? And then is there anything left on the table now?
No, I think it's already at 60, 65 times now. Assume they deliver, as Prashant said, the numbers they are talking of, which is 30% growth. It's very market dependent, as I said, because the mix is still 82% broking. So, in a good year, it may even be 40%. And in not so good year, you may struggle, because you're already now at 14 crore unique demat accounts, right? So it's not going to grow at 40% now. Even the SEBI chief now is talking of investor base doubling in 3 to 5 years, which is about more like 18, 20% growth, right? So I think that is where the risk is. And that is where you should go for other capital market players, where the revenue mix is more annuity based. Like Motilal, as I said, 50% of the revenue may come from AMC business, which is on fee model, on average assets. So there the disparity in income could go less. And some of the other plays like the depositories, etc. So I just balance it up. I think it's a great business. If you get a sizable dip below 50 or below 2 peg, might not be a bad idea to add it around, maybe let's say around 140, 150 levels.
Okay, all right. So that is on the brokers and the valuations and how to look at this whole capital market space. Gurmeet, stay on. Coming back to you in just a second. For the timing, let's actually listen into the comments, the latest ones that have come in from Commerce Minister Piyush Goyal on India-US trade ties.
Partnership which is as comprehensive as the US-India relationship has many elements. And every element need not run at the same speed. परिवार में भी कभी-कभी थोड़ी बहुत नोक-झोंक तो होती रहती है. And of course, negotiations is a process, and India as a nation has to secure its interests, has to secure the interests of our stakeholders, businesses, and balance it with our sensitivities. Friendship is very enduring, and the partnership is ever growing. So we need not be worried. We stand on very strong pillars of democracy, very strong pillars of diversity. Story of Indo-American partnership can best be described as two trusted partners working together for the shared prosperity, not only of both countries, but of the entire world. And I can assure all the distinguished participants that just like the rest of the world, the US also shares a strong bond with India. They see India as a trusted partner. We are both equally committed to working to expand trade and commerce between the two countries. And when the deal becomes fair, equitable, balanced, you will hear good news. I don't believe there's any hiatus in the relationship. It continues to be very, very important, very strategic for both countries, the United States and India. We've just signed the 10-year defense pact with the Department of War of the US with Indian Defense Ministry.
Okay, well, is it close? How close a deal, right? That's the big question. And, what will be the contours of the deal if it comes through? Remember, I mean, if there's, of course, two parts. One is the 25% penalty, and then, of course, the 25% underlying tariff rate. It's got to be under 20%. I mean, if I can put it simply, over 20%. It'll be basically it'll put India at a disadvantage against many other countries. I mean, 16, 17 odd %, I think is what the market is expecting, and I think that is something hopefully we get. Some part of it, of course, would be market is already discounting. Gurmeet, anything which stands out? What's the, if I can put it, trade on the trade deal? Some textile companies and chemical companies, anything else?
Prashant, I think the key concerns have been mostly, I think it's a bit of geopolitical and economics. I think there's something beyond which we don't know, and that's the reason it's taking time. But, with the energy, for example, India doing now 10% LPG through US, we had a defense pact, which was a 10-year agreement. I think it's just a bit of things building up gradually. So yes, I think textile is one winner. But if, for example, you don't see anything for a couple of months, the next quarter can disappoint on earnings. So you have to be careful in terms of, because the run-up is come. So Google has moved up from, let's say, 700 to 900 plus. I think what has probably, so shrimps is something which would also do, because India has already been able to figure out alternate sources other than US on shrimp exports at least. And the third, obviously, could be, in my view, could be IT services, not directly linked to the US deal, but more in terms of being under-owned and being hammered because of the AI trade which is happening. You could see a bit of a recovery there because, as I said, IT companies are at very good valuations, and the earnings, we did not see any major disappointment. Either they were in line or slightly better. And wherever numbers are good, like Persistent or Coforge or others, the market has rewarded. So I would build a bit of a contra portfolio, combination of IT services, the better earnings one, bit of textile, bit of shrimps, and maybe a little bit chemical where numbers are starting to show up.
And very quickly, one more stock before you go, Gurmeet. Keynes Technologies. And in the past, we've discussed this, right? You've liked some of these EMS players. We caught up with Mr. Sampath this morning, and it was a great quarter for them, firing on all cylinders. Now, I think some will argue that market was expecting 65% top-line growth. They delivered 60%. But what did you make of the commentary? Today also, Hormaz tells us, I think the anchor lock-in ended, or some, part of the investor lock-ins ended, which is why there's pressure on the stock. But your thoughts, whether you would be buying into these kind of dips or staying away?
So not at this price, as I said, you answered it. It's priced to perfection. So very little room for any disappointment. And what is happening globally on electronic exports, some bit of it, there could be 1 or 2 quarters where you may get a slightly better entry point. So whether it is Dixon, whether it is Keynes, whether it is Sirma, we have nibbled into them. The largest exposure we have is a Dixon. But at this price, we are not adding anything. Anything we get in terms of better price points, because the correction in these names can be very sharp if you miss 1 quarter. And the market is very brutal, when you're missing anything. Look at what has happened to Trent. Again, not comparable, but see how it has corrected more than 50% once your growth rate settles to a little lower multiple. So waiting for better opportunities there to add more. We currently have Dixon, a bit of Keynes and a bit of Sirma in the portfolio.
It's almost as if we're reading each other's minds. This is exactly our breakfast conversation this morning, which I was having with our colleagues over here, that it's such a market, it's such a momentum-driven market. When you give growth, the market salutes you, makes you rise to different levels altogether. The moment that growth goes, you're left out in the cold. But, well, that's the Indian market for you right now. Got it. Thanks very much. Great conversation as always, Gurmeet. Pleasure having you on the show. We need to take a quick break. Come back on the other side. Tushar Pradhan from Hexagon Partners will be with us. Welcome back. So down 70 points. That's the Nifty for you. The mid-cap market is seeing a little more of correction. Actually, speaking of some of the losers, Keynes we just discussed, a bunch of others as well. Axis, Cades, Inox Wind down about 3.5%. But anyway, it's a good time actually to bring in Hormaz, figure out what today's buzzers are looking like. I wonder, Hormaz, if you're going to start with Grow again, or are you letting this one be for now?
Let it be for now. We've had enough of Grow for the day. We'll start off with a name called Cabra Extrusion Technique, and that stock is up 8% in today's session. It's the third straight day of gains for the stock, and surging on high volumes as well. The volumes today are already triple that of yesterday's trading session. The volumes also at the highest in nearly 3 months. You take a look at the volumes, 3 lakh shares already traded. The 20-day average is only 18,000 shares, and despite today's move, the stock remains below all of its key moving averages and has had a forgettable year as well, down 60% on a year-to-date basis. Now, Ugro Capital is the other one. That stock is also seeing the third straight day of gains, 10% higher on this stock. And before this 3-day up move, the stock was down for 8 days in a row. And today's volumes on this 10% move are the highest since July of 2023. Had close to 60 lakh shares that have been traded here on Ugro Capital. The 20-day average is only just over a lakh. And as a result of this move, the stock has moved above all of its key moving averages. But it has been an underperformer this year as well. It's down around 17%. Now, the other one on the list today is Bombay Burma. Some news flow also came in earlier in the afternoon. The stock has only built onto those gains, 10.5% higher, the highest volumes that the stock has seen since July of last year. Close to 50 lakh shares have been traded on the stock. The 20-day average here is just 2.2 lakh shares. And as a result of today's move, the stock has trimmed some of its losses of the year, still remains negative on a year-to-date basis. And lastly, Ester Industries, that too has snapped a 2-day losing streak today. The volumes are the highest in over a month, 8% higher now in today's session, with over 10 lakh shares that have been traded. The 20-day average here is less than a lakh. It's only 80,000 shares. And as a result of today's move, the stock is back at its 50 DMA, which is at 112 rupees, trading exactly at that level. And yet another underperformer this year, still down 27% on a year-to-date basis.
Okay, all right. Thank you very much for that, Hormaz. As always, exciting moves and shakers with Hormaz. Let's welcome in Tushar Pradhan, Director, Hexagon Partners, who's with us on this leg of the show. Tushar, thank you so much for joining in. And, I'm going to pull you in on a discussion we were just having in the break on the fact that our market, it always has been, right? It's a massive momentum-driven market. It's always about finding mid-caps which are offering fantastic growth. That's what foreigners have always traditionally paid for when they come into India, right? Now, how do you see that shifting? We have all these new businesses and these new entities. Now, Grow has priced in 6 trading sessions, everything all the way up to FY30. So then what is left on the table? I mean, just from an institutional investor's standpoint, how do you deal with the Indian mid-cap market now?
Yeah, that's a very difficult question to answer because you don't deal with such things at all. Because if you are going to be scientific about your investing and you use certain financial parameters to decide valuation, then clearly they are not going to work. And I think in the past we've made I would say some peace with the fact that when an early stage business comes in lists, I think using traditional methods of valuation is really pointless. Because first of all, there's no history about them reporting numbers. There's no history of management experience. And in the future, what's going to happen is, again, not something that anybody knows. So essentially, there is really no fair value, right? So as an institution, if you decide to invest in an IPO, I think you're taking on an inordinate amount of risk because all of these things remain uncertain. Now, there is, of course, the FOMO effect, which means that if you're not in the market, then you will lose out on any upside. And I think that is something that most institutional investors tend to do. They tend to participate. But if you ask them on what basis, it is not going to be traditional valuation metrics because they don't stand out. So what is it that drives them? Probably participation. If you see across the board, most institutional investors do participate in newer companies when the financials don't stack up, because they believe that what they don't know is also uniform across all investors, that maybe nobody knows. But some of them are likely to remain very, very large successes over long periods of time. So I think there's a merit to kind of having a portfolio approach to them, buying a little bit across the entire spectrum, and then hoping that some of them will do well, because essentially what we're talking about is a new trend, and some of them will work out.
Yeah, no, absolutely. Tushar, just coming back to you, the other big talking point, one is, of course, listings, IPOs, the new and the old kinds, but there's also, of course, also another trend, which is supply into the market, right? And so we are, of course, now learning that IREDA is looking to raise money. So looking at not a OFS or anything, but a QIP, which means money goes into the company. Rachna is standing by with details. Rachna, over to you.
Right. India's state-owned green lender, IREDA, is preparing for another major equity raise. My colleague Yash and I have gathered from our sources that the company is planning to raise up to 3,000 crore rupees through a qualified institutional placement. We're also told that the issue could be priced at a discount of up to 5% to the floor price. The banking lineup for this round features Motilal Oswal, SBI Capital, IDBI Capital and MK. This fresh fundraising move is a part of IREDA's larger capital augmentation blueprint, which was cleared by the board and shareholders earlier this year. The agency has approvals to raise as much as 5,000 crore rupees through QIPs in multiple tranches, and this seems to be the second one. Because you'll remember that in June, IREDA executed a 2,000 crore rupee QIP, drawing participation from institutional players, including LIC, Societe Generale, and Morgan Stanley Asia. That round too was priced at a discount of up to 5%. Now, the accelerated capital build-up is aimed at meeting rising demand for clean energy financing as India pushes towards 500 gigawatts of renewable capacity by 2030. IREDA has also been diversifying its funding through bonds and overseas credit lines to keep lending competitive. CNBC-TV18 has reached out to IREDA for an official comment. The response is still awaited.
Okay, all right. Rachna, thanks very much for that. So QIP, IREDA, as Rachna pointed out, the second after a quick succession. The first happened in June, July, and now another one is lined up. Tushar, this is the other one, right? Earnings season is behind, and all sorts of early investors, promoters, and some like IRDA raising growth capital. What do you make of it? And it's been a constant now. It's nothing new, but it just stops during the earnings season. Otherwise, the tap is on through the year.
Yeah, I think it's a simple logic that whenever there is demand for stock, supply is likely to follow. You may have this as an inverse logic, and typically when you are selling stock, essentially when you're issuing equity, you are essentially saying that this is the best price I can get, right? That is the reason why a seller will go into the market. And on the other hand, if you were to argue that is there any money on the table left, that is for the investor to figure out. So I think one is growth capital. I think that's a good word you used. That over time, it's not as if retained earnings are going to be enough to really grow to the extent that a young economy like India needs to grow at. So which means there will always be an element of issuance. So that's not something that is bad per se. The problem that you and I are talking about is the excess supply. Now that's the difficult term to explain or to say how much is excess or what is excess. But I think that is when a distinction can be made, that is the raising of capital really necessary for the continued growth of the enterprise or a company? Is it something which is rational and reasonable to expect as a part of the growth plan? Or is it a cashing out? So for example, I think recently we heard that the regulator was talking about the fact that some of these exits are not in the spirit of the game of a market. But I would think yet that these are things that come all at once, especially in a bull market or in a market which is looking for opportunities, and there is a lot of supply which comes as a response to that. So really no good answers here. I think it is a part of the capital market. Issuances are. And if we talk about our markets reaching, very large amounts of market capitalization, then issuances are definitely going to be part of it. So it's not something that is new to the economy. It is just getting listed. That is the way I would look at it.
All right, Tushar, good to have you on the show. Thanks a lot for joining in. Short but effective chat. Appreciate you joining in. Well, it's that part of the show where Nimesh joins us to tell us what he's picking up in D Street Chatter. Nimesh, wobbly looking screen, but not too bad if you compare it with some of our peers. We have actually outperformed today, and I think that trade deal hope, actually the optimism is in the air. Tell us more.
Yeah, Nigel, so in fact, we have to look at it in a reverse correlation now. If the global markets fall, maybe it's positive for India, at least in the very near term, because India has relatively underperformed. So that's something which I've been picking up from global experts as well when I meet them in the conferences. So that's the overall feedback from a market perspective. But today, I get it, again, it's a day of consolidation, not much to talk about in terms of flows, but the number may look very large because of the large block deals. And I think that's a bit of a concern as well, that a lot of supply of paper is actually sucking the liquidity for the secondary market. Today, for instance, including the ITC block, which happened in the pre-open, the net block data could be worth close to 9,000 crores. So clearly that's something to watch out for, and that will show up in the numbers as well in today's post-market data. Technically, 25,950 is a big resistance on the upside. So if that's taken out, maybe then there is a charter that you'll see the new highs on Nifty very soon. Of course, that may coincide with the India-US deal as well. So that, of course, is a big trigger to watch out in the very near term. But I guess from the very short term, the supply of paper is what is hurting the market and capping the upside.
Okay, that's the overall market mood and sentiment. Nimesh, what about individual stocks? Any buzz?
Well, so the first on my list is 5paisa Capital. That the stock is up 10% and on very large volume. So big mover in today's market. Understand one influential HNI investor has been active buyer in 5paisa Capital. If you look at, I was just looking at screener to look at the valuation and the numbers. Grow is at the highest market cap, and 5paisa Capital is among the lowest in terms of market cap. So, of course, no comparables, but there is activity in 5paisa Capital today. The second stock is PG Electro Plus. Post earnings, you've seen a bit of traction in that name as well. The volumes have picked up. Understand one domestic mutual fund is a buyer, as well as a couple of HNIs as well, who've been buyers in the last couple of days in PG Electro Plus. The third name is Laurus Labs. Under pressure today within the pharma names, essentially because there is a very strong indication that maybe you're going to see a large block deal in Laurus Labs very soon. And the last one is Bharti Airtel. That's been buzzing within the telecom names. And in general, there has been buy flows. In fact, I was looking at the delivery stats for the last few days. There is very strong delivery-based buying happening. When large long-only fund is an active buyer, and for Bharti and for the telecom sector, the next big trigger to watch would be as and when there is further tariff hikes for the industry at a large. And that's going to benefit both Vodafone as well as Bharti.
Yeah, absolutely. And that tariff hike would be a big trigger. Yesterday, we had the trigger in the form of the ratings agencies upgrading Bharti Airtel's debt. So that stock's been in focus as well. All right, Nimesh, thank you so much for that. We'll take a quick break on that note. Come back on the other side. And as always, we'll get you the final trading calls for the day with Mitesh.
Okay, welcome back. Markets, of course, under some bit of pressure, but the latest F&O trends, Nigel has walked across to the F&O desk. Nigel, take it away.
Well, the intraday chart is telling you, right, that we're entering that weekly expiry, and that's why the last 30 minutes you've seen a big downtake on the Nifty itself. But still, the high and the low of the day has got protected. The high of the day was around the 26,030. The low of the day was around the 25,877 odd. So that should get protected in terms of today's trading action. And both the strikes that we were tracking, 25,950 call as well as put, the premium's down to zilch because the contract is expiring in the next 15 minutes or so. Individual stocks that we are looking at, well, Muthoot Finance had a beautiful run. There is some unbinding of positions out there. There is still a lot of interest out there, but some lightening of positions explains why that stock is lower. While on Keynes, actually, there is a fresh amount of shorting that we're seeing out there because the stock is down and the open interest build-up is quite large, on that one. So fresh shorts being seen on Keynes. And finally, on GMR Airports, that's a stock that's actually holding well in an otherwise wobbly market. That one continues to see fresh longs on that particular counter. So that's about all the action. High and the low of the day getting protected. But as we speak, the markets have taken a bit of a leg down because of the expiry-related factor. I don't think too much to worry as long as the 20 DMA on the Nifty does hold out. Back to you.
Okay, all right. Nigel got that. Thanks very much. Let's quickly head across to Mitesh now. As promised, final trading ideas for the day. Mitesh, which stocks are you going with and what's the index advice after today?
Yeah. So I think, as I said, I think index, avoided out. I said we'll possibly get an entry around this 25,800, 750 zone, which is what could be the lower end of the range. And that is where I think, entering may be a good idea. But that apart, I think, on the stock side, I think what I want is possibly STBT on Keynes. I think it's heading towards its 200 average, but the structure is quite weak over here. So STBT with a stop at 59.25 for targets of 58.70 or thereabouts, and maybe even lower. And the other one is STBT on IREDA, which is also on the weaker side. So I'm taking two negative calls, but we've been trading with long bias, so kind of balancing it out. But yeah, and there's a STBT with a stop at 149.5 for targets of 146.
Okay, all right. Thanks very much, Mitesh, for that. So, that's some action out there with regards to specific trading ideas. Jay Bala is with us, Catch the Chaos. Jay, good to have you with us here. 26,100. You think a test is coming once again and there's enough in this impulse to take that out?
Yeah, hi Prashant. See, if we've seen the Nifty mid-cap clock record highs, we've seen the Nifty bank clock record highs. So I believe that it should be a matter of time for the Nifty to scale record highs. But it's not without caution. The fact that Nifty has been struggling about 5 times, 6 times around the 26,000 marks, that is a bit of exercise a bit of caution. So it's not all clear. So it should have taken out the all-time highs by now. So as long as the Nifty can stay above 25,318, the previous swing low, I think we are in a comfortable territory. The pullbacks are shallow and fresh record highs should come through.
Okay, all right. What about the Nifty Bank? It seems that the PSU banks, they started off the blocks in style, but the Nifty Bank on a day-to-day basis is making fresh highs, which is encouraging, right? The largest component of the Nifty is coming to the party. Levels on that one?
Yeah, we have been projecting the private sector bank to take over from the public sector banks, and that's been happening. We've seen Federal Bank, DCB, and other smaller banks rally. And Axis is the frontline one that's looking strongest at the moment. But we want contribution to happen from ICICI and HDFC Bank. If that happens, the Nifty Bank has got higher highs to come through. I've been projecting 59,900 as a resistance for the banking sector. So we have come very close to it. So somewhere between 59,900 to 61,000 is the next resistance for the banking sector. So watch out for action to come through either from HDFC Bank and join the other private sector banks, which have been doing pretty reasonably well in the last couple of weeks.
All right, Jay, we'll talk about these markets and all that, the equities in just a bit. For the time being, let's turn our attention to the precious metal space. And I'm sure my mom is not going to be happy with what you're going to say, but I think you're turning quite bearish on gold as well as on silver. You're expecting a near-term pullback. What are the levels we're looking at both on gold as well as silver?
See, the 3886 on London spot gold, that's pretty important. And I believe that's going to get taken out really soon. When that gets taken out, we are looking at least a 4,400 decline, 3,400 to 3,340 for London gold. And likewise for silver. Silver is slightly actually bearish. If you look at silver, it came very close to the previous record highs, and it's coming off from there. So if it were to drop below the previous low of 45.5, it confirm a double top that's been clocked for silver. And in any case, I'm anticipating silver to drop to somewhere close to 42 to 41. That's the short-term picture. The medium to long-term picture is both gold and silver are straddling an extreme bullish case and an extreme bearish case. Will decide on how the dollar index unravels, and will decide in a couple of weeks' time frame.
All right, Jay, I'll just have to get on to a call. I'll tell you what, because you're calling for a 20% drop on both those two. So I'll just speak to Mom. I'll tell you what, we'll slip into a short break, come back. We'll get your other calls in terms of the indices, the dollar index, as well as a couple of stocks. Don't go anywhere.
Okay, welcome back. We are in the final leg of today's trade. So let's go back to Jay for some ideas. Jay, when you've had a positive stance on the market, the Indian market, and also, I mean, the last time we spoke, you were not in the camp that believes there's any mega correction in US tech stocks or the NASDAQ coming through. So if that stance, that positive stance on equities is intact, then here in India, which are the sectors to look at, some stock ideas, and what should we do at this juncture?
Yeah, see, I mean, I've been quite positive on the auto sector and the metal names, and we need to probably rotate out of those sectors. And I would consider Reliance as a proxy for the Nifty energy sector. So I would anticipate Reliance to clock fresh 52-week highs past about 1556, I think 1550 or some odd levels around there. And I think I'm anticipating Reliance to take out that level. So that's one. The other one is you need to focus on real estate. Real estate stocks have been consolidating, and watch DLF. And if DLF were to break out, I think somewhere about, I think my recollection is right, about 763 is the level. If you were to take out 763, 783, the entire real estate sector will start to rally. And watch out for crude play. I'm anticipating crude to decline to fresh low below the April level. So as a byproduct of that, I'm anticipating Berger Paints. Berger Paints has got a triple bottom around 440, 435. And if it crosses 605, it will confirm a triple bottom. And in the very short term, it's got an inverse head and shoulder pattern. So that's also giving a potential for the stock to scale, an objective of 750. And again, tires also could be a beneficiary of lower crude prices. And I've been positive on TVS Street Chakra. I mentioned this in August and September. If you're already long, then you can add to your position in TVS Street Chakra. But fresh longs might be a little bit of skewed risk reward, but it makes sense to add to the existing position. Stop loss of about 4,400. I'm anticipating TVS Street Chakra to scale fresh record highs around the 5,100 to 6,200 mark. It could be a wide range, but take it as a very objective, lower objective at around 5,100, 5,200.
Okay, all right. You've got a scary one on the dollar index as well. That's been quite well behaved. You believe near term it can pull back a little bit? To what levels?
That's right. I would anticipate the dollar index to print somewhere about 98.6 at least, and then go up. The objective for the short term for the dollar index is about 103. Depending on how it gets there, I would revise my medium-term forecast. At the moment, I'm anticipating dollar index to trend lower in the medium term. But if it were to get to 103 in a very sharp fashion, then I might need to revise my outlook on the dollar index.
Okay. All right, Jay, we'll leave it on that note for now. Thanks very much. Just give us a couple of minutes. We'll quickly go over today's session. So it's going to be a day of a drop. We're talking 120 points lower on the Nifty. That's about 0.5%. But again, contrast that with the kind of slide that we've seen across Asia, markets falling between 3 to 3.5%. And this is actually not a bad performance by the index. What led things lower on the Nifty? Let's take a look. Interglobe Aviation, 2.5% lower. Tata Consumer, which was down. Tech Mahindra, Jio Financial, Apollo Hospitals losing about 1.5%. There's Infosys. So as you can see, there are not too many clear sectoral trends, just an overall sense of profit taking. That's what it was. It wasn't about too many big sector calls, at least not on the large cap screen. Lever, L&T, I mean, all of these stocks giving up between 0.5% to about 1%. What did work on the upside was Bharti Airtel, thanks to that S&P upgrade coming in on their debt, 1.5% up on that stock. Axis Bank, Shriram Finance, some of these financials maintained a little bit of green. And Asian Paints saw some buyers. But other than that, I mean, if you're looking at the Nifty heat map, it is indeed far more red than green at this point. Nigel.
New listings, PhysicsWallah, 42% up. Bombastic listing out there, very, very strong. And continues to grow, growing. That one was up close to around 8%. The stock is effectively almost, doubled since listing. GMR Airports, positive note coming in for Jefferies. Street Laxed up close to around 6%. That was about the winners. In fact, MV Photovoltaic, that one had opened up with a cut of around 3%. That's the other new listing, but it ended in the green. So good going on that one as well. MV is the one that I'm talking about. We have Inox Wind though on the flip side. That ended low in today's trading session. Paytm, there was a large trade out there. So that stock, in fact, did end lower with a cut of around 3%. and Adani Power as well, another stock that did see some profit taking. So net, markets go home with a bit of a cut, but there was an expiry-related factor that did play out, and that's why the Nifty did dip in today's trading session. Otherwise, as Surabhi mentioned, we were relative outperformance in comparison to our peers. I'll tell you what, we'll wrap up on this edition of Closing Bell. Don't go anywhere. The team of Markets Forward takes over next.
Markets snap a six-day gaining streak. The Nifty fails to hold on to 26,000 with more than 40 stocks ending in the red. The market breadth favors declines and all sectoral indices close in the red as well.
New age companies in focus. Physics Wala lists at a 33% premium to its issue price, ends over 40%. The EdTech firm aims to turn profitable within the next 12 months.
Grow keeps growing. The stock jumps 90% above the issue price in what some call a rationality-defying bull run. CNBC-TV18 studies key metrics of India's #1 brokerage by customers for some answers.
And Day Street witnesses a flurry of block deals post-result season totaling $1 billion as key players like Mphasis, ITC, Paytm, Emcure Pharma and Zinca Logistics see pairing of stakes.
Hello and welcome to this edition of Markets Forward, your go-to show where we aim to get you snippets of all the day's crucial data points and the trading points, and of course prepare you for the next trading session. I'm Surabhi Upadhyay. With me is Maglam Malu. Hi, Maglam.
Good evening, Surabhi. You know, the way the market was, it seems like there's a magnet placed at around 25,800 and there's another one which is placed just around the 26,000 mark. Every time the market moves on in either direction towards that, gets moved towards the other direction, and that's exactly what took place today as well. If you look at the intraday chart of the Nifty as well, for a longish period, it was below that 25,900 mark. Thereafter saw a big recovery closer to the 25,960, 25,970 mark. As it moved towards 26,000, the other magnet came into action, and towards the end of trade, we ended around 25,900. Very happy day for all those who wrote the 25,900 straddle, because it was also the weekly options expiry, a straddle being a call and a put together, which is basically a trade made for no change from close to close mark from that strike, which is 25,900.
Absolutely. It's been trading within boundaries, and then this mark of 26,000, roughly 26,100, it's proving to be a bit of a jinx. But let's not get too negative, because you have to keep the global context in mind. This was India's performance, just about 0.5% lower, against a sea of red across Asian screens. You had the Nikkei falling over 3%. You had the Kospi falling over 3%. Hong Kong was down about 2%, so on and so forth. And this because the AI trade is feeling a bit jittery ahead of NVIDIA's numbers. So against a global somber equity backdrop, we fell only 0.5%. That's the headline. But I guess so we have plenty lined up on the show.
A lot lined up on the show. Just to complete that point on AI, you know, when the world rallied because of AI, we didn't rally as much. Yeah. That time the question was, oh, FIs aren't in the Indian markets because we don't have any AI play out there. So we weren't participants in that party, and that's why we're not affected by the hangover of that party, so to say, as well. But let's tell you what we have for you on the show right now. Hormaz, as always, joins in with all the movers and shakers. D Street sees block deals worth $1 billion. Stocks like Emphasis, Paytm driving major transactions. Shares of Growth doubled since listing, so we'll get you an analysis on that one. Jefferies has initiated coverage on WeWork, so that was another stock which was a gainer. And last but not the least, we delve into all the key events you need to watch out for tomorrow's trading session. All right, with that, let's go across to Hormaz.
There are some interesting moves in today's session, but there were a couple of pockets that were sulking as well. Real estate was one such pocket, and almost every stock on the Realty index was trading with losses in today's session, be it the bigger names, Sobha, Lodha, or even DLF for that matter. All of them ended 2 to 3% lower. Metals and IT were the two other pockets that were also sulking in today's session, with Vedanta, pull up Hindustan Zinc, LTI Mindtree, Tech Mahindra, larger names, smaller names, all of them 1 to 2% lower as well in today's trading session. And a lot of newsmakers today, of course, can't not talk about Grow. There's still another 8% added to today to its tally at the close of trade. With Fairchem Organics among the top gainers among the small cap names, Bombay Burma after that agreement termination with MSTC, and of course the two QSR names, Sapphire and Devyani International, after that latest decision from IRCTC with regards to opening of stores on railway stations, are doing fairly well in today's session. A lot of brokerage commentary coming out in today's session. Jefferies, the positive view on WeWork. And the stock did well, but still below its IPO price. GMR Airports also, Jefferies, another bullish note. The stock did well today, but MCX had an initiation from Axis Capital as a bullish note as well, but the stock didn't do as much, still ending just 1/3% lower in today's session. And lastly, stocks at 52-week highs today. At Federal Bank continuing to move higher. The mid-sized, smaller names doing well in the banking space. Bharti Airtel, another record for the stock today. And Sequent Scientific and TVS Srichakra also ending at 52-week highs today.
Okay, all right, Hormaz, thanks very much for all that action. Let's get to our top story of the day. The end of earnings season has triggered a spate of block deals on the street, with 5 major transactions mopping up over $1 billion. This includes names like Memphis, Paytm and ITC, just to name a few, seeing promoters as well as investors sparing stakes. Vivek is here with more details on all these major transactions. Vivek?
Well, thank you so much for that. So essentially what has transpired in just the first half hour of trade, or even earlier than that, we've actually seen over $1 billion just via block deals actually getting executed. Now, quite a few large blocks as well. The first one, of course, being Emphasis. Yesterday afternoon, we told you about how there was likely going to be a very large block deal coming in from, the promoter entity, which is a private equity, Blackstone. 4,600 crore, a 6-month lock-in for that particular name. Paytm, again, quite a large block deal, 1,600 crores worth of shares. Saif Partners as well as Elevation Capital, a 2-month lock-in for that particular name. Emcure Pharma, again, here it's a private equity. Bain Capital exited, close to 500 crore worth of equity. 3-month lock-in for this particular name. Blackbuck or Zinca Logistics, a smaller block deal of close to 240 crore. Clutch of promoters, making a partial exit. Lockup of close to a year. And ITC, this particular name, while we don't have the exact details of who exactly sold, but last couple of days we've seen high volume-based activity in this particular name. A block deal today valued at a little over 1,900 crores is what transpired. So totally almost 8,800 or close to $1 billion worth of block deals is what we've seen in the session today. And what we understand is that quite a few large blocks are in the offing as well.
All right, we take that point, Vivek. Thanks a lot for that. Let's go across to our guests now. Jay Bala of CashTheChaos.com joins in. Mayuresh Joshi also on our show from William O'Neill. Jay, good evening. On the Nifty itself, we've been talking about how it's a range. But the good part is that this range is, seeing an upward grind, so to say. Or maybe, what do you call it, an upward consolidation. Do you see this grind continue, or at some point there would be a breakout?
Hi, Madlam. Good point. Actually, the number of times the markets have been testing 26,000 and 26,100 mark, the markets are getting closer, the resistance becomes weaker. For me, what you're pointing out is absolutely correct. It looks like a bullish upward consolidation. And besides the Nifty itself, you had Nifty Midcap clock fresh record highs and Nifty Bank clock fresh record highs. So I believe it's just a matter of time before the Nifty also scales fresh record highs. But it's not without some amount of caution. You can also flip it and look at it the other way. The markets have been struggling around the 26,000, 26,100 mark about 5-6 times now. So some amount of caution is required. As long as the Nifty is trading about 25,318, I still believe the probability of market taking out fresh all-time highs is higher than the markets going lower.
Okay, all right, got that. Jay, stay on. We'll have more questions for you in just a bit. But let's also start talking stocks. Shares of WeWork India rallied after Jefferies initiated coverage with a buy rating. The brokerage firm called for nearly 30% upside on the stock, driven by a strong set of structural tailwinds. This includes WeWork's market leadership in India and premium positioning, among other factors. Sonal is here with more details. Sonal.
Well, yes, the stock is buzzing in trade, but do remember it is still below its listing price. The stock is on our radar because Jefferies has initiated coverage on the stock with a buy rating and the target price is 790 rupees a share. Now, do remember it is India's largest flexible workspace solutions provider, which is by revenues in the country and in the listed space as well, of course. At 17% CAGR, Jefferies says flexible workspace stock is growing at 2 times the pace of the office stock. So basically, co-working space sector in general is growing faster than the commercial space, and the total revenue CAGR of 22% for this company over the last 2 financial years was driven by a combination of 2 things. First, they could increase the rentals, that's the average rental per unit, and also because of demand for flex office space grew considerably, which contributed around 66% of the total growth. The operating leverage led to adjusted EBITDA to grow as well from 14.4% to 19.2%, which came by in FY25. And they expect this trend to continue as well. So basis IGAP accounting, they expect the revenue CAGR to be around 22% and EBITDA CAGR to come in at 28% for the next 3 fiscal years. And also the capex cost, which is coming currently per desk, is at 1,35,000. This implies that going forward, the capex could be around 250 to 300 crore rupees in terms of expansion. Do they have that cash? They have been continuously improving that number. They already saw cash flow generation of 300 crore rupees in the last 3 fiscal. They've been able to reduce debt with the IPO proceeds, and Jefferies believes this is a trend which would continue going forward as well.
Okay, all right. Got that, Sonal. Thanks very much. So we, of course, have Jay with us. Also joining in the conversation is Mayuresh Joshi. Mayuresh, it's been really the season of big listings and what stocks have done even after listings, right? So I think a large part of our conversation is going to be geared towards these stocks. Let's start with WeWork. I mean, what do you think of it, the business, the rationale that Jefferies has now given out, and whether it merits a buy?
Afternoon, Surabhi. So I think if you probably look at how the EBITDA margins at a central level have probably played out for WeWork, if I'm not mistaken, I think it's steady state. So if you look at a year-on-year basis, it's almost at 27.5% as we speak. In terms of the work desk additions that they've probably done, I think there has been a significant additions that they probably achieved at the end of Q2, where they've added more than 20,000 odd desks. And what really this has done is that the overall same center sale growth has actually gone higher because occupancy is now stand close to 84%. Across 59 growth centers that they operate out of. And therefore, I think as the center improvement probably takes place, as occupancy levels remain stable and consistent, the expectations in terms of a stable show on the margin performance and increasing as the overall space numbers start increasing, including the desk numbers, that should probably start reflecting in better numbers going forward. So yeah, I think a strong move, how Q3 numbers play out is going to be extremely critical for the stock.
Have you done a comparative analysis, Mayuresh, on WeWork with Office and SmartWorks, the others that recently listed?
Yes, Mandala. And again, I think the kind of dominance in terms of the first mover advantage that WeWork probably has probably still plays out. But even in the case of AWFIS, I think the expectation largely is that as a domain unit, the expectations of more centers coming in across the length and breadth of the country will probably start working in its favor. And that dynamics is obviously going to play in terms of better revenue numbers, better margins, as I said, with occupancies probably starting to inch higher for newer centers that come in. And therefore, for existing centers, Mangala, I think the like-to-like comparison becomes far more saner because with new growth centers coming through, the occupancies will take some element of time. With a steady state base that as a comparison element for AWFIS and WeWorks, I think both look equally strong in terms of core dynamics that they're probably posting.
Got that, take that point. But, none as big as the kind of move that we've seen in Grow. Just 3 or 4 days into listing, and the stock has nearly doubled from its issue price, up 10% today as well. The broker now commands a market cap of over 1 lakh crore rupees. But is this valuation justified? And are there any other comparables that we have versus Grow after this up move that we've seen in Grow? Hormaz Fatakia joins in with a deep dive. Hormaz.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark every time someone hit a youth six. He used to say, going, going, gone. Now, however, this latest listing on Dalal Street has been growing and growing some more, at least in terms of stock price. Now, it's been 5 days since Grow listed and the stock has nearly doubled from its IPO price of $100. But how does this latest Dalal Street entrant stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, Grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform and therefore it stacks well above the other two names. But when it comes to the average revenue per user or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio or the price to earnings growth for Grow, that comes up to 1.63. Now, that is based on a 37% profit CAGR and it's based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Grow was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The management spoke to us earlier and they spoke about how they plan on growing the MTF book and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, Grow's ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Grow comes on Friday when it reports its quarterly results, which will be its first after its listing. Now, that's Grow for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Okay, indeed, Growth has been hitting it out of the park, Armas. Thank you so much for that. Let's go back to Mayuresh on this. Mayuresh, I mean, gravity-defying moves, right? What do you say when the stock moves from 100 to nearly 200 in what, 5 trading sessions? So what's the sense on valuations? Should you wait for a day, buy, not buy, just stay away completely? What's the advice?
No. So somebody just pointed out, Surbi, that with the rise that we've seen today, Grow's market cap has grown more than BSE. I have not double checked that, but if that is the case, a market participant having a market cap more than the overall exchange valuation itself. So I think that is something that we need to comprehend about. But again, I think the numbers that Horma spoke about, I think FY30 is a long way away. I think what kind of changes happen in that interim, how much competition plays its part, are there any regulatory changes in that interim that we see, are there going to be technological advancements that are probably expected to come through as well, are all unknowns at this point of time. And therefore, with these unknown variables, to peg a number on FY30 probably looks a little bit far-fetched in my opinion. Having said that, from a valuation perspective, obviously I think stretched as we speak, because this is now factoring in the best to come over the next few years. And as I said, I think the statement probably holds true that the market cap has become more than the exchange, that is BSE.
Right. We take that point, Mayuresh, 1,15,000 crores is BSE's market cap, 1,16,000 crore is Grow's market cap. It sounds great as a headline-grabbing statement, but it will be very interesting to see where it goes as well, because both have their own pros and cons. BSE does not have the entire market's market share, but Grow is a market leader. Take your point entirely, because I remember when DMart had listed in the kind of valuations that DMart traded at, the market cap of DMart was actually a lot higher than a lot of these FMCG companies put together as well. So that was, one was wondering whether the FMCG companies that a retailer sells or not, is their market cap justified or not. The important part, however, one needs to keep in mind is that early days of an IPO, so a large part of the shares are actually locked. So the impact cost on either side would be fairly exaggerated, and that's something that we're seeing in Grow as well. The impact cost would be exaggerated by virtue of the fact that only currently 7.3% of the equity of Grow is available for trade. So if you translate that into market cap, that amounts to about 8,300 crores of shares available for trade as against a market cap of 1,15,000. Take your point, Mayuresh. Final question to Jay Bala. Jay, on BSE, the stock's been doing okay. Is there a chartical call that you have?
See, I've liked MCX more than BSE, but that is not to state that BSE is not looking good on the charts. But I still anticipate fresh record highs to come through for BSE. The June high it saw, that probably going to get taken out for BSE Limited. I would anticipate somewhere about 3,100 to 3,200. But it's the final leg of the move, in my opinion. So, exercise a bit of caution, and allocation should be sensible.
All right, gentlemen. Thank you so much for that. Take a short break. Come back with more on the top corporate voices that joined us on the channel today. Also, the key events to watch for tomorrow. Well, we've been talking about the markets here on Markets Forward. Let's take a look at some of the global opinions coming in for India. The founder of Goldilocks Global, Gautam Shah, told CNBC-TV18 that the momentum in PSU banks is far from over. He said that he expects a 15 to 20% upside in the top names, including major NBFCs. The global names that were bullish on India have to be Morgan Stanley. So we'll hear out Citi's Drew Pettit as well, who said that we are in an AI boom, not an AI bubble, and added that AI trade isn't fueled by excessive leverage. On India, he said that while earnings and fundamentals remain strong, Indian valuations have run ahead of it. So here are Gautam Shah's view and the global view coming in.
our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things, even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher. Then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my pecking order: PSU banks, NBFCs, and housing finance companies.
India is a market that we took down from overweight to market weight in a global context. What we're actually looking for is not necessarily the anti-AI trade. It is the AI at a better price trade, which you're starting to see in China, what you're seeing in international markets, and honestly still in some pockets of the United States. So while AI may be questioned, I would say a little bit more frequently as of late, it's still a trade that structurally we like. We just want to get it at a better value than you get in broader indices.
Okay, so that is the voice coming in from Citi earlier today. Let's move on to the corporate voices of the day. Physics Wala made a stellar debut on the bourses today. Stock was up 40% on day one over its issue price. The company's co-founder Prateek Maheshwari told CNBC-TV18 that the edtech firm hopes to turn profitable within a year and grow around 30% over the next few years. He also added that the business will remain largely online, which currently accounts for 52% of total revenue.
Solar energy player MV Photovoltaics also joined CNBC-TV18 on their listing day today. They said they'll spend about 5,500 crore rupees on expansion over the next 18 months. They're planning to add 6 gigawatts of solar cell modules, which could bring about 5,000 crore rupees of revenue once completed. This entire 5,500 crore worth capex, and the margins could be between 30 to 33%.
Keynes Technologies CEO told CNBC-TV18 that the company's existing business segments remain strong and expects 1,000 crore rupees from the OSAT facility business. That's outsourced semiconductor assembly and testing. So they're expecting 1,000 crores from OSAT revenues by FY27. Also adds that 60% of the firm's OSAT capacity has already been tied up with clients. He also confirmed that the company's new PCB manufacturing facility is on track to be completed by the end of this year.
All right, with that, let's let you some key market events to watch out for. Gaurav Javalkar with us to tell you what's important tomorrow.
Well, as for tomorrow, if you look at stock action, we do not have any stocks specifically, but let's not forget about BFSI and IT segment. And the reason being that FM is on a spree for pre-budget consultation and meeting industrial stakeholders, where she will be meeting the stakeholders from financial services and insurance, and at the same time from information technology. Other than that, let's also not forget about the IPO market. We have seen the IPO market being hot for the last few days. Tomorrow is also a listing of Tenneco Clean Air. And if you look at the subscription data, we have seen the IPO issue was oversubscribed almost 62 times, with the QIB subscription as high as 175 times. So let's see how the listing goes for this company. Apart from that, we are also getting new IPO, which will be Excelsoft Technologies. The company is coming up with an IPO to raise around 500 crores, and the price band is set at 114 to 120 rupees. And lastly, from the global markets, let's not forget about the US FOMC meetings minutes. And this is important given that we've already seen the dynamic nature of the market, and now there is a set of new investors who believe that there won't be any rate cut in December. So definitely we will be watching out on all these events for the day tomorrow.
Right, Gaurav, thank you so much for setting us up for trade tomorrow. With that, we wrap up on this edition of Markets Forward. Stay tuned to CNBC TV18. More news and updates on the other side.
Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the headlines that we're tracking for you this evening. Sensex and Nifty snap a 6-day winning streak. Nifty drops below 26,000. All sectoral indices end in the red. Mid-caps fare worse than the blue chips. Strong debut for edtech company PhysicsWallah. The stock lists at a 36% premium, gains a market capitalization of over 44,000 crore rupees on day one. The end of earnings season sparks a block deal rush. Promoters and strategic investors pair stake worth 8,800 crore rupees in Mphasis, Paytm, ITC, Emcure Pharma and Zinca Logistics. Capital market representatives meet Finance Minister Nirmala Sitharaman for pre-budget consultations, seek lower securities transaction tax on cash market trades, proposes buyback tax only on the profit component. Commerce Minister Piyush Goyal says there is no hiatus in the relationship between India and the US as trade talks continue. His statement comes a day after Trump's advisor Kevin Hassett said a trade deal with India is close. The ball gets rolling on PSU Bank consolidation. Finance Minister tells CNBC-TV18 that work on creating big world-class banks has begun. Veterans warn that any consolidation plan must focus on synergy, not just size. Also caution against creating banks that are too big to fail. Gross purple patch remains intact even 5 days after listing, captures a market capitalization of 1.2 lakh crore rupees, exceeds BSE's valuation, but will the rally continue? CNBC-TV18 analyzes the key metrics. Relief for builders, miners, steel industry. Supreme Court reverses its own judgment that projects violating requirement of prior environmental clearance could not be approved retrospectively, observes that the previous judgment would lead to demolition of public projects worth 20,000 crore rupees. Enforcement Directorate searches a dozen premises linked to real money gaming companies Winzo and Gamescraft. Sources claim authorities have unearthed crypto wallets used by promoters, indicated possible money laundering. Police deployed at fuel stations across Mumbai as CNG supply remains in short supply. Thousands of taxis and auto rickshaws stay off roads, crippling the transport across the city for the third day. Mahanagar resumes supply to some fuel stations. United Nations Security Council endorses US President Trump's plan for Gaza, which includes deploying an international force and a roadmap for a sovereign Palestinian state. But Hamas rejects the resolution, claiming it does not meet Palestinian demands. Those were the headlines that we're tracking for you this evening, but let's start with the market action of the day. Sensex and Nifty snapped a 6-day winning streak. Sensex lost nearly 300 points and the Nifty lost over 100 points to drop below that 26,000 mark. All sectoral indices ended in the red, with the Nifty Bank Index faring slightly better than the benchmarks. However, mid-caps underperformed the blue chips. Morgan Stanley expects Indian markets to regain momentum in 2026 with a bull case target of 107,000 for the Sensex by December 2026. In its latest outlook, the brokerage says the index could surge nearly 27% from current levels if macro and policy tailwinds hold. Even in its base case, assigned a 50% probability, the Sensex is seen at 95,000 by the end of 2026, implying a 13% upside. Gold prices fell for the fourth straight session as global markets reacted to a stronger dollar and fading hopes of an interest rate cut by the US Fed next month. Gold prices in India also reflected this weakness, with 24-carat gold prices at 12,343 rupees a gram. Commerce Minister Piyush Goyal has said that there's no hiatus in India's relationship with the United States. Speaking at the 22nd Indo-American Chamber of Commerce, Goyal said that a comprehensive partnership has many elements, all of which may not run at the same speed. This comes a day after White House economic advisor Kevin Hassett said that the US is very close to reaching a deal with India.
We're still quite hopeful, but it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
I don't believe there's any hiatus in the relationship. It continues to be very, very important, very strategic for both countries, the United States and India. परिवार में भी कभी-कभी थोड़ी बहुत नोक-झोंक तो होती रहती है And of course, negotiations is a process, and India as a nation has to secure its interests, has to secure the interests of our stakeholders, businesses.
EdTech platform PhysicsWallah made a strong debut on the Lal Street with its shares listing 36% higher than its IPO price. The company's post-issue market capitalization was close to 44,000 crore rupees. Speaking to CNBC-TV18, PhysicsWallah's co-founder Pratik Maheshwari said the firm hopes to grow at a rate of 30% and turn profitable in under 12 months.
We are on a mission, and that mission is more important, that access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years.
Let's now take a look at the slew of block deals on the Lal Street today. Emphasis promoter Blackstone is likely to have sold 9.5% equity in the company through block deals. The floor price was expected to be pegged at a little over 2,500 rupees per share. That's at a 4.4% discount to the stock's closing price yesterday. At this price, the total deal size amount is a little over 4,600 crore rupees. Shares of Paytm's parent company 197 Communications fell after 2% equity changed hands in a large block deal. The shares were exchanged at an average of 1,300 rupees per share, taking the total transaction value to 1,700 crore rupees. Sources told CNBC-TV18 that private equity funds, CEF3 Mauritius, CEF Partners and Elevation Capital were the sellers. Grow's stellar run continues even 5 days after its listing. The stock has gained every day since listing, soaring a whopping 94% from its issue price of 100 rupees. The company now has a market capitalization of 1.2 lakh crore rupees. The next major trigger for the stock will be its earnings, which is expected this Friday. The big question that we're asking is, are they ready for the long innings? Hormaz Patakia analyzes.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark: every time someone hit a youth six, he used to say, going, going, gone. Now, however, this latest listing on the Lal Street has been growing some more, at least in terms of stock price. Now, it's been 5 days since Grow listed, and the stock has nearly doubled from its IPO price of $100. But how does this latest Lal Street entrant stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, Grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform, and therefore it stacks well above the other two names. But when it comes to the average revenue per user, or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio, or the price to earnings growth for Grow, that comes up to 1.63. Now, that is based on a 37% profit CAGR, and it's based on an FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Grow was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The management spoke to us earlier and they spoke about how they plan on growing the MTF book and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, grows ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Grow comes on Friday when it reports its quarterly results, which will be its first after its listing. Now, that's Grow for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Absolutely. Thank you so much for that, Harmaz. Now, the Mumbai Police's Economic Offences Wing will summon all accused in the alleged financial fraud at the Leelavati Kirtilal Mehta Medical Trust. Sources tell CNBC-TV18 that HDFC Bank MD and CEO Shashidhar Jagdishan will also be summoned. The complaint filed by the current trustees alleges that former trustees engaged in irregular financial practices amounting to 1,300 crore rupees. The Supreme Court has set aside its own verdict, which ruled that projects violating requirement of prior environmental clearance could not be approved retrospectively. In a 2:1 split verdict, the top court held that the earlier verdict would be damaging to public interest as it would lead to the demolition of public projects worth 20,000 crore rupees. The order comes as a major relief for realtors, miners and the Steel Authority of India. The Apex Court has agreed to hear a PIL seeking a court-monitored probe of an alleged banking fraud involving Reliance Communications. The court has sought reply from the Union Government, CBI, ED and Anil Ambani within 3 weeks. The plea filed by former Finance Secretary E.A.S. Sarma claims that over 40,000 crore rupees has been siphoned off. India's state-run green lender, IRDA, is planning to raise up to 3,000 crore rupees through a qualified institutional placement. Sources tell CNBC-TV18 that the issue would be priced at a discount of up to 5% to the current market price. This fresh fundraising move is part of IREDA's larger capital augmentation blueprint to meet the rising demand for clean energy. On to a CNBC-TV18 exclusive. Capital market representatives met Finance Minister Nirmala Sitharaman for pre-budget consultations. The industry has sought lower securities transaction tax on cash market trades and proposed buyback tax only on the profit component. Shivani Bajaj has more. Shivani, take us through the industry's proposals.
Well, yes, the Finance Minister held a pre-budget consultation with the market representatives here in the Kartavya Bhavan in New Delhi, and sources are indicating some significant asks from the industry. Now, top of the list is a push to reduce STT on cash market trades and keep it lower than derivatives, something industry players say is essential for improving the market depth. There was also a detailed discussion on boosting household participation in equities with a proposal to raise it from the current 5% to around 8%, signaling a big shift in how savings could be channelized into the capital markets. Now, another key recommendation by the industry participants was on buyback taxation, where companies want the tax to apply only on the profit portion instead of the entire buyback amount, a move they argue will encourage more efficient capital return. Now, sources also say that there is a call to align short-term dividend tax rates for domestic investors with NRIs. Right now, NRIs pay 20% in the short term, while domestic investors can be taxed as high as 42%. So all eyes are now on whether the Finance Ministry takes these suggestions on board as it shapes the upcoming budget. Back to you.
So Shivani there with the latest on that front. But on that note, it is time for us to head into a short break. Coming up next, police deployed at fuel stations across Mumbai as CNG supply remains in short supply. More details on that when we come back. Stay tuned. Welcome back. You're still with us on Business 360. Boeing has secured a $38 billion order from Emirates for 65 additional 777-9 aircraft on the opening day of the Dubai Air Show. Emirates is already Boeing's largest wide-body customer, and this deal takes its total order book with the plane maker to 315 wide-body jets. The airline's chairman called the purchase a long-term testament to its partnership with Boeing, GE, and the wider U.S. aerospace industry. Billionaire investor Peter Thiel has fully exited his Nvidia position, offloading nearly $100 million worth of shares. The move comes amid growing concerns of an AI-driven bubble in tech valuations. Nvidia made up almost 40% of Thiel's portfolio. His exit comes just a week after Japan's SoftBank also sold its entire stake in the chip maker. Onto a CNBC-TV18 exclusive, the Enforcement Directorate is searching a dozen premises linked to real money gaming companies Windsor and Gamescraft. Sources tell CNBC-TV18 that authorities have unearthed crypto wallets used by promoters, indicating possible money laundering. Timsy Jaifuria is here with all of those details. Timsy?
Well, that's right. Sources have told CNBC-TV18 that the Enforcement Directorate's Bengaluru zone is conducting searches at 11 premises related to Windsor and Gamescraft. These are the online gaming companies, the gaming apps, and these searches are being carried out 5 in Bengaluru at 6 premises in Delhi NCR, which cover the corporate office of these 2 companies and also the residences of CEOs, COOs and CFOs of both these companies. These are being done under PMLA based on FIRs, where victims have alleged that the companies manipulated algorithms, putting gamers at a disadvantage, and initial searches suggest that the promoters, the companies, the apps were actually holding crypto wallets, cryptocurrencies to money launder. As we speak, the searches are underway and further investigations are underway. We'll keep you updated.
All right, Timsy, thank you so much for those details. Now, the Enforcement Directorate has conducted searches at Al Falah University in Faridabad and at locations linked to its trustees as part of the ongoing probe into the Delhi car blast case. The raids, which were conducted across 25 locations, come days after 3 doctors connected to the university were suspected of being part of a terror module. Initial findings indicate several red flags consistent with shell company activity. Umar Unnabi, who drove the vehicle carrying the IED that exploded near the Red Fort on November 10th, was working at the university as an assistant professor in the general medicine department. Top Maoist commander Madhvi Hidma was killed in an encounter with the police in Andhra Pradesh. 5 others, including Hidma's wife, were also killed during the operation, which is still underway. Hidma, who had a bounty of 50 lakh rupees, was involved in 26 major attacks. The encounter was launched after security personnel received intelligence inputs about the movement of Maoists near the Andhra Pradesh border. Mumbai's public transport services are still in limbo as CNG remains in short supply for the 3rd straight day after damage to a major gas pipeline. The management of Mahanagar Gas, which has an exclusive license for Mumbai, had told CNBC-TV18 that supply would be restored by noon. CNG pumps saw long queues for refueling. Commuters had a harrowing time as several cabs and auto rickshaws were off the roads. Santya Gora gets us the latest on the CNG outage and how it has crippled the maximum city.
Right now we are in Mumbai's Goregaon area. Yesterday when we were here, there was only one line of auto rickshaw drivers, and now there is another line parallel to the first one. This line is of private CNG vehicle owners and app-based CNG vehicles. दादा आप कब से खड़े हैं लाइन में?
2 बजे से.
रात के 2 बजे से.
रात को 2 बजे से.
अभी तक नंबर कुछ मालूम पड़ रहा है कितने देर में आएगा, कितना लंबा लाइन है आगे?
लंबा कुछ नहीं मालूम पड़ रहा है.
We are in Mumbai's Santa Cruz area right now. This is a queue for the auto rickshaws here outside Santa Cruz railway station. Let me try and speak to some of the people. Sir, आप लाइन में कब से खड़े हैं यहाँ पे?
I am here from last 10 minutes. So facing a lot of issues. Because since yesterday, normally it takes 10-15 minutes to get an auto, but since yesterday we are taking almost 40 minutes standing in the queue.
The gentleman here is not alone, whether it's Bandra, Santa Cruz, Borivali, Goregaon, all these key areas from where commuters take auto rickshaws and Kalipili taxis to their respective workplaces or their respective destinations. All of these places have similar lines and people are having a tough time.
So Santya there with the latest on the CNG supply disruption. Moving on, the government has launched National Action Plan to contain antibiotic resistance. Health Minister JP Nadda said that antimicrobial resistance is a major public health concern as misuse of antibiotics has become common practice. He added that the issue can only be addressed through collective action. The plan focuses on improving awareness and enhancing laboratory capacity and infection control in healthcare facilities. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Hello and welcome to Commodity Champions. Well, the wedding season is officially back, not because it ever went out of style, but because it naturally peaks between November and January every year. According to the Confederation of All India Traders, nearly 46 lakh weddings are expected this year, with a staggering 6.5 lakh crore rupees likely to be spent on these. While the number of weddings has only ticked up slightly, the value of spending definitely has surged. A jump driven by largely due to rising disposable incomes and inflation in precious metals. That gold frenzy isn't just a wedding story, it's a macro story. In October alone, India imported $14.7 billion worth of gold, a threefold year-on-year increase. That pushed the country's goods trade deficit to a record $41.7 billion. At the same time, India's gem and jewelry exports tumbled. They fell to just about $2.3 billion for the month of October, down nearly 30% year-on-year. But there's a silver lining to this. Research from ICRA suggests that gold import growth could cool in the month of November and December, which may help to ease the import pressure. To understand what gold industry predicts from here on in surge of demand and also in sense of prices, whether they will cool off or continue rising, we are joined by a great panel. Kaushalendra Sinha is from IGS. We have Shreyansh Kapoor of Kashi Jewels. Pankaj Kumar Jagawat is from Shanti Gold. And we have Sanyam Mehra of Unique Chains as well. Gentlemen, I thank you so much for joining in. And as they say, the wedding season in India is never out. It almost runs about 7 to 8 months. But this is a time that in next 45 days, we have almost 48 lakhs weddings happening. Kaushalendra, this one is to you. What is it that you're sensing this time around? Because the imports have been huge. Most people are out buying, already have bought perhaps. How are you looking at the overall trends right now?
Thanks, Manisha, for putting up this session, and thanks for inviting us on the panel. I think it's buoyant. It's buoyant. If you look at the price on the gold side, whatever escalations that we have seen recently, it is kind of stabilized currently, and the market has also accepted the new price levels which has come. So the market has been responding very positively. We are seeing the consumers coming to the market, not only buying jewelry, but also investment per se. So there is a lot of investment which is also flowing into 24-karat jewelry, as well as, on the ETF side, as well as, other instruments. So, on a medium-term basis, the market looks very positive. The market continues to remain buoyant, and the consumer is showing a lot of confidence as far as gold as a commodity is concerned.
Kaushalendra, I understand that there's no definite number to this, but what really is the overall wedding market of India? And not exactly the wedding market really, but what is the jewelry market of weddings in India?
So if you look at our Y-on-Y numbers, and as we head into the jewelry, as we head into the wedding season as of now, we are looking at this winter, which is going up to, I would say, January. We are expecting that the numbers would be surely in matching with what the previous year's numbers are. And both in terms of the volume as well as value, we see this going up. Because as I said earlier, the market had adjusted to the new price levels of gold today.
It has, it clearly has, and the reports do suggest that as the previous quarter was, perhaps the month of October has been quite strong, and November, December, Jan, which is the wedding season, perhaps could be equally positive there as well. Shreyansh, what is your sense on what kind of value, volume, buying can we expect from bridal jewelry side this wedding season?
Yes, good evening, Manisha ji. Thank you for having me. So, as you know, we are in full swing in Indian retail for wedding, and obviously this is a high season for us, because as no weddings in India can happen without jewelry. For jewelry, I would say, obviously the highest category we have seen is gold, but obviously there's a great push in diamond also, which I'm happy to share. And now with the silver pricing also stabilizing, I see a good demand in silver jewelry also for the weddings per se. So it's a good time to be in. And this season for us will continue all the way till end of February, because that's still the time when the good weddings are happening throughout India.
Mr. Jagawat, what is your own sense this wedding season? Because there's a lot of conversation, as Shreyansh also said, it's not just about gold, but about silver and about diamonds as well. So studded is back. We're looking at kundans and polkis and gems and rubies and emeralds, almost everything doing pretty great there.
So gold has a very high demand and all. Even we've
Okay.
recorded the highest sales in terms of volume as well as figures also. People have adopted this price, have accepted this price. So I'm looking, means this estimate data of wedding was around 6.5 lakh crore. So I think gold would, jewelry would contribute around 2 lakh crore in this wedding season.
Strong numbers coming in there. Would you say the same, Saiyam? I understand when it comes to the Indian markets, there's been a big buying that we already have seen in the month of October. A lot of people do buy for their weddings around those auspicious days as well. But during November and January, as everybody seems to be expecting, estimating, what are the numbers that perhaps you are working with and what really seems to be doing quite well right now?
So I think, Manisha ji, when the wedding sales is 6.5 lakh crores, about 10% or 15% is realistically sold as in the gem and jewelry sector. And I also think that the buying which was there in September, October for the upcoming wedding, when the gold rates were increasing, surprisingly the families for the wedding buying started buying during the Diwali time. After Diwali, the next 10 to 15 days, we have not seen the sales pick up to that level, but we are expecting it to become better. Now the rates, since the rates are coming down, they've come down to $4,040 or 1,22,000 as MCX. So we are seeing that the demand has reduced temporarily, and we are looking forward that the demand will slowly increase in maybe starting of December or for about 5 to 10 days, and then again in January it will start increasing. But the majority of the buying which is there in the end consumer has already been purchased in the maybe in October and September month, and right now still the leftovers or little buying on the end of the families is happening right now. But overall we are expecting it to be very positive. The second quarter was very positive for most of the gem and jewelry sector, and the third one, what we are looking at, maybe from the last year in the value wise we will see an increase, but I don't see any increase in coming in the volume wise.
Talk to us about trends as well, Saiyam, because we do understand that India still buys 80-85% of its gold in physical form, and within that as well it almost is 60 to 70% that we see being bought as bridal jewelry for weddings itself. When it comes to that, are we looking at people sticking to 22 carats? Is it 20, 18, 14? A bride clearly, or the overall wedding as a segment already has a lot to choose from. So what caratages seem to be working this time around?
I think 22 carat, 18 carat and 14 carat, all the three caratages are working, and it depends upon how much a person wants to spend. If you go to see in Maharashtra, you will also see 24 carat jewelry working. Maybe 24 carat Mangalsutras, some kind of rings are working. In the south side, people are accepting only 22 carat, whereas in the northern side, when you go to see in UP, Bihar, Haryana, that side 18 carat is working. When it is coming to CZ and diamond jewelry, 14 carat with rose gold, people are accepting more. The reason is that they want more value of diamond and less value of gold. So I think, overall, as per se, the people who are very price sensitive in the northern part of the country, they are going forward for 18 carat. And I would also like to say that 80% of the jewelry which is being sold in India is basically gold or gold studded jewelry. So I think in future also, as the prices have given such excellent returns and excellent buyback for in future for also the bride and the family. So I think this trend will also keep on moving ahead.
Pankaj, this one is to you. The newer brides and the newer grooms, for that matter, do not go for very heavy jewelry. What they go for is lighter, fusion, modern, detachable even. Is that what we are seeing this time around?
Yeah, so like new generation and all, they prefer studded jewelry and all. They don't want to wear like very typical kind of jewelry. So they prefer very modern type of jewelry.
How are you looking at those trends? Is it across pan-India?
Yeah, it's across pan-India. New generation, they prefer fancy jewelry and all. Earlier the jewelry used to be in pure gold and all. So people now, younger generation who are getting married and all, they want day-to-day wear and fancy jewelry and all. Even in marriages and all, they don't want to wear very heavy jewelry. So they maintain their thing.
Pankaj, what is it that you're doing this wedding season special for the people who are getting married?
So we are more into bridal jewelry and we cater jewelry more in the southern area, and they prefer 22 karat gold jewelry. So we are mainly very this about means we have a lot of customers who buy bridal jewelry and all from us.
Shreyans, you mentioned about diamonds, and as Sayam says that 80% is still overall gold jewelry. We do understand that the diamond penetration is just about 11 to 12%. As more and more people come in and buy, what is this diamond jewelry that is being bought? How do you see that economics working? Because either it is, as the story goes, either it is 2 and 3 and 5 carats, which does great, or then it is very lower, smaller diamonds.
Right. So what we have seen in the North India market, especially in Kanpur and UP, because of the wedding season, both the categories of diamond move. One is your studded diamond jewelry category, which is all cut and polished diamonds. And they go for mostly bridal necklaces. And like you're rightly saying, Manisha ji, that it's about 3 carat, 5 carat. It can even go up to 10 carat, 12, 15 carats also. And then you have another category of diamond jewelry, which is the uncut category, which is the polki jewelry. Now, especially you will see in North India, if any bride photo you'll see or a bride and bridegroom, you'll mostly see a beautiful set wearing, the lady's wearing it around her neck, and it's mostly a polki choker, what she's wearing. And these are really beautiful diamonds, which are uncut and they look really large and they add to the whole glamour and the festive spirit of the wedding. So that is also really moving very well. And I would probably little differ from the panel where I feel that especially this 3 months, maybe throughout the year, this number is correct. But for the 3 months, our diamond sales are almost occupying 30% of the entire sales, both in polki and the studded category compared to vis-a-vis the whole year ahead. Because again, most people, bride always has to buy a diamond necklace, a diamond ring for their wedding. So I feel this is where these 3 months definitely are really favorable for the diamond and the polki jewelry.
All right. Shreyans, is it also to do with colored gemstones making an inroad as well?
So like, color gemstones are two things. One, we have obviously a huge historical fact where a lot of people right from the emperor's time, the king's times, people have been really fond of colored gemstones. And also it adds a lot of uniqueness and a new design aspect and variety. Otherwise, it'll all look the same. So, and plus the third aspect is it matches very well with the bridal outfit, because most girls are coming with their bridal lehengas and they want to match the same color what they're using in that. And so colored gemstones are a great place we have that opportunity to use that for an advantage and have them also to have a customized jewelry which they can wear and enjoy for their great big day.
All right. So that is about the gold and jewelry economy therein, where we're looking at good numbers and expected to continue to be on the stronger side as well. Gentlemen, do stay on with us. We have to go for a very short commercial break. But when we come back, we'll talk about the brands and campaigns that this industry seems to be working with right now. Another point that we will touch upon is, of course, old for new. That seems to be as a concept that seems to be catching up quite strongly in India.
CNBC.
Welcome back. You're with us at Commodity Champions. And Mr. Sinha, this question is to you. A lot of number and debate this year has been around on how the recycled gold as an industry seemed to be doing quite well. Old gold for new, and then people added 10 to 15% more in sense of fresh money there. That number or that percentage has continued to change over the year. But from where we stand, and especially during the wedding season, do you think this maths does well?
No, absolutely. I think the trend is catching up. The industry has been coming forward and trying to see that the gold can be recycled. And, as an economy at a broad level also, we need something like this to happen. And it's great that the industry is coming forward and supporting this initiative. I think it's also time that the consumers also see value in it. They also come forward and, look at how these changes can happen. And this will be actually good for industry, good for economy, good for everybody in the value chain of the gold business as such.
And what percentage would you say that is of a total all market right now?
I would agree with the percentage that you quoted. I think, with all these efforts which are coming into the marketplace, I would put a marginal increase of around 3 to 5% from what you've just quoted. Because what we are aiming to see here and what we are projecting to see here is a long-term behavioral change. So I won't, we are seeing those efforts which are coming into the market now, and you would see an increase of around 3 to 5% from here. So I would like to, put that at maybe at a conservative level at this point of time.
Mr. Sinha, how are you looking at, the corporatization that we have seen of the jewelry industry in the last few years? More IPOs coming in, more corporates getting into the space because they believe this is an area that would give them great profits going forward.
No, absolutely. I think it's brilliant to see the way the Indian gold industry is getting corporatized and the kind of better compliance, better practices which are kicking in. And as IAGS, as the new self-regulatory organization in the country, as a full-fledged industry initiative today, our effort today is to put the consumer at the centerpiece of the entire gold buying process. Our vision is that the consumer who's walking into the market today is walking with a sense of trust. He values the transparency that the industry practices, and he comes in for buying with a sense of confidence, with a sense of trust. So in fact, just to update you, Manisha, we have had our launch, a month and a half back, and our primary initial market was Mumbai. So I'm happy to share for the consumers who are going to come to the gold market for gold buying, in a week from now, there would be almost 50 stores in Mumbai who would be IAGS accredited. And IAGS accreditation would mean that, while they are buying gold, which is backed by BIS, which is backed by Hallmark on the purity side, they're also walking into a store which is certified, which is accredited by a third party, which carries IAGS accreditation, which essentially means that the firm also practices ethical, strong,
governance
practices as such. So we are very happy that we have reached this level in Mumbai, and for the wedding season which is coming in, where consumers are coming in to buy, we would expect that this will also be an added booster to the entire market activity that you talked about.
All right. So accreditation coming in from IAGS as well, and 50 stores in Mumbai as of now have been done that. Shreyans, this one is to you, and I want to come back to the jewelry and metals really, because while we do understand that gold is doing well, even silver-studded jewelry seems to be picking up right now. So is diamonds and colored stones, as you've said. Is platinum still a niche market, or do you think it's widening up into India now?
So, Manisha ji, for weddings, most of the sales of platinum is for bands. And it's a his and her band. So for the groom and the bridegroom, the bride and the groom, that's what is mostly selling. Apart from that, this is not really that season, I would say, that people ask for a platinum piece. But yes, to showcase everlasting love, they do ask for a wedding bands for his and her, for each other. Otherwise, it's a niche category, to be very honest, in India.
All right. It still is gold, would you say? Anybody buying silver studded as well, or not really? Not
Yes.
yet?
To answer the other question, silver jewelry, especially you would know that pile is one category which every lady used to buy in the olden times also, and this trend is still continued now for weddings. The kamar peti, the kardhanis, the chabi ka guchha, a lot of these things are primarily silver wedding jewelry buying, and the bichya, all of these are still continuing. And people, now that thankfully the silver rate has stabilized and it's not as crazy as what it used to be around Diwali. So the demand has again come back, and people are really buying a lot of jewelry in silver also, yes.
Shreyans, do you also see more people coming in to buy? Some regulars will always continue to buy every year. Are you looking at more participants, people who did not really earlier, spend in gold and silver because they thought it was idle money, just stays in your locker? Are those kind of newer people, newer participants coming in?
Yes. So I would say the millennials, the Generation Z, all of them are now buying very interesting and new silver jewelry, which is like stackable bracelets, beautiful charms, things to wear around your fingers, some very beautiful stuff which they can really carry to conversations, they can carry to work, they can carry to a rock concert, and I've seen it, the demand is flying, it's just flying off the shelf for those category of items. And they are not per se wedding time, but they are selling throughout the year. And they are doing phenomenally well, I would say.
Pankaj, this one is to you then. And one would want to know on what Shanti's plans are going forward in sense of stores, expansions, etc. And the other thing that's always excited market is about on how much is children jewelry and whether or not jewelers pay enough attention to that.
So we are into B2B manufacturing. We supply jewelry to all the stores, like corporate stores like Joy Lucas, Lalita Jewelry and all. So like in month of October, we had seen a highest demand in terms of volume as well as in terms of figures. Yeah, people are going for like day-to-day wear jewelry because jewelry is emotionally also connected with Indian people because they take it as an investment as well as it has now become a fashion also. So jewelry demand, I don't think so it will ever go down because I'm seeing jewelry demand from the time we got into manufacturing. Our volume has gone every year, like 20 to 30% up.
Not looking at going B2C anytime, Pankaj?
No, we are happy doing B2B.
What we do. All right.
Yeah.
Sayam, this one is to you. What are your plans going forward from here? And since we have you with us, what is your sense also on the gold prices going forward?
See, I think going ahead, the gold price this month in November should maybe increase to about $50 to $70. But overall this year, and I see that the gold prices might drop to $3,900 or 1,18,000 approximately. The reason is that looking at the US shutdown, it has just opened up. The job claims data is going to come today, and the other jobs data is coming. Inflation is in control, I see. And then there is a slack, and in December for the 15 days, from 10th to about 25th or 30th of December, there is less business and less volume. So I see gold rates subsidizing a little bit. It is going to be a great time to buy for the end consumers. And I think, but still in December, people are focusing more on holidays and other things, but no less on jewelry. The rates are going to be very positive, and old gold jewelry exchange, which has been great in October this year, I think the trend will also continue and will increase slowly.
Sayam, what are plans 2026?
See, we at Unique are, of course, we're expanding our exports also, and the domestically also tier 2 and tier 3 cities are seeing more growth when it comes to sales of gold jewelry. And the buying power is also, we feel at Unique, is more in these areas. And we are looking at lightweight jewelry, which is coming from 2 grams to 8 grams to sell. And also during particular season in April and during Diwali next year, 2026, every 6 months we launch our new collections when it comes to lightweight, rose gold or heavyweight bridal jewelry. So year on year, something new. Every 6 months we try to show to our end retailers, and that will keep on continuing with Fusion also. And going ahead, we're focusing on gold, very much on gold, Kundan Jarau, and we would like it to stay that way.
All right. Shreyans, what is plan 2026 for you?
Right. So if you remember last time I told you we have a new baby called She by Kashi, and I'm happy to share that within the time we spoke, we opened up 2 stores. And these 2 stores have come in 2 different parts of the city. And they're called She by Kashi. And this is a very minimalistic gifting line jewelry, all real gold, real diamond, and all within the price point, starting at 5,000 up to 2 lakhs. And I'm happy to share that this is a great model for us, and we're getting great demand from this kind of a retail scenario. So we're looking to expand ahead on this model in the 2026 year.
All right, so a lot of plans and a lot of expansions coming your way in 2026. Gentlemen, thank you so much for joining in on a very important subject, wedding season, and what more do you splurge than on jewelry, and whether it's gold and silver and diamonds, and so much more options coming in for the buyers there. Appreciate your time here at CNBC TV 18. Thank you so much for watching.
Nisa, Shireen, Zoya and Lakshay are special guests in the studio, while Nisa, Shireen, Zoya are footballers who have brought laurels to their school and want to one day represent India at the highest levels. Lakshay, a long-distance runner, harbors an Olympic dream. But today, they are here for a different reason. These four students, along with several other school-going children, have moved the Delhi High Court via their parents. They have a simple request: a halt on all outdoor sports trials and tournaments scheduled between the months of November and the months of January of 2026, when pollution levels in the capital are at their peak. Their petition before the Delhi High Court highlights that authorities continue to conduct outdoor sporting events at a time when Delhi's air quality is severe and even hazardous on some occasions, forcing them to perform strenuous physical activities in a highly toxic environment. This, they say, infringes upon their fundamental rights and exposes them to serious health concerns. Their right to life is what they claim is at stake. Now, for the record, Delhi's air quality remains in the severe category today as well, despite third stage of pollution curbing measures remaining in place. So, well, let's take this forward. Let's go across to our very special panel of young students who are flagging concerns. You know it's become serious. We've all heard anecdotes about how bad the situation in Delhi is, but it really comes to light. There's a different perspective altogether when it's students fighting for their right to life and they have to knock on the doors of the Delhi High Court. Let's go across to our very special panel. Naisa, Shireen, Zoya, Lakshya, thank you so much for being a part of this. It was a long drive after school for you guys here to come to our studios. But Naisa, let's begin with you. Going and knocking on the doors of the Delhi High Court, whose idea was it? Why did you feel compelled that you felt like you had no other option but to actually reach out to the court and say, look, I want my right to breathe, I want my right to live?
So we all came up with this idea collectively, because we've been involved in sports for a very long time, since our childhood. So we thought it was important that we play a lot and we are forced to play because the timing is such that we're forced to play in horrible pollution. It's hazardous to our health. So we all felt that we don't have that many years left to play in school at least. So at least for the people, the generation to come, like the situation with the air quality is not improving currently. So I think it's important that at least when we know it's going to happen, every year it does happen. For the past decade, air pollution has been a concern. So I think it's important that we host these tournaments at times that there's less air pollution, so that we're not harmed, our lungs are growing, it can cause like irreversible.
That's such an interesting point that you make, that every year we know it's going to happen. We know that at the time of Diwali, we know that just around the corner, we're expecting terrible AQI figures out of Delhi. It's going to affect us, it's going to affect my lungs, and yet this is something that by sheer planning is something that can be worked around. Shireen, tell me, you, among all your friends, of course, have been going out, trying for zonals, for nationals. When you do go through one of these trials, especially in these toxic weather conditions, the screen right behind you will tell you, give a picture of how things are currently. What does that do to you physically? Have you had personal situations, you or your friends, that you end up coughing, you wheezing, you're not able to breathe properly? Is that something that you happen?
Yeah, so I'd like to share a personal anecdote. Like just maybe a few days back, from the 10th to 14th of November, the interzonal football games were taking place for girls, where Naisa, Zoya and I participated. So we played matches with AQI levels around 500, and the fact was that like all of us today here, we have really bad coughs actually, and it's quite evident. It's not only difficult to play, it's not only hazardous for our health, but it also affects our performance. So altogether, I feel like from personal experience, this is a problem that we really faced, and we thought it should be highlighted.
That's fantastic. Zoya, coming to you, why did you feel like you had no other options? Have you, as students, raised this concern before your teachers, before your administrators? What did they say in response? Because this is clearly affecting not just you, but on a daily basis also affecting them.
So I think there's two things to your question. Firstly, when we're talking about teachers and administrators in our school specifically, so our school personally has a rule that if the AQI is above 200, no outdoor play happens at all. But obviously, when you're looking at national level tournaments, then that kind of rule isn't mirrored by the government and by the administration of those events, and the school really has no choice because, and Naisa can explain this better to you, but if you don't play in these tournaments, then you're not going to be able to advance to the next stage. So you're essentially wasting a full year of what may be playing at different greater levels of that sport. I think the reason we went specifically to the courts, and there's two things. Mainly because you'll see in the petition as well, there's two respondents, right? There's the government and then there's the SDFI. When you have two different authorities in charge of something, then it's much easier to get them to collaborate and to correspond and to actually change the rules. If you get them in one place in the court, it's much harder to do that, and it's much harder to collaborate if it's where you're writing to them individually. And I also think that, I mean, we read so much about the court doing so much to protect people's fundamental rights, especially the fundamental rights of children. We thought that was the best place to go.
That's fantastic. In fact, the fundamental rights that you've raised is Article 21. That's your very right to live. That's your very right to life. That's the degree of seriousness with which the students here are moving. Delhi High Court raising their concerns. Lakshya, coming to you, you're a long-distance runner. I just want to get a sense, the government appears to be talking in two voices. Is it confusing for you? Because on one hand, you have the health ministry saying that, look, at AQI levels north of 200, let's not go out, let's not exert yourself, no physical activities. On one hand, you also have these trials that are currently underway. Does that get confusing for you? How important, and does that put students in a precarious position? Because like Zoya was pointing out, like Naisa was pointing out, if you miss this critical year, you maybe miss out on a huge opportunity.
So I think then it talks about the basics, right? The right to live, or the right to live an education, or the right to health, which are the rights given in our constitution. And I would like to say it doesn't affect students; it affects everyone. Global issues like pollution and all, they would affect all of us. Yeah. So
but how does that affect you individually when you talk about long distance running? While we were getting ready in the green room, you gave a very interesting anecdote that when I'm running long distance, I'm breathing through my mouth, which means all these PM 2.5 figures that we hear of, which is over 400, 500, I'm soaking it all in. Is that the same experience?
Yes. So for an average adolescent teen, the average breaths per minute is 20 to 25. While exercising or doing active exercise, that doubles. So when you're breathing through your mouth, not through your nostrils, one primary layer of filtration, which is your hair inside the nostrils, gets blocked. So if essentially taking in more pollutants through your mouth while being active. Yeah.
It's tragic to hear these conditions, but of course, as the visuals will tell the picture from right behind you, that these are conditions we all have to face on a daily basis. Looking beyond sports, looking beyond these trials, how frustrating is it as a young citizen of our country? You, I'm sure, all four of you, I'm sure, from your formative years, from the very early years that you have a memory of, you would remember that this is what winter in Delhi looked like, which was not so much the case for older folks such as myself. So just as a young citizen, Naisa, how frustrating is it when you see politicians and the government squabbling, not able to come to a very decisive decision on how to deal with this?
Yes, it's really frustrating because you hear the stories from like your grandparents or your parents about how clean the air used to be. They used to go out to play every day. But now it's like you're so restricted. Like I can't just get up and get out of my house and then go out and play anymore. Because there's a problem with pollution. My mom would be like, wear a mask or it's not safe. Like how can it not be safe to just go out of your house anymore? Like it poses a risk to your health, and I don't think that's a very nice condition to live in.
That's such a pertinent question to raise. How can it be safe not to go out in the first place? What about you, Shireen? When you look at these conditions here in Delhi, does it compel you? Do you have conversations within your family that, look, perhaps I'm in the formative years, I'm in just high school right now, perhaps it's not best to plan my future in Delhi? Is that a conversation that you have in your sitting room?
Yeah, definitely, because I feel like when you enter the months of November, you have this mindset that, oh, you know, I can't leave the house, which is really unfortunate. And even for like senior citizens in my family, like there are people out of station right now and they just can't come to Delhi to visit just because of the circumstances. So obviously when I'm thinking about future plans, it's definitely something that lingers in my mind. Like, do I really want to have a future in a place where I really can't go out? I can't do any sports, any physical activities beyond the month of, let's say, October, the early times of October.
Okay. Zoya, when you see these conditions here, of course, we hear of other countries and other cities elsewhere also struggling with similar conditions. When you have this conversation in school, what are the initiatives at a school level that they encourage students to do to help tackle these issues?
So actually, a lot of the air pollution, more than 50%, actually comes directly and indirectly from vehicles. So this looks like vehicular emissions and from road dust itself, where the vehicles are kicking up a lot of road dust, which is actually the biggest contributor to air pollution in Delhi specifically. And I think our school specifically has had this Better to Bus initiative where they've encouraged more and more students to participate and take the school bus to and from the school while they're trying to make, like, on their commutes to school. And I think that's been very beneficial. I think if every school and every public organization as well starts doing this, we start incentivizing using public transport more, as well as recycling, reusing, trying to minimize our waste and just trying to do things that are better for the environment as a whole, I think that's really beneficial.
Well, just to make a point, in fact, you guys, from what I understand, came in one car, the four of you together. So I think that's maybe a message that you're sending out to your colleagues and to your friends as well. Lakshay, coming to you again, I go back to the same point that this is something that is not, which is unknown. I think one line that really struck me in your petition, in all of your petitions that you filed before the Delhi High Court, is that this is known, this is predictable, and something that can be planned for. Is it frustrating for you as a young citizen that, look, I know it's coming, but clearly we're not doing enough about it?
Yeah, obviously it is. So every year we know it's going to strike. The acre is going to rise to severe or hazardous levels. And all of our competitions, as you said, as we mentioned, happen around this time. And it's not only football. We're all footballers, but competitions like hockey, tennis, basketball, etc., etc. Their zonal competitions or inter-zonal competitions are also happening in this month. So yeah.
Naisa, let me come back to you that when you're having these conversations, do you get, when you do travel and you get to go overseas,
Yes.
how would you draw a parallel between a city like Delhi, which is again very large, but at the same time has a large vehicular population, large number of people. But when you travel overseas, when you go to an equally large city, if you travel to something like a Barcelona or a London, how was your experience in terms of just simple air quality and what it feels like when you actually fly back and land here in Delhi?
Okay, one of the greatest points that I've seen is my sister studies in the Netherlands, in Amsterdam. And sometimes when we're just talking about air pollution, we happen to check on the weather app, what's the air pollution of Netherlands or Amsterdam today? And it shows 4 as moderate. And then we look at 300, 400, and that's severe, but it's still okay. Like, we're like, oh my God, this is like good. And over there at 4, she's like, it's moderate. So this is a huge difference. Like, how can you see a 4 and say moderate to that? But then you see a 400, 500 AQI in Delhi and you say it's safe for children to play. Like, we can host so many tournaments in the same time.
Very eloquently put there, Naisa. We're running out of time, so I'll come to all of our special panelists for one final thought. One message that you'd like to send to the government, to the administration when you're looking at a crisis situation like this. Shireen.
I would ask them to recalibrate the sporting calendar, keeping in mind the recurring phenomena of high AQI from the months of November to January.
Zoya?
I would ask them to do the same, and I'd also ask them to try and incentivize people having better waste segregation and having better modes of transport as well.
And Lakshya, one message that you would send out, something that reflects the collective feeling of the athletes. You were giving me a very interesting number that as we speak, as many as 25,000 students are going in for these trials. So one message that perhaps echoes the sentiment of a lot of young athletes who look to represent India or their respective states or schools going forward.
Because this is essentially the future of our nation, right, that we're talking about. So it would be obviously the best idea or a better way to schedule events later on, or just give our students or the future of India the best experience that they can get.
Right, guys, thank you so much for joining us and putting these thoughts so eloquently for the benefit of our viewers. That's the situation that we are in. In fact, many student athletes that we speak to, they narrate their experience, their parents narrate their experience when they tell us that when they go to the administrators, the message that they get is, "Aapko nahi khelna, to aap apne bacche ko leke ja sakte hain. You can take your kid back home if you guys don't want to play, if you don't want to play in this weather, in these conditions." That's the message. So that's the status of the situation. That's where things lie. That students, young adults, young minors, young citizens of our country feel the need to knock on the doors of the Delhi High Court, claiming their right to life, their right to play. But that's unfortunately all the time that we have in this first segment. We're diving into a very short break. We'll come back with, in fact, another key issue, another emotive issue, which is animal rights activists protesting across the country after the Supreme Court ordered the removal of stray dogs from public spaces. We discuss that on the other side. Welcome back. You're watching News Center with me, Ashmit Kumar. Now, animal rights activists are protesting across the country after the Supreme Court ordered the removal of stray dogs from public spaces. Earlier this month, the country's top court directed local authorities to immediately remove stray dogs from premises of public institutions and relocate them to shelters. This includes schools, hospitals, sports complexes, bus stands, railway stations, among others. The court ruled that the dogs must be sterilized and vaccinated before shifting them to shelters. Noted animal rights activist and former Union Minister Maneka Gandhi has termed the order inhumane, anti-science and anti-law. And joining me now to discuss the court order, its impact, its implications, is with us Nanita Sharma, advocate on record at the Supreme Court, and also with us senior advocate Mr. Vaibhav Gaggar. Thank you so much for joining us, both of our panelists. Mr. Gaggar, let me come to you first. We've had this conversation a number of times in the past as well about your love for dogs. Just give us, from your perspective, this latest order. We've seen some back and forth from the apex court. First, the court said, remove all the dogs altogether en masse. Then the court said, no, wait, put a lid on that for now. Now the court has issued fresh orders that public spaces need to be cleared. Does this cause confusion in the minds of how to go about implementing such an order?
Thanks for having me, Ashmit. So this order, let me look at it from two perspectives. One, as a pure human being, as a citizen of this country. And two, as a lawyer, a student of law, a loyalist of the institution. As a human being, when one looks at it, it actually causes a huge sense of sadness. How can there be an order which is effectively saying that you remove all these dogs? In India, roughly, there are estimates that there are about 5 crore stray dogs in India, right? So what are we really saying? Pick them up and put them in non-existing shelters and pick them up from these institutions currently, which could very well then move on to the next leg as well. As a dog lover, as you introduced me, and I've dealt with stray dogs. I have Indies at home. It's something which belies logic. But as a lawyer as well, it's a bit worrying. And I know I've got to be cautious about this, but effectively, the entire judgment has proceeded on newspaper and media reports without hearing all the parties or the voice of the activists at all. And I wouldn't even call them activists. I'm not an activist at all. But as a dog lover, as an animal lover, as someone who's very concerned about them as well as, the problems created in society because of them not being taken care of properly. But what are we really driving towards? And to me, that is the cause of confusion. It's not just that the previous judgment said remove them all. Now it has kind of been tempered down to an extent only to say first remove them from all public institutions, stations, colleges, etc. Let me give you a very simple example. After this order came out, my university, one very senior professor of my university called and said, Vaibhav, what are we going to do about this? Because we've got strays in our institution as well who are loved by all students, loved by all professors. We take care of them as if they're part of this institution over the years, over decades. And actually, there is no legal remedy because you're before a three-bench of the Honorable Supreme Court. What do? You've got to be heard and you've got to try. So I think it's something I'm hoping that the Honorable Judges ponder over because these are sweeping directions which are unimplementable as well. And the hammer of law on such an issue against these voiceless, helpless animals, it's a cause of serious concern, to say the very least.
Right, Mr. Gaggar. Let's go across to Ms. Nanita Sharma as well, who's joining us, advocate on record. Ms. Sharma, give us a sense that since this order was passed, which was back in November 7th, what has been the condition that you've noticed of these stray dogs that are being rounded up? On record, the Delhi government had said that we don't have a dedicated shelter for dogs. So if you're talking about stray dogs being picked up, let's say, for example, from New Delhi railway stations, where are they being taken? What has the Supreme Court order done in terms of its impact?
See, basically, they have
Thank you very much for inviting me on the show, first of all. Secondly, they have basically, this Honorable Supreme Court has reviewed their own order of 22/8/2025 and have brought back the order dated 11/8/2025, which was actually a blanket order of sending all the strays, all the community dogs to shelter houses. First of all, we hardly have any shelter houses. Whatever shelter houses we have, they're in pathetic conditions. There are no basic facilities given to the dogs, of basic amenities actually, of food and water. So they are in such a bad condition that it is absolutely an impractical order, where it is nothing short of culling the dogs basically. So now what I would like to say is that when the law is already in place, the ABC rules are in place, the order of relocation is absolutely illegal. It is the Honorable Supreme Court I'm talking about. That, of course, is there. But the Honorable Supreme Court could not have
Let me
passed
come back
such
to
an
you,
order.
Ms. Sharma. Let me come back to you, Ms. Sharma. You yourself are saying that, look, the ABC rules are in place. The Supreme Court is not following the rule book itself. What are the options? What are the remedies that you're left with at this point? It's the highest court of the country saying round up all the stray dogs. What can be done from here, from this point on?
We are trying to file an application for modification of the order because the order is absolutely absurd. They cannot rely upon news reports. There are catena of judgments of the Honorable Supreme Court itself that unverified news reports cannot be relied upon by any of the courts. And this is what they have done, basically. So now what I would like to say is that the order says, it states that implementation of the ABC rules has not been effective. It is vice versa. There has been no implementation of the rules. I have been struggling since 2016. I have been filing RTIs. I have moved the Honorable High Court in a writ petition saying that are the dogs being community animals being sterilized, neutered? Are they being vaccinated? Where is the accountability?
Right, Ms. Sharma, that's a very pertinent point that you're raising. We're running out of time. Mr. Gaggar, I'll come to you for a quick closing comment. That's one interesting point that Ms. Sharma had raised, that the ABC rules for the longest time have placed this responsibility on the shoulders of the municipal authorities here in different cities of our country. Is that a question that the Apex Court should be asking, that, look, if there is an issue with the stray dog population growing, perhaps some amount of that burden should rest on the shoulders of municipal authorities? That question, I was watching the hearing, was simply not present as a part of the deliberations that we saw before the Apex Court.
Sorry, Ashwat, is that for me or Ms. Sharma?
Yes, Mr. Gaggar, that question is posed to you.
Ashwat, absolutely. Here, unfortunately, and I reiterate, it's the voiceless, helpless dogs and cattle who are now actually the culprits. Their only offense is that they have landed up in this country on the roads, and every system that has been put into place to help remedy the situation has not been followed. The apathy of the government agencies has brought about the situation where these four-leggeds are the ones who are going to suffer the most. I heard Ms. Sharma say that it's almost like culling. I'm saying they might as well then go ahead and order that. I mean, what are we saying? Are they going to survive? Are we going to have 5 crore dogs in pounds and they're territorial in nature? What are we creating here? And basis newspaper reports, unverified, not even an opportunity given to the other side to present their views.
But speaking of the other side, Mr. Gaggar, I'll come to you for a quick closing comment, Mr. Gaggar, if you can still hear us.
Yes.
That this is a situation from a safety standpoint that is being raised by a number of people as a part of RWAs, as a part of housing societies, that, look, there is, in fact, an issue with the explosion of stray dog population, and that, to them, to senior citizens, to children, does cause a safety hazard. How then do we address
Absolutely, Ashmit, and therefore the answer lies in the ABC rules. Neutering them is one very, very strong way forward. It also brings down, it's not just about reproduction, it brings down the aggressiveness of the dogs as well. If they're well kept, they're well fed, they're not targeted by human beings. Very often, dogs will turn around and become vicious when they are targeted, beaten up. There are enough and more media reports and videos out there of dogs being actually hit, really badly, tortured over there, tongues being pulled out, eyes being, and then we say that these are the ferocious dogs. There has to be a balance. I'm not saying that they're not all, it's all kosher, but the systems can be implemented. It cannot be that you go kill all of these dogs.
Right, Mr. Gaggar. Right, Mr. Gaggar, a difficult situation that 5 crore stray dog population, stray dogs find themselves in. Is there an answer to that? Well, advocates such as Nanita Sharma are saying they will knock on the doors of the Apex Court once again, searching for some answers, hoping for some relief. But that's, of course, a question that the Apex Court needs to deal with. For now, it's a wrap on this edition of News Center. More news and updates will continue right here on CNBC-TV18.
Welcome to Economics. The finance minister just confirmed earlier this month that the government is thinking about amalgamating banks to create more big world-class banks that India needs for growth. The announcement led investors in small banks like Bank of Maharashtra and IOB to worry if their bank will be merged into a larger bank which grows more slowly. It led bankers, on the other hand, to worry about the problems of cultural and technology integration and employee morale. To understand how best the consolidation may be done and what are the costs and benefits, I have with me 4 veteran elite bankers. S.S. Mundra, former Deputy Governor of the Reserve Bank and former Chairman and Managing Director of BOB. Dinesh Khara, former Chairman, State Bank of India. Padmaja Chandru, former Managing Director of Indian Bank. And Sunil Mehta, former MD of PNB. Mrs. Chandru and Mehta both piloted a merger in their time as MD. So, gentlemen and Mrs. Chandru, welcome to the show. Mr. Mundra, let me start with you. A slightly hatke question for our stock market audience. You know, in the previous round, when Dena merged into BOB, etc., the weaker bank merged into the large bank. So there wasn't much shareholder, disgruntlement. But now the small bank, like say for instance, Bank of Maharashtra, they've grown some 200% in the last 5 years. So there is a bit of a worry that we may be merged into a slightly slowly growing bank. How do you think this will be a factor at all when the government arranges amalgamation?
Okay. Thanks, Lata, for opening salvo. The one point is the banks which you are talking about, government continue to be the majority shareholder.
Yes.
And I think the shareholder value would be equally weighing on the mind of the largest shareholders as well. I really don't think that shareholders would be really unduly worried about it. There may be some short-term concerns because, it's a mixed bag. While, okay, growth in terms of percentage may look like, okay, I'm growing at 20%, other is growing at 12%. But then I think the informed investors also understand that you are growing on a large base rather than a small base. You are also getting the benefit of size, of scale, technology, and all that. So that's a mixed bag. But having said that, I would just confine myself to a little bit of opening comments so that I don't occupy too much of time. See, let us be say realistic about it. Previous round of merger, 1920, we can say in some way it had been a success. There were short-term pains in the beginning, but in long-term, profit and efficiency gain has been achieved. So and that is visible in the share performance and everything. But as you rightly mentioned in your opening comments, technology, other things, integration is fine. But as far as I understand and I hear from my friends, the cultural integration continue to remain a key challenge. And if that is the case, the point is whether you are surviving reasonably well or you have been put in a position to exploit your potential to the full extent. I think second is still something where a lot of questions are there. And also the fact that the market capitalization of 5 top private banks today is still higher than all the public sector banks put together. So I think it raises a lot of questions. I'm sure in coming round we will be discussing that.
Yes.
I'll just stop at this point of time.
Yes, that is a very important policy question which I will raise a little later in the show. First, what do you think, Mr. Khara, will be the mechanics of the merger? Immediately the shareholders think that, will Bank of, those 5 amalgamated banks, Central, UCO, BOM and IOB, will they be merged into Bank of India and create one big pool? Or do you think, the finance minister did not say about the unmerged banks. She only said India needs large banks for growth and the amalgamation will also have a growth angle. Do you think merging the already merged banks, Union and BOB, will also be something? Because that will create a 25-30 trillion deposit base.
Well, Lata, when it comes to, if you look at the way the banking system is stacked up currently, SBI balance sheet would be about 800 billion plus, and the others are quite small. So I think if at all the scale is intended to be achieved the way it is there with the global banks, the biggest one would be from China, about $7 trillion equivalent. And then the next would be maybe JP Morgan would be about 4 trillion plus. So I think if at all we have to scale up to those levels, maybe I think merging the bigger may not really be of much value. But I would like to subscribe to the view that if at all merger has to happen, merger should actually lead to strengthening of the growth levers in the banks. So which actually means that unless and until there is a synergy which will flow post-merger, it may not really yield the desired results. The intention should be that if at all merger has to happen, then the subsequent growth should be significantly higher. That is what it should be. And for that, there's a need for the stronger muscles, and those stronger muscles will essentially come from the skill, the technology, and also the ability to take the risk. And of course, consolidation of the capital, because capital being the one scarce commodity, unless and until it is put to good use, which actually means that the higher capital adequacy ratio is also not a welcome situation.
I agree.
Yeah, so I think optimally, if at all, we can have a situation where the banks which have got a higher capital, they can be merged with the one which are having lower capital base, and also they can offer synergies in the in the sense that their ability to underwrite better risk will also emerge.
No,
So I think that should be the focus.
No, I think both you and Mr. Mundra are pointing to the same thing. Let's think growth and profitability and not let that be the guiding star. Very quickly, Mr. Khara, do you think State Bank will be left untouched? Because that's under a different act. And the PSU banks are under the Nationalization of Takeover of Banking Companies Act. So do you think in this round or in any round, even in the previous, only the State Bank babies were merged into SBI. You think the others will not, you won't have a Bank of India or a BOM getting into State Bank. You think so?
No, I think we have in the last round of merger, we actually even merged the Bharatiya Mahila Bank,
yes,
which was part of the State Bank group.
Yeah.
So I think that is not a challenge.
Okay.
That can perhaps be looked into. There are ways, and we have already done it also.
Okay.
So I think that's not a challenge. But as I mentioned, that if at all, unless and until we address the core fundamental, what are we going to gain out of merger, and is it really? I mean, what will be the contours of the merger? Are they really addressing the basic issue? That is something which I would like to really
Okay. So concentrate on financials, concentrate on the operational gains, is what both of you are saying. Mr. Mehta, what's your sense? Since you have gone through this, Oriental Bank of Commerce was one of the banks that was merged into PNB in your time. Do you think merger should be geographical? That is, people of the same geography merge so that common branches are closed. There is genuine, savings. Or should it be the other way around, that, you merge into a region where PNB is not, well spread, say with a southern bank? Should it be geographical or should it be cultural? If two northern banks merge, then culture is more easy to handle. How should the government think?
So, Lata, in my opinion, consolidation is just not an arithmetic sum up of the balance sheet. What the finance minister has signaled and is that basically they are creating a financial architecture which can support the country's aspiration of 5 trillion economy and becoming a developed economy by 47. And to that direction, I think the supporting a banking system will be necessary to fund that. And I totally subscribe to what Karaji said and all that. In fact, there is a need to create a large size banks which can support that type of a country's ambition. And for that matter, I think a lot of consideration, like what you say, whether the technology or the geography, in my opinion, there are strategic business advantages every bank has. Somewhere they have a niche segment, somewhere they have a different segment. So it has to be strategically thought of.
Okay.
What are the value the merger will bring to the table? And those and there, because last time it was basically on the technology, because that gives a convenience of integration. But I think now we have crossed that stage and we can swing to the other levers that can facilitate the value creation in terms of capital size, profitability and the efficiency indicator.
I take your point that every bank will come with some kind of a strategic advantage. And the fact that size, I mean, today I think it's only State Bank which can finance a 15,000 crore project or something. The other banks will not go beyond 8,000 crore. So the size will have its own advantage. Mrs. Chandra, actually similar question like I asked Mr. Mehta, but more a human angle. You had to take Indian Bank, which is largely a south-based bank, had to handhold or take in Allahabad Bank, which is more a eastern northern bank. Are cultural integrations very difficult, so much so that they may actually impact profitability?
Lata, I think, we learned a lot from that merger. Yes, in the beginning when it was announced, there was a kind of a apprehension that, the cultures don't fit in. IT does to some extent, so that was sort of managed. But culture was a big challenge. I think it depends on the way you take it up, the narrative that you give from the beginning. Where whichever two banks merge, I'm sure there would be a culture challenge.
Yes.
But yes, more so in this case. when you position it as a merger of equals, there is no victor or vanquished here. It's all the same owner. We are all working with the government mandate. I think that message again and again, communication plays a big role. Also, fairness and transparency in handling the people. I think people make or mar an organization. Whichever merger, whichever consolidation, unless we take care of people, it's not going to succeed. I think in Indian Bank, we could focus on the right areas, and then it's where it is today. I think it's doing very well. Yeah.
No, take your point. But, I want to just start the other big conversation that Mr. Mundra began and then go to my first break. Mr. Mundra, you said the fact of the matter is that the market cap of the first 5 public sector banks is not equal to the private sector banks. Now, a private sector bank like RBL managed a huge foreign bank welcoming into it very well. So, they got that much of capital, 26,000 crores of capital. Do you think we have to recast the Bank Nationalization Act altogether? There have been advice from the past. Dr. Y.V. Reddy did that. PJ Nayak has recommended in various ways that first let us do away with that act, bring all the banks under Companies Act. Then there will be 51% independent members. The board becomes independent. In a matter of years, it takes time for the board to be independent. Let the board decide what is the profitable one to merge into. Do you think that is the way to go?
That is a larger question, Lata, and I think we have debated several times
on this.
But as you know, there is a business angle to it, there is a political angle to it. But I partially agree with you, because I think that will be a right way of starting it. And even if you are going up to 49, you are not changing the structure of basic control, which can always remain. But I think FM, while talking about the merger, has given certain subtle hint about it. So I think it is also occupying the mind space of the government and all those who matter. And probably some work would happen into there. Because, see, to my mind, scale is not the only thing. Scale, for the size of scale, doesn't really achieve anything. See, in running a bank, there are other issues like how you create a meaningful network of partnership, how smart is your technology, how much is good is your customer connect, how you are innovating. I think those are the things which become very important, which bring the profitability and which ultimately leads to the market capitalization. So how you design the merger, how you phase it, and important point is, when you create behemoth like this, your regulation should also be at the same time need to be really plugged up to meet with the challenge. Otherwise, there could be risk. Actually, Lata, there are 2 larger questions. Maybe I think
after the break, sir,
we can discuss that. But let me put those questions. What do we want to achieve by this merger, right? And what are the risks involved? I think it will be worth debating on those 2 points.
We will, sir. We'll do that exactly after the break, and also ask, there's a bigger challenge emerging for the entire banking space, private sector included, that a company like Grow has a bigger market capitalization than most of the banks. Technology is tearing and taking away the customers of banks. So those questions after the break. Welcome back to Indianomics. The finance minister announced that she wants to amalgamate banks and create larger ones. We are discussing that issue with Mr. S.S. Mundra, Mr. Dinesh Khara, Mr. Sunil Mehta and Padmaja Chandru, all of them veteran bankers. Gentlemen and Mr. Chandru, thank you very much for your patience. Mr. Khara, you know, like Mr. Mundra pointed out, the political challenge of taking the banks out of the Bank Nationalization Act, etc., may be very difficult and time-consuming. None of the governments are attempting it. Can we get at least a state bank culture into the PSU banks? State Bank, despite being a government bank, is able to run more efficiently and, you know, take more challenging tasks. So within the framework, can some changes be done?
Well, I think of late, introduction of the concept of ease under the aegis of IBA has actually helped in terms of the cross-fertilization of ideas across the banking system. And that is perhaps one of the reasons why when we get to see the banking system overall, there's a definite improvement which we are seeing. So I think part of it has started happening. But yes, of course, when it comes to culture, culture has got multiple dimensions. And one, of course, is, the way people are groomed in the organizations. So I think when it comes to different other public sector banks, of course, there is a increasing focus in terms of building up the human resource capital of the banking system. Maybe I think that there is this broader objective is kept in mind when this concept of ease is getting implemented by IBA. So maybe this synergy will eventually lead to some kind of a transmission of culture from maybe better managed banks to the other banks.
Okay,
also.
so you're saying this cross-fertilization and cross-pollination of ideas has already begun. That's very good to hear. Mr. Mehta, the question that Mr. Mundra raised, what are the risks?
Like whenever you take an exercise of merger, there are technological risks, there are cultural risks, there is a HR integration risk because smaller banks sometimes feel that they will be lost in the ocean. So these challenges will always be there. But the first round of merger has already established that if it is handled properly, as Padmaji rightly said, if it is handled transparently and the teams are given the assurance that you will get an equal treatment and there is a transparent system of your career progression, I think the challenges at the HR front can largely be mitigated. And I subscribe to Mr. Khara's comment that definitely, if you, at the time of merger, to create the cultural equalization, the certain time of behavioral training modules are also implemented, that can facilitate in making the cultural integration also. And the technological challenges these days can be addressed quickly because earlier the same technologies were merged, so there was not a big of a challenge. But now the solutions are available. Even the different technologies are being used can be merged, and it can work together. These options are now available. And as regards the risk related to the sustenance of the business and the customer, I think that won't get impacted because we have already learned in the first round of it, merger that that can easily be handled because customers get a stronger bank to support their businesses.
Okay, you are sounding very confident. I keep asking myself, what happens if Network 18 and Times Group were asked to merge forcibly? I mean, it is mind-boggling for me and totally unacceptable. You know, people whom we have competed with. So I hope it is as easy as you say. Well, before I come to Mrs. Chandru to have the last word, let me ask Mr. Mundra, sir, can you recount what do you think we should concentrate on? You said that before we went into the break.
Okay. See, Lata, I think it is related to the question of risk. And when I mentioned risk, I was talking about something bigger, systemic risk, rather than the risk on individual banks' platform. To my mind, there are three big risks. I don't think we would be able to accommodate that discussion. But just let me flag out those risks. There are three risks. Number one, are we creating too big to fail institution? And whether, we would have the regulatory and supervisory bandwidth to oversee them. That is one thing. Second, in the process of creating, say, mega banks and all the banks which had the regional character, if they all are, merged or they don't exist anymore, are we excusing the local credit? Because, if you look at it, we have only 135 scheduled commercial banks, including private banks, public banks, and the foreign banks, and the cooperative banks and whatnot. See, America, China, European Union, everyone has close to 4,000 to 5,000 smaller banks or credit unions, which take care of that kind of thing. So whether that section of the society, because it will be a very strange situation if you create global banks and also expect them to still be equally active in agriculture and priority sector and the microfinance, then I think your bandwidth is getting distributed, not serving the purpose. But if they are completely pull out from these activities, who is there to fill that vacuum? That is the second largest question. The third question is, are we expecting these global banks, when they come into existence, to finance the kind of activities which was indicated? Exactly the risky area where we have seen the adverse fallout in the past. To my mind, a blue blood commercial bank should stay away from those areas.
Okay.
That is for someone else to do. So I think those are the largest questions which I was trying to say.
Fair point, sir.
So answer your question in a sentence, if any merger is being planned and designed, these are the sensitivities which must be taken into account.
Fair point, sir. Unfortunately, out of time, Mrs. Chandru, you have the last word. If you had a choice, what are the strengths you will look at? If you were sitting in Indian Bank and you had to choose a bank, what would you look for, the positives?
I would definitely look to see if the IT is possible to integrate. Yes, it is mentioned that the IT has evolved. So you can probably do, different platform also, but it will take much more resources, much more training, much more rewriting of the system and all that. The second and maybe equally important is the culture, the HR. How would people react? The third is, what is it we are planning? Like the other panel members said, are we going to achieve? Suppose Indian Bank is a very regional, it was a regional dominant bank. It is still in the south and now also in the north. But are we losing something in the process? Are we, especially language, culture of the local population? You have that focus in some banks.
That's right.
Should we retain that while also making them bigger? Maybe a similar bank, which also ensures the cost and efficiency parameters. Yeah.
This is an extremely rich discussion, and we will send the link to the DFS and to the government. I'm sure they're also contemplating and thinking about these issues, that there is a need for even localization, just as there is a need for globalization. That's one very big takeaway from this very elite panel. Thank you very much for starting the debate, sir. We will have more on this, on how India should consolidate, why it should consolidate, and what are the costs and benefits. Wrap up on this edition of Indianomics. Thanks much for watching.
Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the headlines that we're tracking for you this evening. Sensex and Nifty snap a 6-day winning streak. Nifty drops below 26,000. All sectoral indices end in the red. Mid-caps fare worse than the blue chips. Strong debut for edtech company PhysicsWallah. The stock lists at a 36% premium, gains a market capitalization of over 44,000 crore rupees on day one. The end of earnings season sparks a block deal rush. Promoters and strategic investors pair stake worth 8,800 crore rupees in Emphasis, Paytm, ITC, Emcure Pharma and Zinca Logistics. Capital market representatives meet Finance Minister Nirmala Sitharaman for pre-budget consultations, seek lower securities transaction tax on cash market trades, proposes buyback tax only on the profit component. Commerce Minister Piyush Goyal says there is no hiatus in the relationship between India and the US as trade talks continue. His statement comes a day after Trump's advisor Kevin Hassett said a trade deal with India is close. The ball gets rolling on PSU Bank consolidation. Finance Minister tells CNBC-TV18 that work on creating big world-class banks has begun. Veterans warn that any consolidation plan must focus on synergy, not just size. Also caution against creating banks that are too big to fail. Gross purple patch remains intact even 5 days after listing, captures a market capitalization of 1.2 lakh crore rupees, exceeds BSE's valuation, but will the rally continue? CNBC-TV18 analyzes the key metrics. Relief for builders, miners, steel industry. Supreme Court reverses its own judgment that projects violating requirement of prior environmental clearance could not be approved retrospectively, observes that the previous judgment would lead to demolition of public projects worth 20,000 crore rupees. Enforcement Directorate searches a dozen premises linked to real money gaming companies Winzo and Gamescraft. Sources claim authorities have unearthed crypto wallets used by promoters, indicated possible money laundering. Police deployed at fuel stations across Mumbai as CNG supply remains in short supply. Thousands of taxis and auto rickshaws stay off roads, crippling the transport across the city for the third day. Mahanagar resumes supply to some fuel stations. United Nations Security Council endorses US President Trump's plan for Gaza, which includes deploying an international force and a roadmap for a sovereign Palestinian state. But Hamas rejects the resolution, claiming it does not meet Palestinian demands. Those were the headlines that we're tracking for you this evening, but let's start with the market action of the day. Sensex and Nifty snapped a 6-day winning streak. Sensex lost nearly 300 points and the Nifty lost over 100 points to drop below that 26,000 mark. All sectoral indices ended in the red, with the Nifty Bank Index faring slightly better than the benchmarks. However, mid-caps underperformed the blue chips. Morgan Stanley expects Indian markets to regain momentum in 2026 with a bull case target of 107,000 for the Sensex by December 2026. In its latest outlook, the brokerage says the index could surge nearly 27% from current levels if macro and policy tailwinds hold. Even in its base case, assigned a 50% probability, the Sensex is seen at 95,000 by the end of 2026, implying a 13% upside. Gold prices fell for the fourth straight session as global markets reacted to a stronger dollar and fading hopes of an interest rate cut by the US Fed next month. Gold prices in India also reflected this weakness, with 24-carat gold prices at 12,343 rupees a gram. Commerce Minister Piyush Goyal has said that there's no hiatus in India's relationship with the United States. Speaking at the 22nd Indo-American Chamber of Commerce, Goyal said that a comprehensive partnership has many elements, all of which may not run at the same speed. This comes a day after White House economic advisor Kevin Hassett said that the US is very close to reaching a deal with India.
We're still quite hopeful, but it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
I don't believe there's any hiatus in the relationship. It continues to be very, very important, very strategic for both countries, the United States and India. परिवार में भी कभी-कभी थोड़ी बहुत नोक-झोंक तो होती रहती है And of course, negotiations is a process, and India as a nation has to secure its interests, has to secure the interests of our stakeholders, businesses.
EdTech platform PhysicsWallah made a strong debut on the Lal Street with its shares listing 36% higher than its IPO price. The company's post-issue market capitalization was close to 44,000 crore rupees. Speaking to CNBC-TV18, PhysicsWallah's co-founder Pratik Maheshwari said the firm hopes to grow at a rate of 30% and turn profitable in under 12 months.
We are on a mission, and that mission is more important, that access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years.
Let's now take a look at the slew of block deals on the Lal Street today. Emphasis promoter Blackstone is likely to have sold 9.5% equity in the company through block deals. The floor price was expected to be pegged at a little over 2,500 rupees per share. That's at a 4.4% discount to the stock's closing price yesterday. At this price, the total deal size amount is a little over 4,600 crore rupees. Shares of Paytm's parent company 197 Communications fell after 2% equity changed hands in a large block deal. The shares were exchanged at an average of 1,300 rupees per share, taking the total transaction value to 1,700 crore rupees. Sources told CNBC-TV18 that private equity funds, CEF3 Mauritius, CEF Partners and Elevation Capital were the sellers. Grow's stellar run continues even 5 days after its listing. The stock has gained every day since listing, soaring a whopping 94% from its issue price of 100 rupees. The company now has a market capitalization of 1.2 lakh crore rupees. The next major trigger for the stock will be its earnings, which is expected this Friday. The big question that we're asking is, are they ready for the long innings? Hormaz Patakia analyzes.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark every time someone hit a youth six. He used to say, going, going, gone. Now, however, this latest listing on the Lal Street has been growing and growing some more, at least in terms of stock price. Now, it's been 5 days since Grow listed and the stock has nearly doubled from its IPO price of $100. But how does this latest Lal Street entrant stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, Grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform and therefore it stacks well above the other two names. But when it comes to the average revenue per user or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio or the price to earnings growth for Grow, that comes up to 1.63. Now, that is based on a 37% profit CAGR and it's based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Grow was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The The management spoke to us earlier and they spoke about how they plan on growing the MTF book and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, grows ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Grow comes on Friday when it reports its quarterly results, which will be its first after its listing. Now, that's Grow for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Absolutely. Thank you so much for that, Harmaz. Now, the Mumbai Police's Economic Offences Wing will summon all accused in the alleged financial fraud at the Leelavati Kirtilal Mehta Medical Trust. Sources tell CNBC-TV18 that HDFC Bank MD and CEO Shashidhar Jagdishan will also be summoned. The complaint filed by the current trustees alleges that former trustees engaged in irregular financial practices amounting to 1,300 crore rupees. The Supreme Court has set aside its own verdict, which ruled that projects violating requirement of prior environmental clearance could not be approved retrospectively. In a 2:1 split verdict, the top court held that the earlier verdict would be damaging to public interest as it would lead to the demolition of public projects worth 20,000 crore rupees. The order comes as a major relief for realtors, miners and the Steel Authority of India. The Apex Court has agreed to hear a PIL seeking a court-monitored probe of an alleged banking fraud involving Reliance Communications. The court has sought reply from the Union Government, CBI, ED and Anil Ambani within 3 weeks. The plea filed by former Finance Secretary E.A.S. Sarma claims that over 40,000 crore rupees has been siphoned off. India's state-run green lender, IRDA, is planning to raise up to 3,000 crore rupees through a qualified institutional placement. Sources tell CNBC-TV18 that the issue would be priced at a discount of up to 5% to the current market price. This fresh fundraising move is part of IREDA's larger capital augmentation blueprint to meet the rising demand for clean energy. On to a CNBC-TV18 exclusive. Capital market representatives met Finance Minister Nirmala Sitharaman for pre-budget consultations. The industry has sought lower securities transaction tax on cash market trades and proposed buyback tax only on the profit component. Shivani Bajaj has more. Shivani, take us through the industry's proposals.
Well, yes, the Finance Minister held a pre-budget consultation with the market representatives here in the Kartavya Bhavan in New Delhi, and sources are indicating some significant asks from the industry. Now, top of the list is a push to reduce STT on cash market trades and keep it lower than derivatives, something industry players say is essential for improving the market depth. There was also a detailed discussion on boosting household participation in equities with a proposal to raise it from the current 5% to around 8%, signaling a big shift in how savings could be channelized into the capital markets. Now, another key recommendation by the industry participants was on buyback taxation, where companies want the tax to apply only on the profit portion instead of the entire buyback amount, a move they argue will encourage more efficient capital return. Now, sources also say that there is a call to align short-term dividend tax rates for domestic investors with NRIs. Right now, NRIs pay 20% in the short term, while domestic investors can be taxed as high as 42%. So all eyes are now on whether the Finance Ministry takes these suggestions on board as it shapes the upcoming budget. Back to you.
So Shivani there with the latest on that front. But on that note, it is time for us to head into a short break. Coming up next, police deployed at fuel stations across Mumbai as CNG supply remains in short supply. More details on that when we come back. Stay tuned. Welcome back to Business 360. Mumbai's public transport services are still in limbo as CNG remains in short supply for the third straight day after damage to a major gas pipeline. The management of Mahanagar Gas, which has an exclusive license for Mumbai, had told CNBC-TV18 that supply would be restored by noon. CNG pumps saw long queues for refueling. Commuters had a harrowing time as several cabs and auto rickshaws were off the roads. Andhra Pradesh is going all out to attract big-ticket investments as the newly returned Chandrababu Naidu-led government looks to reignite growth in the state. At the CII Partnership Summit in Visakhapatnam, the state unveiled a massive investment push, signing MOUs worth nearly 13.25 lakh crore rupees that could generate over 16 lakh jobs. From Reliance to Adani to Renew and Brookfield, India's biggest names are betting on Andhra. CNBC-TV18 Shilpa Ranipeta brings you this report from the summit.
All eyes are on Vizag, where the Andhra Pradesh government is making its boldest pitch yet to position the state as the next big destination for incoming capital, for innovation, for investments and for jobs. At the CII Partnership Summit in Visakhapatnam, where the newly returned government is pulling out all stops to reposition this state as the next big investment magnet. Chief Minister Chandrababu Naidu has set ambitious targets to sign MOUs and attract investments worth several lakh crore rupees, and his top team is here to ensure speed, stability and an administrative reset.
Andhra Pradesh is very interestingly very good ecosystem. As a matter of fact, just like India, Andhra Pradesh is a sleeping giant now. We are having 1,000 kilometers sea coast. On east coast, nobody is having this advantage. I want to build every 50 kilometers one port. We are going to launch private sector, space city, drone city, electronic city, aerospace city, and also semiconductor. You name anything, we want to work with that.
Well, 2047, we want Andhra Pradesh to be a $2.4 trillion economy. So Andhra currently is about $180 billion economy. That means we need to grow at 15% CAGR. So if this kind of growth rate has to be delivered, we have to fire across all sectors. And as a government, our target is $1 trillion worth of investment coming into the state of Andhra Pradesh.
The response has been strong. 82,000 crore rupees committed by Renew, 1 lakh crore rupee commitment from the Adani Group, 4,000 crore of investment from Reliance Industries, $12 billion from Brookfield, and these are just some of the over 400 MOUs that have been signed here at this summit.
The government has managed to give us the land allot land in 3 weeks' time. Right. So, like you mentioned, it is going to be one of the biggest beverage plants. In fact, we are setting up a food plant, food park, an integrated food park. Right. And we have also promised to set it up in a record time. We are planning commercialization in the first quarter next year itself. So in a very short span of time. So on total, all plants put together, the investment would be around 4,000 CR. Okay. And I think would generate something like 6,500 jobs.
The total announcement, of course, is for 82,000 crores. As you rightly said, we have one project that is already going on right now. In addition to that, you've signed for other MOUs today, amounting to, as you said, 60,000 crores more. Those are basically a green hydrogen hub that we intend to set up here for a couple of pumped hydro projects that we want to do here. It's for an ingot wafer solar manufacturing plant. And of course, you want to set up clean energy capacity as well.
Just to break up the investment side, we're looking at, like he said, overall over 1,000 crores of investment. In terms of aerospace and automotive, we're going to have two separate investments going parallelly. So we build both those businesses. Our automotive is not just automotive, but it comprises several other segments.
GMR, we're building the Bhogapuram airport over here. So the cargo facility that we're building, obviously it's a airport which is international airport. It will have all the requirements of an international airport, and we're looking at working very closely with the government. How do we really build Visakhapatnam into a multimodal hub.
Just signed an MOU with the government in Andhra Pradesh to build 500 megawatts of AI infrastructure-ready data centres. And the gateway of these data centres will be managed through an AI government data sovereignty company. And they will be the investors in the first phase of this project, which is $200 million in the first stage, and that's 100 megawatts of construction.
Execution is now key, and the government says it's ready to walk the talk. Chief Minister Chandrababu Naidu has promised that once a company commits an investment, it will be the state that will follow up and not necessarily the investor. The pitch here is clear. Big commitments will be followed by tight execution. And the target here is $500 billion in investments in 3 years and 50 lakh jobs being created in the state of Andhra Pradesh.
Karnataka wants to capitalize and grow on its position as India's IT hub to become the country's centre for artificial intelligence and deep tech. The state has gotten a 1,000 crore rupee war chest ready to get the party started. But CNBC-TV18's Meghna Sen reports that the game is not just about state support, but about providing an environment and infrastructure that can accelerate this next phase of growth.
Priyank Kharge, Karnataka's electronics, IT and biotechnology minister, has set himself some big targets, starting with making Karnataka a leader in the deep tech race with a focus on AI and space tech. This means a dedicated policy with a 10-year horizon. That's what he calls the deep tech decade.
The government of Karnataka is going to concentrate on the deep tech stack, that is AI, quantum, space tech. So in order to do that, we just can't have a policy just for a year or 2 years. So deep tech is a much more serious game, and we are ensuring that the next 10 years we have a complete focus on deep tech. And we are creating centers of excellence. We are creating common instrumentation facilities, and more importantly, we are also creating funds. So our new startup policy is for 518 crores, whereas the deep tech policy is close to around 600 crores. So we ourselves are having more than 1,000 crores to be funded for deep tech. It could be grants, it could be fund of funds, and also I have reached out to the private sector, VCs especially, to match the grant so that we'll be able to ensure the ecosystem accelerates across Karnataka at a faster pace.
Kharge expects startups to play a big role in this. Currently, only about 10% of startup funding in India is directed towards deep tech ventures. This is slated to change. The plan also involves building an ecosystem founded on a solid base of skill sets, which means reskilling and upskilling thousands in emerging technologies. When it comes to attracting and keeping private investment, Karnataka, especially Bengaluru, has one big hurdle: crumbling infrastructure. The problems go beyond bad roads, broken bridges and water scarcity. But the state government says it is taking corrective action. These include the addition of 95 kilometers of metro rail and 42 kilometers on a double-decker elevated platform and tunnel roads along the north-south and east-west corridors.
We are putting in more than 30,000-40,000 crores only in developing infrastructure, and this will not happen overnight. But have a look at other metros, other places, and then you will see that Bengaluru is far, far better. You can't even breathe in Delhi. You can't even tread into Mumbai when there is monsoons. But unfortunately, only Bangalore gets highlighted because people expect the government of Karnataka to solve the problems.
Kharge insists his plan will prevail and the state will emerge the world's most reliable hub for cutting-edge technologies. As Kharge puts it, the state only lacking headlines, not policies. In Bengaluru, Meghna Sen.
And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18. Hello and welcome to Startup Street. I'm Arundhati Ramnin, and with me as always is Shruti Mishra. These are the top headlines from the startup world.
2, 1.
Strong debut for edtech company Physics Wala. The stock lists at a 36% premium. Market capitalization crosses 44,000 crore rupees on day one.
Grow's purple patch remains intact even 5 days after listing, captures a market cap of 1.2 lakh crores, exceeds BSE's valuation. Next key trigger remains its earnings this Friday.
Shares of Paytm's parent company 197 Communications fell after 2% equity changed hands in a large block deal. Shares were exchanged at an average price of 1,300 rupees per share, taking the total transaction value to 1,700 crore rupees. Sources tell CNBC-TV18 that private equity funds CEF3 Mauritius, CEF Partners and Elevation Capital were the sellers.
Axerium Aerospace backs $3.5 million in seed funding led by Shastra VC and BNext. Investment will support Axerium in building advanced precision manufacturing capabilities, expanding engineering talent and establishing its first state-of-the-art production facility.
India's startup sector met Finance Minister Nirmala Sitharaman for pre-budget consultations, seeking stronger funding and policy support. Sources tell CNBC-TV18. Founders urged the government to boost the fund of funds, ease credit access for early-stage and women entrepreneurs, offer tax incentives and ramp up support for R&D, AI, sustainability and deep tech. They also called for better IP protection to help Indian startups scale globally. Those were the headlines that we're tracking for you this evening. But on what's brewing today, EdTech platform Physics Wala made a strong debut on Dalal Street, with its shares listing at a 36% premium to its IPO price. The company's post-issue market capitalization was close to 44,000 crore rupees. Speaking to CNBC-TV18, Physics Wala's co-founder Prateek Maheshwari said the firm hopes to grow at a rate of 30% and turn profitable in under 12 months.
We are on a mission. And that mission is more important, that access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years.
Continuing with the big news for the day, Finance Minister Nirmala Sitharaman, along with other senior finance ministry officials, held a meeting with the startup sector as part of pre-budget consultations. Sources told CNBC-TV18 that industry representatives highlighted the need for greater access to capital, tax incentives and regulatory reforms to support innovation and global expansion. Timsi Jaipuria joins us with more details. Timsi, take us through what the startup ecosystem wants from the budget.
Well, that's right. What we are given to understand from sources that the startup sector today met up with Finance Minister and other key senior officials of the Finance Ministry in a pre-budget consultation meeting. And the sector has sought enhanced access to credit. Also, they are looking for tax incentives and regulatory reforms to foster innovation and international growth. What we are given to understand further is that they asked for more funding for fund of funds, streamlined credit access, tax breaks for early stage companies. Also, they've sought government support via administrative reforms to help provide larger term loans, especially for first-time entrepreneurs, women, etc. Also, the sector sought and pitched for stronger framework for intellectual property protection, that is IP protection, and they've also sought more allocation of funds for R&D, innovation, AI, sustainability and deep tech. So these are some of the sectors, some of the exact segments that startups are actually pleading the government for, and let's see what happens finally in the union budget.
Thank you, Timsi, for those details. But moving on what's brewing, musician and entrepreneur Badshah launches Shelter 6, a vodka brand co-created with Cartel Bros, the innovators behind acclaimed whiskey labels, the Glen Walk and the Glen Journeys. Distilled 6 times in Russia, the brand has ambitious plans to capture a minimum 25% share of India's vodka market and achieve a valuation of 700 crore rupees within 3 years. Shelter 6 aims to redefine the business of luxury drinking in India. Currently present in Maharashtra, the brand aims to be in 6 countries in the next 6 months. Joining me now to discuss this further is Badshah, the co-founder of Shelter 6, and Moksh Sani, the co-founder of Cartel Brothers. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. Badshah, let me start with you. From music to fashion to entrepreneurship, right? What drives you to keep reinventing yourself, and how do you sort of decide which ventures truly carry your signature?
I think I'm a creative, and I love to create things, and I think the creativity seeps into everything that I do. It's pure love of finding that gap as an artist and as also a businessman in the market, and just the want. See, it all starts with wanting to have something great, and when you don't find that, you create that. So I think everything stems out of that. So that's the basic root cause of everything that I do. Like, even when I started creating music, I wanted to consume a certain kind of music because I am a music lover, and when I couldn't find it, I made it. So I think that want is the driving force.
Sure. And Shelter 6 sort of marks your entry into the premium spirits market, right? So what was that spark that got you interested in building this vodka brand?
I think vodka is a cool liquor, but I wanted to make it cooler. My whole objective is firstly, I have to create a world-class product, and I think world-class is just is probably a wrong benchmark. I think I have to make the best product ever that I can in a certain price bracket, right? And so that is what we, when I collaborated with Moksh, that is, my brief was simple. What is it that we can do, which is the best that we can do? It's not world class, it's not American standards, it's not Indian standards. It just has to be the best. And then, of course, cater it to the right people, and just to make sure that, the whole objective is if you don't have a bottle of Shelter on your table or back home in your bar, the party is not cool enough. Hence, Shelter 6, which is a 6 times distilled vodka. I don't think any other vodka in the country, at least, is 6 times distilled. And it's made in Russia. It's distilled in Russia. The water, the base of it all, comes from St. Petersburg, where we have the largest glacial lake. So we made sure that everything that we do it speaks for itself, so that no amount of buck that I'm doing, it doesn't matter. If you try it, you'll yeah. And it's a promise that you keep with yourself and your customers.
Absolutely. Moksh, let me bring you into this conversation. India's premium spirits market has sort of exploded in the last few years, right? With young consumers trading up for quality and experience. So how is Shelter 6 sort of positioned to tap into that shift?
I think it's exploding, but I think there's still a lot of space and a lot of gap for good products at a good price point, and with good awareness. So that's what we bring in. I mean, so we bring in a personality, the man behind, like someone like Badshah, making a good product in Russia, making sure that all the ingredients that you need are perfect, and bringing it at the right price. That's what we've always believed in at Cartel, and we continue doing so.
And Badshah, sort of coming back to you, if you could take me through, the audience that you want to cater to.
Who are we catering it to? I think we're catering it to everyone who's into good things, who appreciate greatness, who like good products, who like good liquor. It's young people, and it can be anyone. It's young people, it's old people. I'm not limiting it to youngsters. I know vodka is a young drink, but the definition of youth has changed. you can't define age brackets now. I mean, what a 30 years old or what a 20 years old was doing, let's say 15 years ago or 10 years ago, a 40 years old guy is doing the same thing right now. The dynamics of age have changed drastically. So we're not trying to box our audience. It's open to everyone. I mean, if you don't drink, amazing. But if you drink the right thing, drink the best thing out there.
All right, and the name Shelter 6 is intriguing, right? 6 times distilled, like you said, but also feels like it carries a deeper story. What does the name sort of represent to you?
It does, Arundhati, and people don't care about 6 times distilled. I mean, a regular drinker might not even give an F about it. It's just about a cool brand and a cool liquor. But Shelter is I think it symbolizes there's a warmth to the word, and over the years, Badshah has become sort of a brand who's like this cousin, big brother who starts the party, which encapsulates the word Shelter 6. So Shelter is like a place where you can. It's very warm, but yet it's got a rebellious sense to it.
And, Moksh, coming back to you, distribution and visibility are sort of key in the segment, right? So what's your rollout strategy for Shelter 6, and how soon before we see it in top bars, lounges and retail shelves across metros? What about the global expansion plan?
We fortunately already have a roadmap because, as you know, Patel already has 2 successful brands running currently. So for us, distribution is not really difficult, and that's something that comes to us naturally. But the main thing is the awareness of the brand, and hence Badshah brings the awareness. We bring in the quality, and we've blended together. We've tasted it. We've kind of and I think distribution-wise, we're pretty sorted. We're currently in Maharashtra. It'll be started from last 2 days, and we're currently in about 150 liquor stores plus in just Mumbai. I think by the month end, we'll be across Maharashtra. In the next quarter, North and South both. So India, I think we should be in the next 4 to 5 months, we'll be across India and then globally. Currently, we have secure orders from UAE. So after UAE, we are moving to the Asian side. We'll be looking at Singapore and Thailand, basically. So I think we've got a roadmap preset where we want to go in the next 6 months. We'll be visible in about 7 to 8 countries in the next 6 months.
And, before I let you go, Badshah, you're mixing things up in business. Are you also mixing a new sound in the studio? What's next for you on the music front?
Absolutely. I think Indian music itself is on this cusp of breaking into the global mainstream scene, and I am doing my bit. I've just come out with a collaboration with an Afro artist called Davido, who's huge, and I'm just trying to work on my sound. It's all about invention and reinvention. It's all about freshness. Music is सिर्फ music आता है मुझे और कुछ आता नहीं है. So whatever I am, whatever Badshah is today is because of the music, and that is the only thing that I know how to do and how to produce and how to create. So I'll keep on doing music. So even if you come to me after 2 months, there's going to be something new. So there's always something new. But right now you can go and check out Walla Walla with Davido. I'm working on a few collaborations. I'm working on a new album. I'm always working on music. I'm always working.
So you're always working. All right, Badshah and Moksh, thank you so much for taking time out and being here with us on Startup Street.
Well, moving on from the alco-bev market to the snacking market, India's 42,000 crore rupee snacking market is getting a protein-powered shake-up, and leading that charge is Super U, the new age protein snacking brand co-founded by Ranveer Singh and Nikunj Biyani. In just 1 year, Super U has raised to 150 crore rupees in ARR, sold 15 million units, and launched 4 category-first innovations. With a footprint across 4,500 stores and a fast-growing digital community, the brand now wants to become a 1,000 crore rupee powerhouse. To decode the growth, the innovation engine, and what's next for Super U, joining me today is its co-founder, Nikunj Biyani. Nikunj, welcome back to Startup Street. Now, Super U completes 1 year with 150 crore rupee ARR and 15 million plus units sold across protein, wafers and chips. Nikunj, what does this say about India's shift towards functional snacking, and what's driving your momentum in a crowded 42,000 crore rupee snacking market?
Yeah, thank you for having me. It's very special because exactly 1 year ago we did the same thing.
Yes.
And today is our first birthday. To answer your question, I think India and consumers have shown that they're ready for better. And if brands can innovate and create great product at great price with great distribution, consumers are willing to give you a shot, right? And if you can meet their expectations, then they're willing to make you a household name. So I think that's a clear trend that we've seen. And I think better snacking or healthier snacking is not a trend. It's something that's here to stay. So healthy is never going to become uncool.
Okay.
For lack of a better word.
You know, picking up from what you just said, you've from protein wafers to multigrain chips to fermented yeast, protein powders, 4 categories in a year. What's your innovation philosophy, Nikunj? And also, you've often said health and indulgence aren't opposites. So how do you design products that deliver both?
Yeah. So, so my product philosophy is same but different. And what that essentially means is that we're trying to not change habits for consumer, but trying to make their existing habit a little bit better. So for example, if you're used to eating a chip, we still want to give you something that has the same crunch, the same feel, the same mouthfeel of a chip, but just healthier, right? So we don't fry them, we bake them, but similar flavors and play around with the other ingredients. Innovation is at the core of everything we're doing. So we work the hardest at this, right?
Okay.
With a bunch of the partners that we have involved as well.
Sure. Nikunj, nearly 70% of India is protein deficient. Protein in India is still seen as gym first. How are you changing that narrative to make it everyday lifestyle first? And with Ranveer Singh, the actor, as co-founder, how has his involvement shaped Super U's distribution edge or consumer trust?
Yeah, so if you look at all our communication, we've been the opposite of protein only for gym bros, like we like to say. And I think that consumer has realized that. So today, if you could eat something that feels like a chocolate, but also has protein, then protein is not just for the gym bros. If you can eat something that feels like regular chips, but also has protein, then it's not just for the gym bros. So it's just the ease of the access of protein that I think has made a big difference.
Okay.
And you asked about Ranveer Singh. Look, he's been super involved from day zero, right? And he's kind of allowed us, he's the engine that's allowed us to reach so many people and communicate the message that we really want to and deliver that very articulately so that consumers could understand what we're trying to say and what our POV is.
All right. Super U now has a footprint across 4,500 plus retail outlets. Plus, you've got D2C and Q-commerce sales. Which channel is emerging as the real growth engine, Nikunj? And if you could take us through the revenue mix.
Yeah, so Q-commerce is one of the largest channels for us. It's about 50 to 55% of our total revenue, followed by our own website, which now because of protein powders, etc., is doing exceedingly well. And then followed by marketplaces like, let's say, Amazon and Flipkart and so on and so forth. And then obviously we have, like you mentioned, a retail network where we're present in more than about 5,500 stores now, and present in all your modern trade stores like Reliance and soon DMart and Wellness, Noble, etc., etc.
Okay, and you're targeting what, 1,000 crore rupees in the next 2 to 3 years with a big push into R&D. What are the next big product bets or white spaces that you're eyeing? And what makes you bullish in achieving that 1,000 crore rupee mark?
So not just 1,000 crores. The goal is to do 1,000 crores with 18% EBITDA. not just 1,000 crores. And I think the second thing is we're very confident on the kind of products we have in the pipeline. So we have some amazing products. I can't share too much right now because we're still a few months away. But within Super U, so in the snacking category and within Super U Pro. And the philosophy remains the same, that we want to make all these products easy to consume, pocket friendly, and just mad tasty, like we like to say.
All right. Finally, my last question. As you enter year 2, what is the biggest challenge for Super U? Is it innovation, speed, supply chain, category education, or competition as we see it rising in the space?
Yeah, I think competition is always going to be there, but it's not a challenge because competition helps us get better, work harder. And I think the biggest challenge, like the hallmark of a great FMCG company, is actually their back end, right? How efficient are they at everything they do at the back, whether that's demand planning and supply planning and warehouse management. I think that's, as we started as babies, as we continue to grow, one thing that we're very keen to excel at is the back end. So that's a big focus area for us, and we hope we keep getting better every day.
All right, Nikunj, on that note, it's time for me to wrap up our conversation. Many thanks for joining us on Startup Street, and wish you the very best.
Thank you so much. Pleasure to be here.
With that, it's time for us to head into a short break. But coming up, Axis Bank says it is a 360-degree service provider with its Bharat banking unit targeting MSME growth. We check in with the firm's president to find out more. Stay tuned.
Welcome back. You're watching Startup Street. Now, India's startup ecosystem is scaling faster than ever before, and it is reshaping consumer trends as we know them. But as the market evolves, founders are also looking at smarter capital, and banks that have traditionally stayed away from lending to this segment are also eyeing a piece of this pie. Today, we have Sanjeev Bhatia from Axis Bank joining us to tell us about why Axis Bank is betting big on the startup segment. Sanjeev, thanks very much for your time here. Firstly, you have your startup social you're hosting here. You're looking to build this network. What is the kind of opportunity you see, and why are you betting on this segment, which is a very small of the overall Axis Bank book that you have?
So first of all, thank you, Ritu, for having me in this segment. So we have this segment called New Economy Group, which is a specialized team looking only at startups. And the reason why we created this team was we didn't want the relative small size of this segment to get lost in some of the larger conglomerates that we bank with. And this is where you have professionals as founders, people like you and me who are running enterprises, and we wanted to talk their language and we wanted to provide solutions that are relevant to them. So just to give you a sense, of course, lending is there, it's part of the table. Today, our lending book would be on par with some of the largest venture debt providers in the country.
But what will be your niche? For instance, a lot of these founders, Series A and above, they have VCs chasing them. They often look at all kinds of structured debt as well in the runway, in the lead up to the IPO. Where does Axis Bank fit in? Because traditionally, we've not really seen banks being big lenders to the sector. And what is your edge, especially in Tier 2, Tier 3 cities where smaller startups are sprouting?
So I think in a nutshell, we are a 360-degree service provider.
So that differentiates you from the
VCs? And the execution of that vision, right? So it's one thing having that vision, but it's another thing how do you execute it. So for example, we have a Bharat Banking Unit, which is targeting the MSMEs, the rural ecosystem. So when an agri-tech is approaching that ecosystem, we can tag in the banking products like Kisan credit cards, like warehouse receipt financing, which goes with it. So we supplement the business model of the startup. We help them grow in their business model. And in the process, whatever banking facilities they want to consume, we would provide. Apart from lending, as you know, these startups, they do fundraisers, right? They will not, if suppose somebody has done 1,000 crore fundraise today, they will not burn it immediately overnight. So they
One hopes not.
Yes, right. So and so therefore, this money needs to be parked somewhere. The investors, the folks who are sitting on their boards, they have views on the banks where this money can get deployed. It has to be a safe instrument, right? So as a Tier 1 private sector bank with a very solid backing, we become a natural choice for them to place this surplus with us, right?
In terms of a pipeline, I mean, what kind of funding are you looking to do, say, over the next year or so? Could you give us a sense of what sectors you're looking at too?
See, this book for us is growing anywhere between 20 to 25%, right? So I think that should give you a sense as to how quickly we are growing. But from a sectoral perspective, I think fintech and e-commerce have been our areas of strength. For some of the leading e-commerce players, we provide 40% of cash on delivery. The currency notes that get collected, they go through our pipes, right? If you look at our, we are a listed company, you can look at our investor presentation. Our market share in NEFT processing is around 40% and above. Our IMPS market share is again 40% and above. That's because all these fintechs are pumping their IMPS and NEFT volumes through us, which is giving us this market share, right? So that bit will also continue to increase. We are very confident that we will continue to have a very commanding market share over there.
Sanjeev, leave us with a closing thought for the startup community that is watching the big themes you're going to be excited about. Come 2026, we're nearing the end of the year. You're looking at a 20-25% kind of a growth for the book. Fintech and e-commerce are your preferred sectors, but big themes that you're going to be excited about.
No, we're very excited about deep tech, manufacturing. We have, some very pioneering business models coming up, like ethereal machines, like Pixel, and those are the companies that we want to get in and be at the cutting edge of innovation.
Longevity sponsoring companies?
Yes, absolutely. And I think I just want to leave one single overriding thought with your viewers, that anything that the startups may need from the financial ecosystem, Axis is here to provide that, whether it's lending, whether it's helping you collect money from your customers, whether helping you do payroll, keeping your employees satisfied, and charting the path to an IPO. Everything is there on the table, and we have specialists who make this happen for you.
That's for them. And the return on capital for you?
I can tell you our business gives the highest return on risk capital within the bank. Not just wholesale, across the bank, it is the highest return on equity business. Right?
All right. On that note, Sanjeev, it's been a pleasure speaking with you. Thank you so much for your time. It's
Thank you, Ritu,
really
for having
nice
me.
to have you here. Okay, on that note, we're going to wrap up this edition of Startup Street. Thanks very much for tuning in. Goodbye, and thanks for watching.
and welcome to On the Record with me, Shireen Bhan. We're here to talk about a journey that's been steady, exciting and in many ways disruptive. 40 years on for Kotak Mahindra Bank. Joining us now to talk about the road ahead is Uday Kotak and Ashok Vaswani. Gentlemen, congratulations and many thanks for joining us. Mr. Kotak, I want to start with you. Starting with 30 lakh rupees, a small NBFC, 40 years on to where you find yourself at Kotak Mahindra Bank. What is the most gratifying aspect of this journey so far? But more importantly, what's the ambition from here?
I'm excited about the fact that India has transformed so dramatically in this 40 years. But when I look at the journey from here and the future for India, the financial sector and Kotak, I'm even more excited. So this is just a point in time in history. 40 years may seem a long time. For me, it seems like yesterday. And it is exhilarating in terms of the opportunity ahead.
But, speaking of the opportunity ahead, what is it that you foresee in terms of where you believe the bank will be, in terms of pecking order, in terms of your loan book, in terms of your global aspiration? Where do you foresee the bank? I'll come to the execution aspect with Ashok in just a second.
I would love to see Kotak as one of the leading global scale financial institutions from India. And that's my dream. It's not about just how large we are, but also how good we are and how we are keeping pace with the times and demonstrating that we can break the glass.
Well, break the glass ceiling, Ashok Vaswani. It falls on your lap then and your table in order for you to deliver on that promise. But, he says 40 years feels like yesterday. It's almost 2 years for you here at Kotak Mahindra Bank. Feels like yesterday?
Oh, it definitely does. It's been an incredible ride. And I'm so happy I made the decision to come back to India and take on this assignment. That was a good decision.
A good decision, but to build on what we just heard there from Mr. Kotak, world class, but also world size. So let's talk about the ambition in terms of how much you intend to grow your loan book, what you believe it could potentially look like over the next few years. Today at about 5 lakh crores, Axis Bank just above you at almost 11 lakh crores. What is the aspiration on that front?
So, Shireen, actually it is about an ambition on profitability, which is obviously linked to balance sheet, but essentially profitability. How, as a group, can we become maybe the third largest, most profitable group, financial services group in the country amongst the private sector kind of banks, and more importantly, really serve our customers and become, the kind of most valued franchise from that perspective. And that's the journey that we're on.
Well, speaking of that journey, and you just unveiled this One Kotak sort of campaign and One Kotak ambition that you've put out there as far as customers are concerned. How should investors read that from an unlock and a monetization perspective? Could we potentially look at some of your businesses being unlocked, being monetized in the near future, or is that not a consideration at this point in time?
So, Shireen, think about it. Kotak is the broadest financial conglomerate in the country. There's nothing that's like the Kotak financial conglomerate. This conglomerate allows us to take advantage of whatever changes may be happening in the financial services sector, whether it's in saver to investor, whether it's corporates going from bank balance sheets to corporate bonds, capital markets. We can serve these customers across the group. That is the power of this group. This also allows us to identify customer segments that we want to really go after, bring together products and services relevant to them, and build out propositions. And where we've done that, we've got really, really good results, whether it's with the private bank, our recently launched Solitaire program, our 811 program, the SME segment, or institutional clients for that matter. That is the power of Kotak, of being able to bring together and meet the holistic needs of the customer. That embedded value is growing. Why would we monetize it early?
No, early, but at some point you will? Or intend to?
Right now, very early. We'll see what the future holds. But frankly, I honestly don't see the value of monetizing it right away.
at this point in time? I ask you this also in the context of what you're seeing happening around you. I mean, things like the Grow listing, an 8-year-old company listing in the manner in which it does that kind of tempt you to look at what's happening in the market?
Not at all. The embedded value of Kotak is growing at a compounded rate. And there really is no reason for us to kind of list at this point in time.
So no departure from that at this. Mr.
Departure.
Kotak, an overarching view on this aspect, because I'm sure that this is something that you discuss and debate very often at the board level.
Shireen, I think the financial intermediation space is undergoing transformation. One is thanks to technology. Second is the move from saver to investor. Third is the flexibility across the intermediation space, which is expected by customers. And therefore, to create inherent disparities between different segments is inconsistent with the best way to serve customers. Therefore, think about yourself. You may be a saver and an investor in one. Therefore, as a financial intermediary, we cannot think about ourselves as a bank or asset management company or as a broker. We got to think about wherever the intermediation moves, the group is there to serve you. And therefore, if that is the basis, the theme about One Kotak is an extremely powerful theme where the newcomers rightly start with a vertical. But ultimately, the challenge is how do you serve your customer in totality?
You know, you talked about the fact that the banking space is seeing a big disruption and a transformation, and you believe it's going to get harder for banks to be able to get deposits. It's going to be harder for banks to grow in the manner in which we've traditionally seen them grow. So that creates a challenging environment for you. But, you know, on the back of that, what do you believe is the big challenge for banks in general, but also for Kotak Mahindra Bank in specific?
I think that's where the challenge is essentially twofold. One, how do you keep up pace with technology? Because larger deposits are going to market instruments or market platforms like mutual funds. And therefore, the ticket sizes of deposits which remain with banks will reduce. However, there is a large population which needs to have basic payment and banking facilities. The cost to serve in the physical world is much higher. Therefore, how do you create a business model which is commercially viable at the keeping in mind the reality that large ticket lazy money which remain with banks in current and savings accounts will not remain or will not remain to the same extent. Second, how do you capture these flows which are still within the financial system within a group? So combine this, I think, an integrated financial conglomerate with a focus on excellence in the verticals is the key to the future.
Well, speaking of that being the key to the future, and I'm using his words that banking has been lazy, how do you unlazy banking?
I think he talked about lazy deposits and inertia. And that's true, right? With technology, inertia is going to go. And that's exactly the point, right? You need, first of all, the ability to serve a customer in different places. So in this case, it would be, let's say, the bank, as well as, let's say, Kotak Securities or Kotak Asset Management. But even within the bank, Shireen, it's about what are the customer segments that you're targeting and how do you provide products for that? So go back to what Uday said about a vast majority of people who are looking to get basic banking facilities, our ability to acquire them digitally, service them digitally. With our 811 proposition, that's exactly what we're doing, right? And that builds granularity of deposits. That gives us the confidence that we will be able to grow our deposit base to meet our growth needs on the asset side.
But you said that profitability is going to be the focus area for you. So given what we've seen as far as the last quarter is concerned, do you believe that we're perhaps, as far as profitability is concerned, do you feel like you've peaked, or is there something that you can operate by way of levers to do better in terms of profitability? And is the era of 5% kind of NIMs behind us as well?
No, so Shireen, I think we should, looking at one quarter may not be the best way to look at it. Longer term trend, right? I think from here on, NIMs will stabilize and even potentially improve unless there's another rate cut, which is a completely different conversation. I think in our case, You're going to see, like we said at the quarterly results, credit costs kind of moderate. And we are spending a lot of time and effort automating and digitizing Kotak, which is allowing us to get really efficient on costs, right? So I'm optimistic that we can kind of grow our profitability. Last year, capital markets was a very, very good, we're having a great year. This year, not such a great year. But that again is the beauty of Kotak, right? We fly on 4 engines. Sometimes 3 engines are flying, sometimes 2. The day 4 fly, it's really, really soaring.
When do you believe or anticipate all 4 could fly together?
It's a function of the macroeconomic environment as well. But I really believe we're very well poised to have all of them kind of kick in together and move fast ahead.
The macros, Mr. Kotak, and you said we'll get into the rate cut debate later. So let's get into the rate cut debate. Record low inflation. What's the expectation? Rate cut as early as December or sometime early next year?
Shireen, look at the rate cut syndrome in 2 parts. One is the short term, okay, which has an impact on short term money markets and interest rates in the short term economy. But long-term rates are more sticky. Therefore, you've seen 100 basis points drop in rates at the short end, but at the long end, the drop is barely 20-25 basis points. So the marketplace actually is saying something. The yield curve, which was flat, is now getting to be positive. And therefore, markets believe that these rate cuts are not going to lead to sustained low rates for the long term. Otherwise, they would reflect in the 10-year bond.
But do you anticipate a rate cut in December or early next year?
I believe between December and February, there's a fair chance of 1 rate cut.
25 basis?
Yes, that's what I feel.
Mr. Vaswani?
Look, honestly, it's up to the RBI and how data plays up. The data definitely is skewing more towards another rate cut. But let's see how it kind of plays out.
You know, speaking of factors that are impacting sentiment as well as impacting flows, I want to address what we're seeing happen in the banking sector. It certainly seems to be the flavor of the season as far as FDI is concerned. Large deals happening from IDFC Bank to RBL to Yes Bank to Federal Bank as well. Mr. Kotak, what do you make of this? I know you tweeted saying that it's a welcome sign, but you hope that it will create a level playing field. What do you make of this?
I think, Shireen, first you have to distinguish between private equity and strategic. So out of the deals you mentioned, there are 2 strategic deals.
Yes.
One is SMBC into Yes Bank, and the second is Emirates NBD into RBL. That is very different from
BlackRock
and Warburg into IDFC and Federal Bank. Those are financial investors at the core. Maybe they are playing for some strategic to buy those banks in the future. So who knows? They're in the business of producing financial returns. The strategics are taking a long-term commitment into India. And frankly, I would welcome it as long as we have consistent rules for similar financial institutions across the board.
Because at this point in time, it's case by case, but the fact that we're now looking at the regulator giving the go-ahead to control deals, what does that signal as far as the willingness of the authorities on this front?
I'm glad that India is feeling more secure and bold. We saw competition come into investment banks where majority was allowed in early 2000s. You saw it in securities, asset management, life insurance. So banking was the last bastion, and I'm glad that the policymakers are confident that Indian financial sector can withstand the onslaught of global FDI and still maintain the ability to remain truly Indian and become world class.
You know, a strategic investor in Kotak Mahindra Bank, you don't need it, but you know, is that even up for consideration?
Last time I saw the cap table, that strategic investor was Uday Kotak.
so not on the table.
Certainly not.
But how do you see it from an operations point of view? Two strategic deals being done, private equity interest. You know, what does it change anything in the marketplace?
It's actually quite fascinating, Shirin. On the one hand, yes, we talk about, you know, obviously, you know, there's kind of covered the deals that have happened. On the flip side, we've had foreigners also leave. I mean, Citi sold its consumer franchise. Deutsche has put up its business for sale. We bought the Standard Chartered personal loan portfolio. And so it's just an interesting kind of phenomena. Let's see how it kind of plays out. You know, honestly, competition is welcome. It keeps us on our toes. And we just got to get smarter, better, and move faster ahead. And that's our goal.
Smarter, better, bigger. And I'll ask you this in the context of IDBI Bank, which, you know, it's been 10 years now since ING Vysya. The question is whether you still have the appetite to do IDBI Bank. I know you continue to be in the frame, Mr. Vaswani. So let me direct that question to you first before I get a broad picture there from Mr. Kotak. IDBI Bank, how serious is Kotak's ambition there?
So, Shirin, we've had this conversation before. Look, we look at every single opportunity there is. Obviously, our goal is to transform for scale. So we look at it. If it makes strategic sense, then we go to the valuation and see whether financially it kind of makes sense. And if it makes sense, yes. Also, you got to say that we are on a certain path, right? We're on a certain path, transformation, or they talked about the changes in financial services, how technology is changing a whole bunch of stuff. And therefore, what is our priorities? What is our management mandate? Where are we going to really spend our time? Is it going to be spending time in integrating HR and payroll systems, or is it going to be really transforming the business? So those we kind of take into balance and see whether you know, a thing makes sense. Obviously, we can't comment on a particular kind of
Okay,
asset.
allow me to read between the lines of what you just said, that given the fact that, as Mr. Kotak pointed out, we're in an environment where banking itself is being disrupted on account of technology, would it make strategic sense to go in for an IDBI Bank, which is largely a legacy bank, and at the same time, you know, forget the valuations, does it even make strategic sense for you, given your aspiration of wanting to be digital first today?
Your words, not mine.
So would that be a fair assumption?
I kind of laid out the case, right, Shirin? We look at every single thing. We see how, and we take a very, very balanced and a thoughtful view.
You know, you haven't shied away from inorganic deals in the past, Mr. Kotak. As you look at 40 years, or forget 40 years, 10 years on, and I know you can't talk specifically about IDBI Bank, but what is the inorganic aspiration? How crucial do you believe that is going to be for the future?
You have to look at your model in terms of what makes sense. And I'll give you our out of the box. Not many people recognize that in 2014, we took a 15% stake in MCX. At a valuation of 450 crores. for 15%. MCX market cap today is 50,000 crores. And we've just been patient investors. We strategically took a call that financial infrastructure space makes sense. We also took a bet on K-Fintech, which is in the registrar space for mutual funds and others. And we took a 10% stake there, or 9.99. So then we took stake in NSDL. We have taken stake in Clearing Corporation of India, because we are great believers in long-term financial infrastructure space. For we are always ready to think differently. And when I look at the future, I look at the future very different from what we have seen today.
So a bank may not necessarily be part of the future.
I'm not saying that. I'm saying that we will build the future on the basis of what makes sense. And since you're talking about the bank, you have the two greatest examples in front of us. One, the largest market cap company in Brazil is a bank with no branches, new bank, $80 billion market cap. Largest market cap company in Brazil, not in finance. Revolut is now larger market cap than Barclays Bank. It's in front of our eyes. And I'm not saying we are going there, but for us to ignore all these trends would be an issue which we have to keep in mind, especially when the money is moving from saver to investor. Therefore, larger pools will move as money in motion. Therefore, we've got to capture it as flows rather than necessarily as being storage. And in that context, what are we going to do to build a future which is going to distinguish us from the rest of the crowd with 25 banks?
You know, the trends that Mr. Kotak spoke about then, obviously, as he pointed out, we're not talking about no branches in the foreseeable future, at least here in India. But what does that mean in terms of your branch expansion plans and eventually what it means as far as your operating costs are concerned? Because that, as you pointed out, is a key priority for you.
Sure. So, Shirin, just one more point. When we talk about inorganic, I'm just going back to our previous conversation. Look, we're not only looking at the bank, we're looking at other parts of our business as well. We're super excited about asset management. We like our life insurance business. We like our broking business. So opportunities, you know, they could well come up there. And, you know, we would look at them like we would look at any other opportunity in the bank. Coming to your question around...
You mean from a strategic investor perspective?
Or acquisition, you know. Coming to your branch question, again, this is something that we've kind of talked about pretty consistently. We really believe that if we can blanket out the top 70 to 75 cities of India, that's adequate branch coverage. That would take us to roughly 3,500 branches, give or take, but in that ballpark. And that's the kind of rhythm we are on. And if we can get there in the next 3-4 years, I think we'll be in very good shape. Of course, we'll have sales offices, of course, we'll have digital, but we think that's an appropriate network for a bank branch, and I think that'll hold us well.
And keep what Ashok said is very important, because some of the larger banks are now in 10,000 plus branches or around. Or getting close.
Or getting close, and you're saying that you don't have any plans to go down that road. But Mr. Kotak, coming back to what you said about the landscape changing and the environment changing as far as banking is concerned, I want to link this to the transformation from a nation of savers to a nation of investors, and what you believe that opens up by way of opportunities for the sector generally, but also more importantly for the bank and for your subsidiaries specifically.
Think about, I think you have to really focus on verticals. Just think about brokerage industry. The dominance which Zerodha and Grow have shown. They were nowhere. How are financial institutions preparing themselves for being disrupted? The challenge for Indian banking is most banks have assumed that they're in a comfortable moat with regulatory protection. In my view, the underlying business model is undergoing a structural and transformational change by the customer. The customer is changing the rules of the game. The customer will decide what to buy, what to do, where to put the money. And we as financial intermediaries, rather than calling ourselves bank and getting into a comfort zone, we as financial intermediaries have to go with the flows.
You know, you said that Zerodha, Grow were nowhere, and look at where they are today, not just in terms of size, but also in terms of profitability. Is that a disappointment, not just for you specifically, but also for large incumbents?
I think the challenge for incumbents is complacency of success. And it needs to be shaken. It's true for a company. It is probably true for countries. The biggest danger for countries is to believe that we have arrived. There's somebody out there who's eating our lunch. And a sense of paranoia is the core to building sustainable business.
What are you most paranoid about today, and how do you play catch up in an environment where your lunch quite literally is being eaten by somebody else?
No, Shirin, I'm completely in this camp of only the paranoid can survive. And I think Uday and I share that quite a bit. Now, having said that, I think there are waves that kind of come along. And if you catch a right wave, you can ride to the top. And I really believe technology is something that could provide a great wave, which allows us to kind of jump forward. And if we get that right, that could be a very big deal. I'm very proud of the fact of what the team did during the technology embargo. We just didn't, solve the problem. We really went and said, we're going to get this right. And continued investment there and continued focus there to help us drive that as a competitive advantage. Not easy to do, obviously, but it's something that we're very focused on. And I think that is something that could be a wave that we could catch.
So, you said that you're proud of what the team managed to do during the tech embargo, which was, of course, put in place by the RBI and the restrictions that you had to deal with. But as you see the future today, and whether it's AI or it's agents and so on and so forth, where do you believe you are? Are you on the first chapter of this AI book, or do you believe that you've been able to move further?
It's such uncharted territory.
That you don't know which chapter.
It's impossible to say chapter 1 or chapter 10. But are we spending a lot of time thinking about it and actually putting stuff into place and starting to see what's possible? Yes, definitely so.
Mr. Kotak, how do you believe that this is going to play itself out for the bank, but also for the sector over the next few years?
I think AI reminds me of two historical realities. One was railroads in the US, and the second is electricity companies. If you think about electricity companies, electricity invention changed the world. And it's a reality today. We take it for granted, but when it happened, it was a game-changing event for the world. But almost none of the original electricity companies survive today. Therefore, AI is game-changing. But how to play AI is still early days. The question for our country and each institution is, are we going to be the original creators of AI the way the US and China seem to be doing? I think we have missed that original bus. It's gone to these two countries. We are more likely to be users. But who knows, ultimately, smart usage with adoption may turn out to be a better model than having to spend trillions of dollars in building the base. So you do not know the future, but in any case, the first round of the battle has gone to US and China.
But I want to link that to the point that you made about being early investors in the India financial infrastructure story, because you believe that that was in fact going to be beneficial for you as a financial institution. As you look at this AI wave and what it could potentially do, could that be the next leg of investments that you choose to make?
I think the bank will have to do what makes sense for it within the technology and financial infrastructure and financial services area. Therefore, I'm sure the bank will look at within the financial services space if things make sense. However, broader AI investment is not necessarily like angel or venture, is not necessarily that bank has done a lot of till date.
You want to stick to your knitting, right?
Yeah.
What we understand is financial services. That's why the investments that they made in MCX, KFIN, all those ones you talked about have paid off so rich. We understand that. We know that India is on a growth path. These will grow. Now, AI, yes, if there are applications of AI which we see which are going to be game-changing, we would be very interested. But are we going to invest in, semiconductor companies, or are we going to invest in production of GPUs? I doubt very much we'll do that.
The only place we may play with that is through our alternate asset funds. And that is a separate business. It's a fund management business. The bank puts in some sponsor capital in that, but it's run as a separate business. And there the opportunity space is much wider.
Speaking of the opportunities, and I want to understand what signals you're getting from the market at this point in time. You, of course, have flagged the pain in the CV space as well as the MFI space. Does that continue to be a significant cause for concern, or do you believe that perhaps the worst is past?
So, Shane, clearly in MFI, the worst is past, at least for us. We had always said Q1 would be the peak. Q1 turned out to the peak. Our Q2 results demonstrated that, and it's fast coming back to kind of normal. For about 2 quarters, we've said that the CV space is going through a bit of stress, particularly in the retail CV space. That kind of continues. I think that whole industry has gone through quite a significant transformation, and we'll see how that plays out. But that's very consistent with the commentary with our Q2 results.
But, we've seen the GST cuts coming in. The hope and the expectation is that this will now be a sustained pull on consumption. What are you seeing on that front at this point in time, and how confident do you feel about that?
Yeah. So, Shirin, when they made the announcements right to the time that the cuts happened,
there was a pullback.
There was significant pullback. And therefore, in the last week of September, we saw a major surge. Now, some of it was because of the cuts, some of it was pent-up demand kind of flow through. We've seen October hold quite nicely. And frankly, across consumer expenditure, across OEMs, across into the rural economy as well. I suspect that because of the pent-up demand, there'll be some leveling off. But generally speaking, should this lead to further consumption? I would say yes.
The demand environment here, domestic as well as what we're seeing happen as far as the global environment is concerned, and that uncertainty continues. How do you see both the global and the local mix playing out for the larger economy, but also for the markets, Mr. Kotak?
My sense on the macro is rural is doing quite well. In urban, the higher end urban is doing well. The lower end urban may be under some pressure. On the global side, of course, there is a Mr. Tariff world. So we have to see how that plays out. I would like to believe that India, which seems to be in a penalty box with the United States, with a net exports historically, which has been net $50 billion plus, how much of that gets impacted and how much of the impact on GDP, and when does the embargo on India with reference to tariffs linked to Russia go away. But if I look at the US tariffs at some point of time, sooner rather than later, I hope, come back to between 15 and 20% range, India can withstand that quite easily. 50 is tough, but between 15 and 20, if we settle, I think we have a pretty comfortable zone. And there is also a very big positive, Shireen, on the structure of our current account. Thanks to sustained low oil and oil's mix in the total GDP dropping, India is in a much better structural current account position and a current account deficit which is much more easily financeable. So that's a big plus for the Indian economy on a structural and sustained basis.
But what was all of this going to mean, Mr. Kotak, as far as the currency is concerned? And we've seen, a significant move on the rupee. Now, assuming that the deal goes through and we do have an agreement and we see a reduction in tariffs, which way do you see the rupee headed? And if we don't see that scenario playing out, what do you believe the currency is likely to see?
Current account, I don't think is going to be the main pressure on the rupee. The rupee is determined much more by FDI and FPI flows. And that is where, if you look at March 25, net FDI into India was almost zero. And there has been a boost to FDI now. And I'm glad that even banking is now seeing positive FDI. Keep in mind, private equity is classified in the FDI bucket.
Yeah.
So some of these efforts by the government to encourage FDI or allowing 100% in insurance are efforts to ensure that India's net FDI remains positive. But against that, private equity for old investments, and including some strategics, have divested at high values. The Koreans realize the value of their Indian asset is more than probably their own asset in their own country.
Yeah.
So that's great value creation by India for them. And as strategics also, they are monetizing partly. So is private equity. And till date, for whatever reason, FPI flows have been negative. Therefore, the valuation of the currency is less driven by trade, more driven by investment flows.
You talked about investment flows, and we've seen FPIs make a little bit of a comeback into the markets. What do you believe is holding them back? Is it a valuation issue primarily, or is it also to do with structural issues like capital gains? And again, we're sort of seeing this clamor build up that's the next reform that the government should act on.
Shireen, I'm sure a lot of portfolio investors are asking the question. There are easy parts in the world to make returns today. The most obvious one is United States. And we discussed this. US market cap is close to 70% of global market cap. And the kind of returns US markets have given over 5 years and sustained, and with earnings coming to the large companies, are pretty enormous. Therefore, there is a fundamental view of the shrinking size of emerging markets in global market cap. And that, along with valuations, which are reasonably rich, make global investors ask the question, is the best place to put money in India or Korea?
So do you think capital gains move will actually help? Do you believe it's needed?
In my view, the issue really is back to what's a fair play. Okay, you have a situation where on interest earnings, Indian taxpayers are paying 39%. And on capital gains, Indian taxpayers are paying 12.5%, or with surcharge and everything, 15%. And then you have global investors who have been brought at parity at 12.5%. So how do you draw a sense of equilibrium across the different classes of taxpayers? What is fair play? And even today, one of the main reasons why you're seeing so much Indian investor flow into equities is clearly tax arbitrage between capital gains and interest income.
Well, you know, speaking of this tax arbitrage as well as the flows that we've seen from the domestic market, domestic savers into the equity markets, Mr. Vaswani, I mean, you know, what does that tell you about the opportunities that it opens up for the bank going forward? I mean, you know, who would have thought that we would have seen so many of these new age companies list back-to-back listings, and while one can quibble and argue about valuations, still being able to do well. What do you make of that, and what does it signal now as far as priorities for the bank are concerned?
No, Shrin, this goes back to where we started, right? The fact that Kotak is this financial conglomerate, which allows me to deal with a customer, whether he wants to kind of, you know, be a saver or he wants to be an investor. And nobody is just a saver or an investor, but the ability to just do it seamlessly across everything that he wants to do or she wants to do is a huge advantage. And the fact that we own all these companies, all the subsidiaries, 100%, means there's no misalignment of interest. There's no misalignment of where we want to go.
For Grow was Kotak. And we are very proud about what they've done. Therefore, our investment banking franchise is rocking.
It's rocking. Well, you know, speaking of investment banking rocking for you, Mr. Kotak, what do you weigh in on the debate as far as valuations are concerned? And we've seen, you know, we've seen outrage on one end and explanation on the other. What do you make of the valuations of some of these listings?
I think at the end of the day, the institutional investors have a significant role in driving valuations. And it depends on the quality of institutional investors. Therefore, if you look at the quality of the books in some of these, they're world class. And best of investors have found value and a clearing price at which they have bought. And this is not like a situation where we saw a couple of years ago or 3 years ago. We've not seen any debacles of the scale and size in the listing market like 3 years ago, when stocks were valued at the issue at 100 and opened 80% lower. We have not seen any of those debacles. There may be a flexibility or movement in valuation which is 5, 10, 15% up and down, but that's markets. But broadly, I think the investors have become much better at evaluating and giving a pushback to get fair valuation and clearing price in the market.
So, you know, coming back to the bank in specific, what would you believe are your biggest challenges or risks today? Cost of funds, I imagine, is right up there, perhaps amongst the top challenges, top risks. What would the others be? And how much is the cost of funds hurting you today?
No, actually, Shane, if you look at it from an industry perspective, at least private banks, we are pretty much at the best, among the best from a cost of funds perspective. I think the key is, look, at the end of the day, deposits are our raw material, and getting raw material at a cheap price obviously helps you grow easier on the asset side. So it's something that we pay a lot of attention to. And how do we kind of continuously grow it through different segments of customers, through different products, different businesses. So for example, we have a domestic custody business, and we are unique, and you know, it's a fantastic business for us that generates a lot of current accounts. So how do you take a whole range of activities to keep that cost of funds low and continue to grow? Obviously, we're always careful of the risk environment. I mean, Uday talked a little bit about it, right, as to what's happening with the urban consumer, particularly at the lower end, and how do we deal with that. And then technology, Shirin. This is something which, like I said, has got the ability to really get us to differentiate and get us to become far more efficient, far more productive. And so it's really, at one level, a very exciting place to be. Because we can make a big difference.
Well, you know, how do you see the metrics change for the banking business, given the transformations that you spoke of and the metrics that the market has gotten used to? How should this recalibration now be evaluated in light of some of these shifting sands that you spoke of, Mr. Kotak?
I genuinely believe it's going to be very tough for 35, 40, 50 banks to all make a play in the future. It's going to be fewer financial institutions was smart enough to manage the intermediation business, and banks which realize that they are in the financial institution business and not a God-given right of being a bank.
And so in this context, you believe that the government's attempt or move towards the next round of PSB consolidation is not just necessary, it's warranted?
I think the government is moving in the right direction to get fewer, bigger public sector banks. I completely agree with that as a strategy. Having said that, I am on even a more fundamental issue. How do you ensure banks have a mindset which is service for financial intermediation and not live off regulatory moat alone? And that's the mindset change and breakthrough which is required.
And frankly, that's a trend that's played out globally. I mean, whether you look at it in the US, look at it in the UK, this financial consolidation that Uday is kind of talking about is a trend that's kind of played out in every market in the world.
So if this regulatory moat is no longer the moat that you can depend on, what do you do now in order to solidify the operating model to ensure that you can actually continue to deliver on the kind of promise that you believe you should?
There's only one answer to that, and that is tremendous amounts of focus on the customer, right? I've always said this, if you get it right by the customer, everything else will fall into place. So identifying which customer segments you're going after and making sure you're really delivering for that customer is absolutely critical.
You know, it's a 3-year tenure that you were appointed 2 years ago. You're going to be completing 2 years in January, Mr. Vaswani. How much of what you had as part of your mandate have you been able to do? What is pending on that bucket list?
No, I think, Shirin, there is, I would best call it work in progress. It takes time to kind of make these kind of shifts, right? But I'm convinced that this is the right way to go. And I think we've made meaningful kind of progress. Shifting the mindset is the hardest part. And if once you get that done, execution gets easier, it kind of speeds up. And I think we've kind of really moved on that direction.
So the aspiration to be in the top 3, grow the book, where would success lie on that front for you? What's the target that you're working with?
No, I mean, those targets have not changed. Everything remains the same. It's a mix of organic, inorganic, and I've spelled out what our framework from there is. We definitely want to be one of the survivors in a financial consolidation kind of place, thrive in that kind of environment, and that's how we see things play out.
Survive and thrive. In order to thrive, what do you believe will need to change? What will you have to accelerate? The pace of change, of course, is also going to be a key part of the strategy. What do you believe you will need to disrupt very quickly, not just to survive, but to thrive?
I think, Shirin, the signals for that come from outside us. Signals for that come out from customers. Signals for that come out of the changing times. And therefore, I would strongly believe the power of being able to dream a changing world, the power of being strong professional entrepreneurs with an entrepreneurial spirit, but keeping core professionalism. Looking at these changing times is the key. If you look at the history of Kotak over the last 40 years, we were never the biggest, but we were always that firm which saw opportunity and moved quickly and got it to reasonable size. I think that alertness, agility, and an entrepreneurial mindset, while being focused on the principles of governance, is what can make Kotak happen. And you don't need to, in a consolidation game, you don't need to be a winner in everything. You need to be a winner in a few areas big time, which drives you to have the power in other areas as well.
So where do you believe you have that advantage today that you intend to double down on?
I think one of the things I'm very proud about is brand Kotak. I was very happy recently to see some data shown to me about how the spontaneous awareness of Kotak, the brand, has dramatically and decisively moved up across. And it's the brand Kotak across all the classes, bank, our mutual fund, our investment bank, our securities. So I believe there is a huge power of brand, there's power of trust, and along with that, ability to move at speed. And I am a great believer of a dominance of a new world driven by digital and AI. And the physical world may be remaining, just as print media remains, television media remains, but under serious threat, both of them, and moving much more digital. And people haven't figured out the revenue model to sustain in the context of the Googles and the Facebooks from an advertising point of view. But you can see the disruption in industry.
Yes, we certainly can see the disruption across industries.
Of course. So I think financial services is no different.
So, you know, from the conglomerate's perspective, are there any spaces where you believe you don't exist today that you see the opportunity to get into either by yourself or in partnership with someone?
So frankly, Shirin, in financial services, I can't think of another product which we frankly don't manufacture. I don't think the massive growth is really going to come from horizontal expansion. I think it's going to come from depth. But I do think that there is a big trend that we are paying a lot of attention to, which is, I think what got Kotak here is really the deregulation. And every time there was deregulation, Uday was able to take a bunch of really, really smart people, throw them at it, and build out a new business. Insurance, AMC, investment banking, whatever it was. I think the next stage of real growth is going to come from the internationalization of the Indian economy and the linkage of the Indian economy into the global economy. And I think it's fascinating to see how India is charting its own path on this internationalization kind of move. Very, very different from the way Asia did it, very different from what happened in Latin America, very different from what happened in Europe. And I think that's an area which I think we can take advantage of.
You know, just building on that, the regulator's decision to ease up on M&A financing, etc., does it build on the thesis that you just spoke of?
Absolutely. So many of these cases, acquisition financing, look at the way UPI is going, Shirin. You know, the ability to use Indian rupee UPI transaction in Dubai or Singapore, right, is fascinating. Look at the interest. Uday is right. A lot of people obviously are thinking of the US and US markets. But with everything going on there, there is a segment of the Indian diaspora who's now saying, you know what, maybe having one leg in India is not such a bad idea, right? Who is like the best position to take advantage of these opportunities, right? And I think those trends will play out, at least in my view, over the next couple of years.
Are you as bullish as Mr. Vaswani on this internationalization story? Because while we're talking about maybe the diaspora looking at putting or keeping one foot here in India, we're also looking at Indian residents keeping one foot outside.
That's part of the internationalization journey as well.
If you're financial services, you play the flows both ways.
So is this going to be a big...
I think it's an opportunity for sure. And we should be in the middle of it. I think we are very well positioned. We have presence in Dubai, London, Singapore, New York, and we are right there. And we have great relationships, of course, with major global institutions who have faith in us, trust in us. There's a very big alternates business, which is also we are focused on building. And that's all part of internationalization. And this two-way flow could also be a big opportunity. If you look at the success of many of the global banks, look at the US banks or the Japanese bank, they followed their customers.
And that's what you intend to do as well. But, you know, Mr. Kotak, let me end by asking you, we started by talking about what the last 40 years have meant for you. But, you know, as you look at the next 40 years, 2065, you know, you said that you want to build an institution that outlives you. What is it that you believe, you know, you would like to see this institution stand for over the next 40 years?
I think first, very proud global scale institution from India. In many ways, it has the potential to be a symbol of what India can be. And I'll give you the examples across the world. Look at Toyota. It's a symbol for Japan. Look at BYD or a TikTok. It's a symbol for China. Look at Apple. It's a symbol for US. Look at JP Morgan. It's a symbol of what US can do. Look at NVIDIA. It's larger, it's $5 trillion, larger than Indian economy. If I have to dream, I want Indian players not only to be proudly holding the India brand up their sleeve, but to create global scale and quality, which will make India proud.
Well, speaking of unleashing that aspiration and the animal spirits, Mr. Vaswani, finally, do you get a sense that we're seeing a revival in that in the marketplace? Do you see the entrepreneurial zest and zeal being unleashed?
Actually, I really see that. It is the India I've come back to so different from the India I left, and that I think is the big difference. The courage, the ambition, the zest, and frankly, that's what's led to our entire brand campaign. That we want to be the bank for that aspirational Indian, and if somebody has, hosla hai to ho jayega.
Hosla hai to ho jayega. Leave me with one short-term target that you believe ho jayega.
Shireen, you're looking to pin me on a particular number?
Absolutely, of course. I mean, I'm sitting in a bank. You have to leave me with a number.
What number can I give you?
There has to be a number that's top of your dashboard.
No, look, for me, and this is consistent with every interview that we've done, right? That getting it right by customer, right? Customers, the 4 segments that we've kind of narrowed on, and how we kind of accelerate that is the number 1 priority.
Will you leave me with a number?
I won't leave with you a number. I'll leave you with a dream, and I just left you with a dream. A financial institution which will make India proud.
Well, gentlemen, we wish you the very best of luck with fulfilling that dream, and congratulations once again on turning 40. 40 is the new 20, as you said, Mr. Kotak. So look forward to...
I said 2 things. I said 60 is the new 40, 40 is the new 20.
It's the new 20. Amen to that, and we look forward to speaking with the 2 of you again. But thank you very much for joining us here today, and congratulations again.
Thank you. Thank you.
Well, with that, it is time for us to wrap up this edition of On the Record. From all of us here on the team, goodbye, and many thanks for watching.
Hello and welcome to India Business Hour. I'm Arundhati Ramanan, and here are the headlines that we're tracking for you this evening. The AI sell-off continues to drag global markets. Stocks decline across Europe and US for the 4th straight day. Bitcoin and gold prices also see a sharp decline. Commerce Minister Piyush Goyal says there is no hiatus in the relationship between India and the US as trade talks continue. His statement comes a day after Trump's advisor Kevin Hassett said a trade deal with India is close.
2, 1.
Strong debut for edtech company PhysicsWallah. The stock lists at a 36% premium. Market capitalization crosses 44,000 crore rupees on day one. Grow's purple patch remains intact. Stock rallies 88% in 5 days after listing, captures a market cap of 1.2 lakh crore rupees, exceeds BSE's valuation. But will the rally continue? CNBC-TV18 analyzes the key metrics. The end of earnings season sparks a block deal rush. Promoters and strategic investors pair stake worth 8,800 crore rupees in Mphasis, Paytm, ITC, Emcure Pharma and Zinca Logistics. The ball gets rolling on PSU Bank consolidation. Finance Minister tells CNBC-TV18 that work on creating big, world-class banks has begun. Veterans warn that any consolidation plan must focus on synergy, not just size. Also caution against creating banks that are too big to fail. Relief for builders, miners, steel industry. Supreme Court oversees its own judgment that projects violating requirement of prior environmental clearance could not be approved retrospectively. Observes that the previous judgment would lead to demolition of public projects worth 20,000 crore rupees. Police deployed at fuel stations across Mumbai as CNG remains in short supply. Thousands of taxis and auto rickshaws stay off roads, crippling the transport system across the city for the third day. Mahanagar Gas resumed supply to some fuel stations. United Nations Security Council endorses US President Trump's plan for Gaza, which includes deploying an international force and a roadmap for a sovereign Palestinian state. But Hamas rejects the resolution, claiming it does not meet Palestinian demands. An outage at online infra provider Cloudflare disrupts parts of the internet. Multiple online services, including ChatGPT and other AI chatbots, along with social media platforms like X, go offline for several users. Those were the headlines that we're tracking for you this evening, but let's start with a snapshot of the global markets. The AI sell-off continues on Wall Street. Stocks are down across the US and Europe for the fourth straight day, largely due to tech stocks. Concerns over valuation of companies that specialize in artificial intelligence continues to linger among investors, and there is no place to hide. Bitcoin prices briefly dropped below $90,000. Gold prices are also down over 1%. Moving on to Dalal Street, Sensex and Nifty snapped a 6-day winning streak. Sensex lost nearly 300 points and the Nifty lost over 100 points to drop below the 26,000 mark. All sectoral indices ended in the red, with Nifty Bank Index faring slightly better than the benchmarks, but mid-caps underperformed the blue chips. Morgan Stanley expects Indian markets to regain momentum in 2026 with a bull case target of 107,000 for the Sensex by December 2026. In its latest outlook, the brokerage says the index could surge nearly 27% from current levels if macro and policy tailwinds hold. Even in its base case, assigned a 50% probability, the Sensex is seen at 95,000 by end of 2026, implying a 13% upside. Commerce Minister Piyush Goyal has said that there's no hiatus in India's relationship with the United States. Speaking at the 22nd Indo-American Chamber of Commerce, Goyal said that a comprehensive partnership has many elements, all of which may not run at the same speed. This comes a day after White House economic advisor Kevin Hassett said that the U.S. is very close to reaching a deal with India.
We're still quite hopeful, but it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
I don't believe there's any hiatus in the relationship. It continues to be very, very important, very strategic for both countries, the United States and India. परिवार में भी कभी-कभी थोड़ी बहुत नोक-झोंक तो होती रहती है. And of course, negotiations is a process, and India as a nation has to secure its interests, has to secure the interests of our stakeholders, businesses.
The end of earnings season sparked a block deal rush on Dalal Street today. Promoters and strategic investors pair stake worth 8,800 crore rupees in 5 companies. Emphasis promoter Blackstone is likely to have sold 9.5% equity worth 4,600 crore rupees in the company through block deals. Meanwhile, 2% equity worth 1,700 crore rupees in Paytm's parent company, 197 Communications, changed hands in a large block deal. EdTech platform PhysicsWallah made a strong debut on Dalal Street with its shares listing at a 36% premium than its IPO price. The company's post-issue market capitalization was close to 44,000 crore rupees. Speaking to CNBC-TV18, PhysicsWallah's co-founder Prateek Maheshwari said the firm hopes to grow at a rate of 30% and turn profitable in under 12 months.
We are on a mission, and that mission is more important, that access is more important, there will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years.
Grow's stellar run continues even 5 days after its listing. The stock has gained every day since listing, soaring a whopping 94% from its issue price of 100 rupees. The company now has a market capitalization of 1.2 lakh crore rupees. The next major trigger for the stock will be its earnings, which is expected this Friday. The big question that we're asking is, are they ready for the long innings? Hormaz Patakia analyzes.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark every time someone hit a youth six. He used to say, going, going, gone. Now, however, this latest listing on Dalal Street has been growing and growing some more, at least in terms of stock price. Now, it's been 5 days since Grow listed, and the stock has nearly doubled from its IPO price of $100. But how does this latest Dalal Street entrant stack up when it compared to some of its listed and unlisted peers? Now, on the revenue front, Grow's top line is lower than its peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform, and therefore it stacks well above the other two names. But when it comes to the average revenue per user, or the ARPU, that is well below Angel One and even lower compared to Zerodha, whose ARPU is well above 10,000 rupees. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow between 25 to 30% and costs to grow between 15 to 20% over the next few years. Basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees, its margins from 63% could grow up to 80%, and its net profit from the 1,800 crores currently could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming that Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio, or the price to earnings growth for Grow, that comes up to 1.63. Now, that is based on a 37% profit CAGR, and it's based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it compares to its value. Now, at the highest point of the day, Grow was valued at well over 1.1 lakh crore rupees, which is nearly the sum total of Angel One, Motilal Oswal and Nuvama Wealth put together. The management spoke to us earlier, and they spoke about how they plan on growing the MTF book, and that the MTF business will become bigger than the personal loan business going forward. Now, with a healthy growth guidance, expansion to newer businesses, Grow's ARPUs may subsequently also see some uptick as clients in different verticals begin to increase. Now, whether that can help the company catch up with peers, only time will tell. But for now, the next major growth trigger for Grow comes on Friday, when it reports its quarterly results, which will be its first after its listing. Now, that's Grow for you. It has made quite some noise in the first few days of being a public company, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Absolutely, Hormaz. Many thanks for those details. On to a CNBC-TV18 exclusive. Capital market representatives met Finance Minister Nirmala Sitharaman for pre-budget consultations. The industry has sought lower securities transaction tax on cash market trades. Market players also proposed that buyback tax be levied only on the profit component and not the total payout. India's state-run green lender, IREDA, is planning to raise up to 3,000 crore rupees through a qualified institutional placement. Sources tell CNBC-TV18 that the issue could be priced at a discount of up to 5% to the current market price. This fresh fundraising move is part of IREDA's larger capital augmentation blueprint to meet the rising demand for clean energy. The Apex Court has agreed to hear a PIL seeking a court-monitored probe of an alleged banking fraud involving Reliance Communications. The court has sought reply from the Union Government, CBI, ED and Anil Ambani within 3 weeks. The plea filed by former Finance Secretary EAS Sarma claims that over 40,000 crore rupees have been siphoned off. The Supreme Court has set aside its own verdict, which ruled that projects violating requirement of prior environmental clearance could not be approved retrospectively. The order comes as a major relief for realtors, miners and the Steel Authority of India. Ashmit Kumar is here with all of those details. Ashmit, take us through the details of this order.
Well, big relief coming in for realtors, for miners, for steel companies. The Supreme Court clarifying its own judgment, reversing its own judgment, saying that now ex post facto environmental clearances are permissible in law. This became a huge bone of contention in May. As recently as May, the Supreme Court said in May that as far as retrospective environmental clearances are concerned, it is simply not permissible. The Supreme Court said it's not happy with projects getting constructed and then after construction seeking environmental clearance. Now that position is reversed. The Supreme Court now says that, look, if we agree with the May order, if the May judgment, what will happen is that as many as 20,000 crore rupees worth of public projects will have to be demolished. This will affect public interest. This will affect public money. And that's the rationale court has given for reversing its own position. Now, speaking of reversals, we've seen many of them in recent cases, in marquee cases. Take Bhushan Power and Steel IBC process, for example. The Supreme Court first sent the company into liquidation. Then a review petition was filed. The Supreme Court reversed its stance, saying that fine, we'll allow the JSW Steel resolution plan. Take, for example, the AGR issue. For very many years, the Supreme Court stood firm, saying that we will not allow for any relief to be granted to telecom companies. Then Vodafone Idea filed a petition in 2025. Supreme Court reversed its position, saying that now the DoT has the flexibility to grant relief to Vodafone Idea. Take also the example of the emotive issue of stray dog population management. Earlier, the Supreme Court said all of them are to be rounded up. Then the Supreme Court said none of them are to be rounded up. Then the Supreme Court has clarified now once again that all of them are to be rounded up from public places. So again, back and forth flip-flops by the Apex Court. But nonetheless, in this case, the Supreme Court reversing its position and granting its nod for ex post facto environmental clearances.
Right, Ashmit. Thank you so much for those details. Now, PSU Bank stocks have been buzzing in trade for the third straight day amid talks of another round of consolidation. Finance Minister Nirmala Sitharaman has confirmed that work has begun on creating bigger, world-class banks in India. Her comments at the SBI conclave have reignited questions on which banks could be consolidated, whether the system is ready, and what lessons can be drawn from the last mega merger in 2020. Ritu Singh brings you voices from 4 veteran bankers who have lived through and led major bank amalgamations.
India may be headed towards its next major banking shakeup, and this time it's not just speculation. Speaking at the SBI conclave,